really moving post the regular trade. Treasury yields dropped as inflation fears are receding. There's hope of a resolution in the war, hence crude prices have come off, hence the hope that inflation will be benign. You had the 10-year at 4.35%. Crude prices, and that's the important indicator, isn't it? They've plummeted after reports that US-Iran are closing in on a deal. Look at the Brent at 101. Yesterday, at some point, it was below $100 mark. And then, of course, with Iran statements, etc., it peaked up a little. But you're still seeing a huge slide down from $116, $117 a mark to now 101. So that's continuing. Here's the latest what Donald Trump has said on the ongoing conflict and negotiations with Iran. He's saying we've had very good talks with Tehran. Listen in.
They want to make a deal badly, and we'll see if we get there. If we get there, they can't have nuclear weapons. It's very simple. But what's not to submit? So they had a Navy with 159 ships, and now every ship is blown to pieces and lying at the bottom of the water. They had an Air Force, lots of planes, and they don't have any planes. They don't have any anti-aircraft. They don't have any radar left. Their missiles are mostly decimated. They have some. They have probably 18, 19%, but not a lot by comparison to what they had. And their leaders are all dead. So I think we won. We've had very good talks over the last 24 hours, and it's very possible that we'll make a deal. The stock market's higher now than when we started this war. And I thought oil prices would go to $200, $250. It's at $100 now. And I think you're surprised, and I'm surprised. But even if it went to 200, it would have been worth it. I understand that. We had just set a record, 50,000 on the Dow, 7,000 on the S&P, a record. And I said, I hate to do this, but we have to make an excursion down to Iran because we can't let them have a nuclear weapon.
Okay, so it's pretty much the same. Nothing has majorly shifted. The only sense is that maybe Iran is willing to let go on some points on their nuclear enrichment, as they call it. Pull up Asian markets, and the Nikkei, at least in opening trade, was hitting all-time highs, continues 5.5% up on the Nikkei. So, there are two ways of looking at this. Either you look at statements from leaders and try to understand if they mean what they say, or you look at screens, which is just pure market movements. The Nikkei 5.5% up, Hang Seng 1.5%, and Shanghai also up in the green. The implied open for India is fairly muted in relative terms, though, because some of that was already priced in closing yesterday. We had first mover advantage in that sense to react during closing trade. So just about 1% up on that. Jeff Dennis joining in. He's independent emerging markets commentator. Jeff, very good morning to you. Are you hopeful, as the screen shows?
I don't know. It's very hard to tell. It's just another big swing of the oil price and tremendous volatility, and we've been here before. Now, obviously, the word we're getting is that we may well be close to some sort of a deal between Iran and the US, and of course, that would be very good news. And this, of course, is why the oil price has fallen sharply in the last 36 hours, 24 hours, I guess, and why markets have done well. But at the same time, Trump is saying that if Iran doesn't agree to the terms that the US has put forward, they'll start bombing again. So this is a cycle of volatility that we've been through many times. And I think what you can say is, one, the Brent oil price has now been trading within a pretty wide trading range for a period of time, as opposed to hitting new highs. Markets are doing very well. S&P at a record high tonight. That's partly because earnings are very good and the US economy looks okay. So if this is really peace, and we don't know if it is, I think this is good for markets, but we've got to see follow through here in terms of getting some sort of proper ceasefire deal which can end this war.
So, Jeff, if we're talking about timelines, and good morning from where we're at, good to speak to you after a while. If you're thinking about ideal case or best case scenario timelines for things to go through without too much damage that we will have to carry through for the rest of the financial year, what is on your mind at this juncture, knowing what you know now?
Well, I think obviously some sense in the next few days that Iran is indeed going to agree to these terms, which the US has proposed. And I think that would obviously be seen as very good news, because then that would reduce the risk of more war, reduce the risk of more bombing, and clearly markets would react well to that. But even in that scenario, we need to know what's going to happen to the Strait of Hormuz. And much smarter people about the price of oil are saying it's going to take a very long time, several months, before oil is flowing properly through the Strait of Hormuz and oil supplies and jet fuel supplies, etc., are restored to normal. So even in that situation, I think it'll take a while for oil prices to start to come down anywhere near where they were, $60 a barrel for Brent, prior to all of this or this terrible war that began several weeks ago. So I think a quick resolution would be good. But that still doesn't mean that oil prices are going to go down sharply from here, because we're going to get global oil supplies flowing again.
Jeff, good evening to you, Neeraj here. You've through your career, you've seen various cycles wherein money flows and ebbs from various asset classes and various geographies. The last 18 or 24 odd months, we've seen select markets, India, for example, do precious little, while some of the others have really ripped through. Korea up 200%, Japan doing well, but India not so. And the recent data statistics suggest that the TSMC's weightage in the emerging market index, MSCI EM, is 240, 250 basis points more than India. Does this sound stretched? Will this reverse, or is this time different?
I think it's so unusual, this situation, that it's hard to say it's different, because I'm not sure we've been here before, frankly. But the key here is, of course, the AI trade. And while we're all worrying about the price of oil in the Iran war, what really matters, I think, to the US market going forward, assuming we don't go back to a very, very nasty war, is going to be what happens to earnings of the AI stocks, what happens to earnings of the technology stocks generally. Now, there's nothing wrong, as far as I'm concerned, with TSMC being 12, 13% of the index. Taiwan's up 45% in dollars. Korea's up 72%. But then Brazil is doing well. Mexico is doing well as well. So, yes, those two big markets have dominated. But on the other hand, you're still seeing quite a number of other markets doing quite well. So I don't think this is particularly out of the ordinary. What's probably out of the ordinary, frankly, is the way in which the US market has been dominated by AI and by technology generally. And while that continues to be the case, I think probably Korea and Taiwan will continue to move. What India really needs, and I've talked about this many times before, is to get oil prices sharply lower, not just where they are now, and to get some sort of trigger for FII money to return. And as I've said, I'm not sure what that trigger is at this particular point.
We're trying to find it as well. Thanks so much, Jeff, for taking the time. Pleasure speaking with you.
Thank you.
All right, let's talk about what happened in trade yesterday, and what an exciting close it was. It was that Axios report on the potential end to the Iran-US war that caused the market to surge. The Nifty 50 gaining over 180 points in just half an hour towards the end of trade, and gains were led by banks, which have underperformed recently. The Nifty Bank surging as much as 2.6% and closing very close to the high point of the day, also aided by the government's ECLGS 5.0 announcement, which, as you know, and as we discussed yesterday, has some support that is provided to MSMEs. 4 of the 5 largest Nifty 50 contributors were banks: HDFC Bank, ICICI Bank, SBI, and Axis Bank, contributing over 190 points between themselves. And on the flip side, you had Reliance Industries, that was the big laggard, and it proved to be that drag on the benchmark because it dropped over 1.5%. The broader markets outperformed yet again. You had the Midcap index that gained 1.7%, the small cap index up as much as 1.8% at the end. In fact, the Midcap index is now less than or about 100 points away from fresh record highs. And who thought that you would say that just as early as maybe 30 days back. And most sectors gained, led by the PSU banks as well as Realty and Nifty Bank. So that mid-cap index stat is quite something, isn't it?
Yeah, we had a couple of, yesterday a couple of fund managers who had come to us end of March, beginning April, and had these conversations wherein they had said that, we believe that mid-caps and small caps are undervalued and will see a recovery. They sent me those YouTube clippings of the NDTV Profit YouTube handle that, hey, this is aging well. And I'm like, yeah, you got it right. So some people managed, Alex. But yeah, precious little, I'm sure. Okay, I mean, if yesterday the sentiment was that risk off until crude cools off, I think this crude cooling off, though marginally higher from the lows, does provide some ammo. Maybe that ammo was provided yesterday, and the point remains whether it will last through the day today or no. But for now, the going seems to be okay because crude has cooled off a little bit. That is a bit of a easy indicator to make. And I think you're seeing that in that people wanting to play the crude reversal moves. Yesterday there were Excel sheets floating around about stocks which have corrected the most till now. Figure out what are the crude related plays and see if they will reverse. Now you're seeing chemicals, for example, start to make that move, right? Look at the price movements, for example. Aarti recovered after the results walloping that it got the previous day. We've seen stocks like Deepak Nitrite, for example, do well yesterday. Styrenic Solutions did well. I mean, large, mid, small, that chemical space is starting to look interesting and is buzzing because of any commodity chemical benefiting out of trade sentiment coming back or crude cooling off. So keep that in mind. Transformer sector, though, we mentioned this yesterday, looking weak and may see a further corrective move because there are multiple concerns. I mean, why are transformer stocks correcting? Because there are multiple concerns on transformer oil prices and exports slowdown from the Middle East. So the margins get impacted, order inflow gets impacted, order execution gets impacted. So there are multiple concerns there. Let's see if this reverses anytime soon. So that is one space that you might want to be a bit careful of, even if there seems to be a rally in the offing, as long as crude prices stay lower. Yep, this is what I was talking about, just the kind of moves that we're seeing in some of these stocks, not very encouraging.
But I would say that there are extremes on both ends. While there are some which have not been very encouraging, there are some which have seen a complete blowout depending on results in terms of specific stocks. Not transformers. I'm saying non-transformers. Generally in the mid-cap space. The mid-cap space and the small-cap space has actually sizzled this entire results season. Not specifically on transformers, but I think the bigger one is what really is going to happen with the war. That overshadows everything, which is why that's on top of the factors that I'm listing out today. So this is the latest from Axios, where they're saying that Trump is optimistic as US awaits Iran response to the peace framework. So this report says that the US and Iran have had good talks over the last 24 hours. He's expressed confidence that a deal is possible in the coming days. He's also this report quotes US officials saying they expect a response from Tehran in the next 20 to 48 hours. We are not far, but there is no deal yet, they are saying. That means you are still in this situation where you have to wait and watch what happens. The surge yesterday, though, of course, was fueled by reports of a potential US-Iran MOU, which cooled global crude oil prices and eased geopolitical tensions. And you saw that in that intraday chart very clearly, where you had that big bump up in the last 45 minutes to an hour of trade. But technical analysts are now identifying 24,300 as a new immediate support for the Nifty. A sustained move could open the path towards 24,500. If crude remains below the $100 per barrel mark, the domestic buy on dip sentiment is likely to persist. So key resistance levels 24,365. 24,450, 24,590. Support levels 24,200, 24,100, 24,000. Both the Nifty and the Bank Nifty have cleared those critical hurdles for now. The Bank Nifty closed above its 20-day EMA for the first time in nearly 2 weeks. Key resistance there at 56,120, 56,470, 57,040. Supports at 54,980, 54,630, 54,060. So those are some of the levels that you need to watch out for. But let me go across to Puneet, as we do every morning, for the F&O setup.
Well, thank you for that. As you rightly highlighted, the last hour of the trading session just completely changed a lot of things that we're going to say this morning, because yesterday we highlighted how sluggish that 24,300 mark was. And even though we are above those levels at this point of time, given yesterday's closing, a lot of those geopolitical factors that were just discussed determine this 24,300 level as a near-term support. So we are above that, but unless there is certainty on what's happening in this very uncertain world, there could be some more. There could be a couple of times where we breach this level yet again and need some more historical evidence at this point of time for a support level of 24,300 that we've not discussed over the last 6 to 8 weeks. In terms of the Bank Nifty, also very sluggish yesterday, but then with the last hour move, now above 55,900 levels. Now 55,500 on the Bank Nifty continues to be a key level that we continue to monitor at this point of time. Similar to the Nifty, a little sluggish at this point of time, but hopefully continues to be a level that the market takes some support at. Also in cash markets, yet again a selling by foreign investors, but the index long, which we highlighted, was at 11.5% yesterday, inched up to 13.4. Now, it's not a material increase because we've seen yet again selling in the cash market by foreign investors, but probably the last hour pump up increasing in longs, and that's visible in the open interest distribution levels that we track every morning as well. So the 24,000 level has actually seen an increase in the calls, which is the red column. Puts also has seen a slight inch up, while 24,500 has now reached its highest level that we've seen in this May series at this point of time, with the out of money call option being preferred at this point of time. But stock specific action also very, very active yesterday. We saw L&T short being built up on the back of results. Amber Enterprises at an all-time high, just before the results show up in the week or so. And it's an important one for this AC maker because we've not had a good start with Havels amongst others. Coforge, yet again a strong result, so you saw longs being built up. And for the open interest losers specifically, you've seen Exide post results saw some cool off, and post the conference call actually saw some cool off, but then the open interest thins out. So very important, crucial day for the markets today. Some results have been a hit, some have been a miss, but individual stock specific action in the broader markets continue to take precedence at this point of time.
Okay, thank you for that, Puneet. Let's talk about individual stocks. Bajaj Auto will be in focus today. Results were out. Good set of numbers. Revenue up 32% for the quarter at 16,006 crores. EBITDA was up 35.6%. Margins also remained steady at 20.8% versus 20.2%. This is a year-on-year comparison I'm talking about. Net profit was up 34% at 2,746 crores. Here's the important bit, right? The board has approved a buyback of 5,633 crore rupees worth of shares at 12,000 rupees per share. Look at what the current market price is. So that's going to have some excitement one way or the other. Final dividend is declared at 150 rupees per share. And here's an important noteworthy update from the company. Rakesh Sharma is now appointed as joint MD from the 1st of June. So he's taking also more on hands-on control. Here's what Citi is talking about it. They've maintained their sell call, but they have hiked their target price to 9,300. That's below the current trading price. They're saying the Q4 numbers are slightly above estimates. Outlook is positive on exports and domestic demand is moderating. Elevated commodity costs could impact margins as well. Valuations provide little room for error. So that becomes important. But the Bajaj Auto CFO, Dinesh Thapar, replied to our query during the call, the investor call, talking about how they acted quickly as global shipping disruptions began to emerge. Listen in.
Exports actually showed a very strong growth. So you spoke about the shipping routes and how you rerouted. Is it something that those measures are visible in April, or did you just have a lower base in the last year? And this is the second question on what's your expectations for FY27 if you're giving any as of now.
A lot of our cargoes now are going via the Cape of Good Hope as opposed to going via the Red or Hormuz as it was in the past, right? So we've worked with shipping lines. We've introduced new shipping lines on routes we've rerouted. We worked very closely with distributors to respond with agility. And I think we've had a very good April. And of course, I think we're looking to be able to see how we can secure May on similar lines as well, because clearly demand from those markets is quite buoyant at the moment. Am I in a position to give you an outlook for the year at this point of time with things being very fluid, very volatile? Very unlikely, because I wish I could give you how June is going to look, with so many moving parts at the moment. So we are actually now responding to it almost month by month in terms of both back-end actions and front-end actions. Of course, we have a plan, and we have a certain outlook. But we are obviously having to quickly adapt to the situation to ensure that we remain nimble, we secure the business, and we manage the cost factor, which, by the way, hasn't been the biggest factor to contend with in the last 2 years, but suddenly has emerged now.
Okay, so that's the Bajaj Auto story. Hexaware, again, a thumbs up. Here's what's been happening with the company this quarter. Strong quarter, EBIT margins at 13.3%, up about nearly 600 basis points. The constant currency revenue fell 0.3% for the quarter, though. The company has reaffirmed its calendar year revenue growth guidance of 7.6% at the baseline and has reiterated that their margin guidance will be 13 to 14% for the full year. Street would probably like that. The travel and transportation segment was worst hit. Healthcare gained, though, but it's the 11th consecutive quarter of net headcount additions. If you look at the numbers, revenue is up about 4% for the quarter. This is a Q-on-Q. EBIT was up 89% quarter on quarter. Margins at 13.3% versus 7.3%, and net profit up 20.4%. This included a one-time cost. I thought this was important to highlight in terms of their operational numbers. AI was the single largest driver of deal activity and differentiation in quarter one, and they've closed phase 2 win with large global bank revenues expected in the second half of this calendar year. So that's the call on Hexaware, and looks pretty decent on the face of it. Paytm in focus. In fact, the conference call, the earnings call is on even as we speak, and you have all of those updates at the bottom of your screen. Revenues were up 3.2% at 2,264 crores. EBITDA was down 15.4%. EBITDA margins have also shrunk at 5.8% versus 7.1%, and net profit was also down. But this is also on account of large marketing costs. Citi is maintaining a buy with a target price of 1,375. They're saying core payments, apart from subsidies, continue to grind up. Remember, this is also a quarter where the UPI subsidies that Paytm and all companies in that business used to get from the government have started winding down, and which is why you will see that hit. Though Citi does say profits and EBITDA missed estimates on higher marketing spends as Paytm stepped up promotional spending. Core payment margins continue to grind higher. Merchant business remains robust, and solid growth in financial services sustains. Operating leverage continues to play out as fixed costs remain reined in. Just going to take a Jefferies call on it as well. They've maintained a buy, target price of 1,350. They're saying revenue momentum is covering up for missing UPI incentive. It's a tad below estimate due to non-receipt of UPI subsidy, and adjusting for that, the results were a bit ahead. Revenue growth of 18% was led by financial services and comes despite no PIDF and UPI incentive. Contribution margin is normalizing, but operating efficiency lifted adjusted EBITDA margins to 8%. Paytm's revenue momentum can support earnings despite risk to UPI incentives. I suppose this is a big question for the entire space, because at some point the government needs to wind down those incentives as well. In fact, let's quickly listen in to what the management is saying in that conference call.
From now to 2030. I mean, the point is that what got created in 2020 is not going to work in 2030. That I can write it. So anybody who's not investing is an opportunity for us, that person's customers.
Got it. And Vijay, so just sticking to that point a little bit more, what you're talking about is consumer-facing experience of how you trade. Is there anything on the back end also that you need to invest in to be able to serve?
Consumer-facing is going to get easier because you will not tap.
I see.
So everything is a back-end investment. Everything is the core investment machine. Anything that shows up in the front, it is only as good as it is in the back.
Understood.
It's not.
Understood, Vijay. My last question, any comments on how Paytm check-in has done since you've launched it? I think it's been a few quarters.
This is Vijay, this is our dip test that how Indian consumers are okay for an interface that is chat interface, agent interface, completely agentic. So it's our perfect experiment to look at it, and we picked up a different brand name so that people don't perceive that, okay, this is what popped out or something. It is completely agentic approach towards consumer interfaces. I see agentic interface as a rejuvenated new opportunity for Paytm to gain consumer shares in number of categories. And this is our experiment category.
Good to hear. Thank you.
Vijay, one side note.
Yeah.
You will be shocked. The funnel conversion on agentic, when a customer starts, it typically is 2 or 3% in a funnel that starts where the commitment is the customer can be browsed, but funnel converts, meaning 100 people, if they're searching, it goes 2 or 3% in a good scenario, good product company would do that. I mean, it's 7 or 8 times more than that, my friend. 7 or 8 times more. It is 700% better funnel because of agentic. I mean, boom.
So people go closer to transaction.
No, they complete more. 7 times more people complete the funnel in agentic workflow than a tap workflow.
Oh, okay, good to hear. Yeah, thank you so much. Best of luck for FY27.
Yeah. Thank you.
Thank you.
Okay, monitor and see how Paytm reacts in trade today. Let's talk about more earnings then, and I've got Godrej Consumer Products on my list. It's a mixed set of numbers, but all told, on balance, it seems like it might be a little bit of a disappointment. What are the key takeaways? The top line and EBITDA are largely in line with expectations, but the profit has missed estimates. The underlying consolidated volume growth stands at 6%. This is on a consolidated basis. For the standalone entity, it stands at 8%. There are concerns of raw material inflation, which have in fact put pressure on margins. The overall EBITDA growth was quite strong at 18% in India. The home care in India performed strongly as well, while personal care was more modest. International business on a constant currency basis grew mid-single digit with muted EBITDA growth. So more than anything else, the outlook appearing a little bit muted is what could have a little bit of pressure on the stock today. I picked one brokerage, City, on Godrej Consumer. They've maintained a buy, but they've cut their target price to 1,300 from 1,425. They say it's broadly in line Q4. The margin recovery, however, has been deferred. The elevated crude and palm oil-led inflation and margin compression is likely to take place over the course of the first half of the current financial year, and this can be partially mitigated by pricing and operating leverage. They're saying that business diversification trends remain on track, led by innovation and the scale-up of new categories. There are more notes. Let's see how it reacts in trade today and then take it from there. Blue Star was the second stock on my list, and this is a good result in a tough operating environment. We've been talking about how there have been several challenges that have been faced by the AC manufacturers over the course of the last couple of quarters. Of course, there was a slight benefit that they got on account of the GST advantage as well. Maybe to a certain extent that tailwind has played through, but they had a few woes with regard to inventories. Maybe some of that is getting cleaned up. There was the margin expansion, which was likely aided by demand uptick in the fourth quarter. They alluded to that in the press release as well. But the outlook for FY27 ultimately is going to be key. The input cost pressures that were already underway and more on the horizon, how do they pass that on? Is that demand enough to ensure that that gets absorbed is going to be absolutely critical to watch. But having said that, the margins actually expanded to 8%, and though it's only a 1+% increase in the revenue, it is the highest run rate quarterly with regard to the revenue. So that's something to bear in mind. Finally, Mahindra Lifespace developers, small update for you. They're launching, or they did launch yesterday, a residential project in Mumbai. I'm not telling you the name of the project, but ultimately the most important part, it has a gross development value of 1,650 crore rupees, so bear that in mind.
Mahindra Sky Terraces. I'm just making it up, really. Would be something like that. Okay.
Because I remember a different name, Neeraj.
Yeah, no, I don't even know.
I was wondering if I looked at the wrong notification.
No, but Sky Terraces is what every project right now has as part of it. It's amazing.
Okay, 3 names on my list. First one is Shree Cement. Volumes grew by about, in the results, volumes grew by about 9.5% YOY, which was actually a pretty strong number for Shree. Blended realization was up about 6% quarter on quarter as well. But there are some interesting things for everybody, including me, who thought that the prices would effectively quell all issues. EBITDA per ton for Shree for the quarter was down 16% due to higher input costs. So clearly, the price hikes, even if they were taken in the month of March, have not quite quelled all of that problem. The recent price hikes, they've said in the con call of 25 rupees per bag have been implemented across regions, but they also say that the impact of the West Asia crisis is expected to reflect from Q1 with an estimated EBITDA hit of 150 rupees to 200 rupees per ton. Now, this is a stark statement because in some sense, this is one of the leading cement companies saying that there will be an impact, and despite the price hikes that have been implemented, there will be a hit of 150 to 200 rupees per ton seen in Q1. So bear that in mind. It could well be true for the other cement players as well. Interesting. Citi has maintained a buy. They've cut the target price slightly. They believe that the operational efficiencies augur well in a volatile environment, but higher volumes were offset by lower realizations and higher costs. So that's first one. PB Fintech, very quickly. The second one, revenues are up 36%, EBITDA up 94%, EBITDA margin at 10.6 versus 7.4. This is all YOY, by the way. And the profit after tax up 53% at 261 crores versus 170 crores. Morgan Stanley's maintained an underweight with the target price of 1215. Why do they say so? They say that while it was a steady quarter and the adjusted EBITDA beat forecast, new protection premium was strong, so all of these are positives for the quarter, but they believe there are it's expensive valuation, and there's some unknowns regarding to rules and regulations that could come in from the government side, which could hit PB Fintech, and which is why they are underweight. However, just looking at the quarter, the street might be pleasantly surprised today. Our systems, certainly a decent set of numbers. Revenues up 30%, EBITDA up 33%, EBITDA margin at 17.5 versus 17%, and net profit up 70% at 65 crores versus 38 crores. Pretty solid set of numbers. So a few that you could keep an eye out for, but there are truckloads of numbers and newsmakers more, which we will of course talk about after this very, very short break. We need to slip into one, come back with the top trading strategies for the day.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Welcome back. Let's look at the implied open. It's flat, so nothing much happening. Most of the gains which we saw yesterday was pricing in what the rest of the world is now possibly, and which is why you're seeing an 18-point downtick. Having said that, if you really have any clear movement on a ceasefire, not even a ceasefire, a final deal between Iran and the United States, we might see sharper moves on the market. For now, it's back to regular business, I suppose. Parag Thakkar Kushpora joining in this morning as always. Parag bhai, are you impressed with any of the numbers that came out post-market close yesterday? Did Bajaj Auto impress you?
Yeah, so Bajaj Auto as usual. Bajaj
what did you think of the buyback number? 12,000 rupees?
Yeah, good. 5,600 crore buyback, 1.66% of the equity at 12,000. And from whatever I could gather, promoter is not participating in the buyback. So that also tells you that promoter feels that the intrinsic value of the company is much higher. And stock is trading at 22 times FY28, not very expensive for a company like this. Of course, there are headwinds of commodity.
You're comfortable with the valuations, looking at how the results were?
I'm comfortable with the valuations. And see, 45% of the revenues are exports. And there they have a huge tailwind of rupee depreciation. So that offsets to some extent the commodity input cost pressure.
But they hedge, not to a certain extent.
Yeah, but it keeps, so the hedge is there. But the point is that it is still going up only. So 95, 94. So now whatever exports they will be doing today will be hedged at say 95.
Sure.
So, so they have that huge advantage that 45% is exports and rupee is depreciating. And that kind of, right now, I hope rupee does not depreciate from here. But I would say that, and with oil falling, I think rupee will not depreciate. But I would say that 22 times it's okay. It has recently run up, so I'm a little bit worried.
The margin picture is sustainable for you?
I would say, see, margins can come off a bit because steel prices have gone up too much. And that is a problem for the entire auto industry, I would say. But Bajaj Auto is well placed with comfortable valuations, and they are going to launch 10 new Pulsar models.
Is it a buy at 10,319?
So I would not mind buying it, but I will stagger it.
Okay, a staggered buy. Kush, should we start with Bajaj Auto and round it off and then go to the rest?
Absolutely. But just before that, I'm just amused by how much the word hope has started entering our conversations. I think I mentioned it a couple of times yesterday. Parag bhai right now mentioned I hope Nifty the rupee shouldn't really weaken from here on. So just an interesting observation. Bajaj Auto, good moves. It had a medium term rising trendline support which it broke and sustained below it for a while now. So the view was turning a little iffy. But the buyback was a shot in the arm. It's risen quite a bit. To the question whether you should buy it or not, right now, I would suggest if you do get it around the 9,900 mark or between that 9,900, 9,700 zone, that would be a better buy. It's already run up quite a bit.
Before you get to the index level, I do want to ask, since we're on the subject of Bajaj Auto, let's close that out. If you have held Bajaj Auto shares or managed to get it within the last 2 weeks, would you tender your shares in the buyback?
If promoter is not participating, in my view, you should not tender.
You should not? No. Okay, because there's a potential for upside.
See, promoter is very market savvy person and announcing buybacks, they already have huge amount of cash. In the, so high, fantastic ROIC business. Now new models are getting launched, 10 new Pulsar models. They would want to gain more domestic market share. Exports, so they are doing very well only. So I would say that electric two-wheelers, electric three-wheelers, so I would say that I think if investor is holding it, I think there is no point in tendering in buyback. Unless you need money and...
Okay, so there you go. If you had a question of whether or not you should participate, you've got your answer right there. Kush, let's go to the index view, because what an exciting end to trade yesterday. Everything is shifted upwards, hasn't it?
What a climax, I would say, to that movie. If it were a movie, that would have been a surprise nobody anticipated or expected, right? But see, usually I give you very clear answers ki buy karna hai, abhi nahi karna, is level ke upar karna. Aaj nahi hai. Aaj I'm going to give you, especially the viewers, two options. Okay, one, you could either say, अच्छा ठीक है, थोड़ा और ऊपर जाने दो, थोड़ा और clarity आने दो, फिर buy करेंगे, or you could be a little optimistic, read greedy, and buy now. The data is also actually so placed. See, we've spoken about 24,300 being that stiff resistance which the Nifty had to cross before the tide turned for the positive. We did, but only just. So if you believe that, yes, this is indeed that crossing of, the key resistance, then you go out and buy. I do believe that, levels of 24,600, 24,800 are really, on the cards for the Nifty. Even if you look at RSI for that matter, right? 56, pointing north, moving higher, right? But it's in that 50, 56 zone. 60 and above is where you really turn bullish. PCR, mild concern because it's already at 1.19. Above 1.13, it turns, a little overheated. So there is room for further upside. So like I said, I'm giving you choices, but if you really read between the lines, the choices are between, going long or going long. So yes, the supports have definitely moved higher from 23,900 to 24,100 now. So there is this undertone of bullishness in the market. And like I said, it depends how aggressive you are. If you want to be really optimistic, you could go for a long trade right now. Keep your stop losses near 24,000, 24,100 mark.
And any kind of specific picks that you would look at?
Again, going with all three longs from a trading perspective, and a couple of updates also, by the way. So I think housing finance was something that we were discussing yesterday. India Shelter is something that popped on my radar from the last couple of days. It's had a good move. The 200 DMA resistance is where it's slightly acting up, but it closed above that yesterday. Volumes for the last 3 sessions very healthy. So yes, India Shelter is something that you can consider. 860, 884 are your targets. 815 is where you keep that stop loss. Gabriel India, very similar structure here too, but for the last 2 sessions it's closed above the 200-day moving average, so breaking that barrier also. 1115, 1145 are your targets. 1055 is where you keep that stop loss. And Linde India is a stock that we discussed 2 sessions ago, went on to hit target 1, cooled off just a tad bit, so you can continue holding on to Linde for the second target of 7830, but bump up your stop loss to 7455. Just one word on Genus Power. We discussed it on Monday with a second target of 333. Big move yesterday, already above that, second target. So if you want to continue holding on, you could, but my suggestion, book partial profits at least.
Okay. So a lot of calls this morning, a lot of companies to talk about as well in the Midcap IT pack. Parag, what did you make of Hexaware? And then we saw Coforge a couple of days ago as well.
Yeah, so Hexaware also good numbers, I think. And now stock has also corrected massively, like Coforge only, same. Stock is now at 459. I think the 52-week low is 400. This quarter they did, I think, 359 crore PAT. So I would say that on valuation basis it has corrected and the numbers were optically looking great. I would say, not great, I would say, based on what the stock price has corrected. From that perspective, the results are looking good.
Yeah, but IT sprung a bit of a surprise yesterday, Parag bhai, on the valuation front, and Coforge also did well. You reckon this one could do? I mean, are you in a buying mode into any of the beaten down mid-cap IT?
So as I said, very selective, looking at results, looking at commentary. So Coforge we discussed yesterday, stock was up. Hexaware, I don't think like Coforge it will go up, but I think Hexaware should also.
You're not investing there right now.
Yeah, not much. Right now, the space which I'm most excited about is cement.
Okay. Actually, coming on that.
Of course, financials will come back with this credit guarantee scheme of 2.5 lakh crores and oil cooling off.
Yeah, and HDFC Bank has some positive news too, and we'll talk about it. But first, since you mentioned cement, Parag bhai, the Shree cement call seemed to suggest that despite the price hikes having been done, EBITDA per ton was down in Q4 and will be a hit in Q1 as well.
So that particular thing, it is company specific, right? Okay. For example, Ultratech on the call, Mr. Atul Daga has clearly said that June is not a worry, which means with reading between the lines, this is not what he has said. I am reading between the lines that they have inventories of petcoke and coal, thermal coal till say May end or June 15th. Right, so they are well positioned in that matter. By the way, I just did a channel check today morning. The thermal coal, the last shipment which has come is 10% below the previous one. So already what we are seeing in crude oil has started to boil down to some of these commodities also. So and the price hikes are happening gradually I would say. And most importantly, Ambuja recalibrating, this we discussed actually, that right now they are at 109 million tons. Going to 150 million ton was the target for FY28. Now they have delayed it to FY30. Even Shree Cement has indicated that next year their earlier capex plan was 1900 crores. Now they are going to spend 1500 crores. So everybody is recalibrating their capex plans, and so capacity expansion overhang which was there in the cement sector, it might reduce a bit, and this is great positive for a company like Ultratech, who is expanding at a lowest capex cost per ton and making highest EBITDA per ton. This time if you see Ultratech's EBITDA per ton is more than Shree Cement's EBITDA per ton.
Okay. Pecking order, I know you've said it in the past, but let's have that out. And if possible, if you're looking forward 1 year, based on the thesis that you have, or even longer if you prefer, what in your mind should the targets be?
Targets, so I would not like to comment
not
on
targets,
specifically targets.
But return potential.
15 to 20% for a large cap like Ultratech is in my mind.
Okay,
and that I've already said, Ultratech and Grasim is large portion of my portfolio, and I would like to stick to that. Of course, then JK, Shree, Ramco, all will do well. The sector is in a good shape when everybody is recalibrating their expansion plans and reducing their capex intensity.
Okay, let's close the loop and talk about technicals as well on the stocks that have been mentioned.
Doesn't really sit all that great. I mean, from a technical perspective, there are lower high, lower low formations being made, at least on the weekly setup if you see. So it's not as encouraging and not as broad-based, a buy where I could say, no, of course, cement completely looks well. You have to be very stock specific. Grasim is something that we discussed yesterday as a call, by the way. 29, 25 was the first target, came very close to that. So remain constructive on that. One slightly preemptive, trade could be Dalmia Bharat, because unlike its peers, this one's not corrected, it's consolidating, and it's hitting that 2000 mark pretty consistently. So I think a break above 2000 could actually put it into a higher trajectory. So Dalmia Bharat, like I said, a preemptive trade. Grasim still continues.
Okay, let's go across to Somit. Somit joining in this morning, as he always does, with what is the buzz we're picking up on the street.
Well, the first stock is on Ola Electric. Now, what dealers are indicating is that the company might launch its QIP as soon as next week. They have already completed the roadshows and they are taking analysts for a plant visit this week. So most likely they would launch their QIP next week is the buzz on the street when it comes to Ola Electric. Apart from that, there is Yes Bank, which remains in focus. There are buy flows on the large HNI desk. Dealers are indicating that there could be some positive news flow that would be coming in very soon for Yes Bank. So keep an eye out for that counter. For Coforge, the stock had gained yesterday in trade on the back of strong set of numbers. But what dealers have indicated here is that a large domestic mutual fund has been a seller at higher levels in Coforge. And lastly, when it comes to Hindustan Zinc, multiple dealing rooms have indicated buy calls to their clients based on technical charts. And for LIC Housing Finance, there are buy flows on the PMS desk. Dealers are expecting a steady set of Q4 numbers coming in from LIC Housing. And moreover, there could be also a valuation catch-up when it comes to LIC Housing is what dealers have indicated. And yesterday we did mention about PB Fintech, and that company has reported a strong set of numbers.
That's a good point. Actually, PB Fintech, we should talk about that. Thanks so much, Somit, for that. Parag bhai, any coverage on this or rather any view on this? PB Fintech got a bit of a tailwind sometime last year on account of the treatment of life insurance products. There's also this big conversation about bank assurance channels and all of that. So all of those are tailwinds for this company, and that's reflecting in the stock in the
so
earnings
company is doing
performance.
extremely well, and I have been tracking this company. I was a buyer in this company at around 400 rupees when the stock price fell due to that forced selling of the early investors exiting. So it's a good, one of the good companies where a futuristic company and good platform. So I would say that, right now I don't hold it at this price, but and I don't have a very strong view at this price also. But I would say that it's a good company, one of the good companies which recently got listed.
Okay. All right. Let's talk about a slew of newsmakers that we will focus on today. And in fact, we've already talked about more than 9 stocks that are in focus. Let's bring you more. And Varsha joining in to tell you about that. Varsha?
Yeah, let me start with Warri Energy. So I'll be talking about 4 stocks. So first is Warri Energies, wherein ARM has signed PPA with Solar Energy Corporation to develop 300 megawatt wind power project in Gujarat. Then you have Rosel Tech, wherein they've secured order from a overseas defense customer, and this order is for manufacturing of electrical wire harness. Then you have Servotech Renewable, wherein they've received order from South Central Railway, and the order is for 1,415 kilowatt rooftop solar system. Lastly, you have Aries Infra Solution, wherein they've received a developer as a service order from Vadhva Group. Now this order is for Vice City Township project in Panvel, and the project GDV, that is gross development value, is estimated around 650 odd crores, wherein the potential upside is also 400 crores. So these are all the 4 stocks which can be, which can buzz on the back of news flows today.
I do want to ask about, thanks so much, Varsha, for that. Not these stocks, but one of the stocks that Somit was mentioning was LIC Housing Finance. And we saw the results of Aadhar Housing as well just a short while back, and we keep talking to Parag Bhai about that. I think this is one of the stocks that he owns. He's mentioned it in the past, but specifically on LIC Housing Finance. Do you have an opinion on this?
It's the cheapest stock in the market.
There you go.
Cheapest stock. 6p, 0.7 times, 6 times book. Like it is, if there is some positive surprise in the result, as Samit was highlighting, the stock can go to places. Because see, what the problem was that PSU banks were pricing their mortgage rates, prime mortgage rates, so lower that LIC Housing Finance was actually losing some business to PSU banks because they could not reduce the rate so much. So if that rate goes down and if they don't lose their business to PSU banks, and if they report good growth, which I think in Q4 affordable housing finance has done very well. So if it does well, multi-valuation is absolutely completely roger.
Have you studied their return ratios and their...
Yeah, so everything is perfect. There is no problem. There is only a problem of growth. Because they are losing, because the competition is so intense in mortgage market that they were losing some business. So they were not able to grow their loan book.
Fair enough. So if you look forward into FY27, if you say for LIC Housing in this context, what according to you is a decent run rate of growth?
10 to 13% if they can do, I think stock can give very good returns.
Okay. On the technicals for LIC Housing?
Not bad at all. It's had 7 weeks of consecutive gains. Also, if you see on the daily setup, it's crossed above the 200-day moving average for the past 5 sessions and holding ground and gaining some, in fact. And one more important point is that, how we've discussed time and again that a lot of stocks have risen 30-40% in the last month or so. This one's risen only 26%, only because relative, right? Despite all of this, it's not overheated either on the daily setup or on the weekly setup. So definitely room on the higher side for this one. 600, 625, I think are immediate targets for LIC Housing Finance.
Got it. Okay. Well, always has kind of in some fashion perennially been cheap. So it's not that it was very expensive, then has become cheap, and therefore it's an opportunity. Please keep that in mind. And I think Parag Bhai would kind of certify that it is the cheapest stock, but it's never been too expensive as well. Keep that in mind.
Yeah, because growth rates are low.
Yeah, exactly. And there are maybe other housing finance companies which are doing so well, Aadhar Housing, for example, or some others. You'd be happy with the outcome of what's happened in HDFC Bank, Parag Bhai, because it seems that if at all there was any governance overhang, if at all there was, it's now been cleared. The independent firms have found nothing at all. Is this a trigger for the stock or not really?
No, so basically I would say that valuation wise, all private sector banks, large private HDFC, ICICI, Axis, Kotak, all are very cheap. Okay. Now, why they were cheap? FIs were selling them. Why FIs were selling them? One fundamental reason was if oil goes up, there can be asset quality issue in the future. Oil goes up and stays there, right? So duration of the conflict, as I keep saying, was the most important thing. Now that yesterday we saw a little bit of cool off in crude oil, the sentiment can turn positive for them. Valuations are already very attractive. And as of now, no bank has said that we'll have an asset quality issue. At least the large cap private sector banks or large cap PSU banks have not said that there is going to be an asset quality issue in the near term. But it all depends on duration of the conflict. So I would say that, and first of all, I have always said that HDFC Bank, I have always seen that there is no governance issue.
Yeah, of course.
It was just due to this chairman resignation, this entire thing got triggered. But I would say that, so yes, I remain constructive and...
Sounds good.
Yeah.
Perfect. Okay. We're going to talk about some of the other oil sensitives as well. Can we play oil sensitives? Stocks which are in the adhesive space, in the paint space, I think. And it'll be lovely to talk about all of that too. But since there are a slew of earnings, let's get in Mahima to tell us what else should be on your focus. Mahima.
Right, so Neeraj, I'll start with Brigade Enterprises first because, overall we've seen a mixed bag in terms of real estate this quarter, and Brigade is on the lower end of that because overall collections have not grown much for them. The average realization growth just stood at 7-odd%. Leasing, segment saw growth of around 17-odd%, where footfalls in malls grew by around 7-odd%, and hospitality grew by around 5-odd%. So overall, in terms of numbers, revenue was down around 0.2-odd%. EBITDA
EBITDA saw a downtick of almost 12%. Margins came down to 25% versus that of 28.5%, and net profit was down around 41%. For FY26, the pre-sales growth was also not very impressive at that 11% leasing around 18% is what is the growth that we saw for Brigade. The next one is Kansai Nerolac. Now this quarter has been overall a decent quarter for Kansai Nerolac. There was revival in demand seen as per management commentary in the decorative space. Growth drivers for new products, growth drivers includes the new products, and that includes construction chemicals, wood finishes, as well as overall the project space continued to do well. Demand in industrial was also robust, which was largely led by the automotive space. Growth in performance coating was also strong based on the back of a strong order pipeline, but the execution is going to remain the key. And the company has announced price increase, which is partly going to offset the inflation going forward as well. So this is, how Q4 has panned out for Kansai Nerolac. Overall revenue growth at 7.5%, EBITDA growth at 30%, margins improved to 11.1%. But this is going to be, area of concern for especially margins going forward. And net profit saw growth of around 3.5%. The last one is Meesho. Strong Q4, and this was, a quarter where contribution margins saw an improvement. Overall, the Meesho Mall and Content Commerce demonstrated a strong growth, and they have continued investment in their platform and AI, which is auguring the growth for the company. Revenue saw a growth of 47%. The losses, however, EBITDA losses did widen a bit to 255 crore, and net losses came down to around 166 crore. In terms of operational performance, net merchandising volumes saw a growth of 43%, which is a very healthy growth. Annual transacting users grew by 33%, and orders saw an increase of around 45% in FY26. So this is the overall view of how things have fared for Meesho in Q4, and of course a slew of other earnings.
Okay, on Meesho though, just a tad bit expensive, huh? But
out of my syllabus, 89,000 crore market cap, 255 crore EBITDA loss in a quarter. So out of my syllabus. So she was talking about oil sensitives. I think Pidilite is one thing you can watch out for. Pidilite, I think they are like that day, incidentally we discussed Marico. Pidilite result is today. And I think if oil falls, right now it is 102, I hope it falls below 95.
But we went below 100 briefly.
Yeah, yesterday. Yeah. I hope it would have stayed there. But again, there is some statements. So 102.
No, but okay. Just on that point of hope about crude, what is the factual situation in the world? Crude was at between $76 and $80 a barrel before this started. This is a choke. It's not as if crude has disappeared, right? Yeah. This choke will end, crude will flow, those prices will come down.
Yeah. So basically that's what the call we have to take, right? And so that's what so for example, as I keep saying, I put it into two buckets, and both buckets you have to buy best companies. So something which is not impacted by all this, Bharti Airtel, you keep it. Something which is impacted by all this, like Grasim, Ultratech, Pidilite.
Were you excited by hearing that Kumar Mangalam Birla is now going to be non-executive chairman? Because the street did seem to, bring
in
that
Vodafone,
in. Yeah, in Vodafone.
See, for example,
but he's non-executive chairman.
I know. So the point is that, see, if banks want to lend to Vodafone, right, they will need more assurances, right? And so they will need more money infusion from promoter. Kumar Mangalam Birla himself coming is a good comfort. There will be many other comforts which Vodafone will have to give to lenders.
So 31% up in the last 1 month, so some comfort there. Shrikant Chauhan, very good morning to you. Just about a minute or so to go for the pre-open. Do you want to give your levels after the opening rates and go with your calls first?
Yeah, I would like to roll with the calls first. Good morning, everyone. So I think, the market has broken its important level, and everyone knows that now the market has started gradually moving upward. So it is better to focus more on trading calls. The number one stock that we like is Delivery, and we saw buying interest in all platform companies in last 1 month. So Delivery looks good at current levels around 470, 471. There we have a target of 490, 500, and we can keep a stop loss around 454 for the same. The other stock on which we are bullish is APL Apollo. There we are seeing good double bottom sort of formation. And after hitting the levels of 1850, again it is rebounding. So most of the time, whenever the stock has fallen to 1850, 1860 sort of levels, we saw buying interest. And this time also we are of the view that the stock is heading for 2000, 2050 in the near future. And it's a buy at current levels with a stop loss very close to 1870.
APL Apollo breaking out after a time. On delivery, viewers, just keep this one thing in mind fundamentally, that Amazon has launched its own delivery services for self and others in the US. And if this succeeds, the pilot model, they might bring it to India. That is the belief amongst fundamental watchers. And that could be a big negative for delivery, but maybe that's 6 to 12 months away. So for now, from a trading perspective, Shrikant could well be right. Just keep this at the back of your mind. But it's 9 a.m. And let's get the first rates on the screen to just show you what the Nifty, what the Bank Nifty, for example, or some of these high newsmakers are doing on open. We have a start which may be constructive, so that is one good thing. A lot of large caps in focus, from a Hero MotoCorp to a Bajaj Auto on the two-wheeler side to an HDFC Bank to a Shree Cement. All of them have some other news flow to them. Then some high frequency movers, the likes of Paytm and PB Fintech, which have come out with results. And in PB Fintech's case, the results looked solid. Paytm, I don't know if there's a 10% uptick there or no. PB Fintech too, good numbers, but I don't know about a 10% uptick. But you can get the flavor. The street seems to be liking some good numbers on a day when the mood by and large is okay. Also keep an eye out for the oil sensitives, the likes of Interglobe Aviation, the likes of the oil marketing companies, and all of them could be in focus this morning, guys.
Very interesting, yeah. Looking at the first tick, 0.2% higher, 0.25% higher for the Nifty 50, you'll take it. After that substantial run-up that you saw yesterday, I want to also pull up the Nifty Bank just to see what the initial ticks are if we possibly can. And once again, reiterate, and actually I want to ask Shrikant this, because after yesterday's move, when we were talking about a trigger at the start of trade yesterday, on the fundamental side, it's being seen as that ECLGS 5.0 announcement. And we saw 2.6% pop on the index level, with PSU banks also doing particularly well. It was the top gainer. Would you buy into that, Shrikant?
So in that particularly, if we go through with the PSU banks, then see, like most of these stocks have fallen sharply from their immediate highs. And now when the recovery is there, it is quite like we can say not that convincing. But yes, a few companies like I can say State Bank of India, which are leaders, I can say, in that particular space. State Bank of India as well as Canara Bank. I think this stock should do well. In that, we like currently only State Bank of India because the recovery is relatively better than other stocks. Currently, it is around 11,080, 1100 sort of levels. But from here, the stock can gradually move towards the levels of 1170, 1180, where it has good amount of resistance. So between 1200 and 1170, the stock is having resistance. So I'm not expecting stock to cross all these levels and go rapidly to the newer levels. That is not possible. We are of the view that it is going to consolidate within the range. But at this level, certainly it's a buy because the risk-reward ratio is quite favorable.
Okay, what's happening in the pre-open session? Look at Paytm. So the UPI incentives are not coming in. Optically, some of those operational metrics were muted, but that conference call has enthused the street. And the numbers were at its core good, 6.5% up in the pre-open session. PB Fintech we've talked about. Look at a Bajaj Auto. 12,000 rupees is what the company is offering for a buyback. Should you buy back? Parag Thakkar says no. Hold on. 5% up. Even possible to look at new positions coming in. Hexaware Tech is also about 4.5% up. Decent set of numbers. Since we were talking about Misho, we should just look at what that stock is doing as well. After its results, about 3.5% up. Operational losses have come down. The management also talking in detail about how they're using AI in their entire interface and how a majority of their code is now being written by AI. I think these are metrics the street will start looking at. On to our big brokerage call of the day. Citi has initiated a buy on NTPC, Power Grid and JSW Energy. Sharad Dubey tells us more. Sharad, how is it being back in Bombay?
Well, yes, it's a pretty good coming back, but definitely there was a lot of sentiment and, you could say hope in West Bengal. But coming back,
one second, Sharad. I hope you brought back all of that jhalmuri and some sweets for the team after your 2 days in Kolkata?
Well, yes, as promised, Sandesh is here and we will be having that.
Okay.
But coming back to the brokerage call, Citi on India Electronic Utilities has come out with its report for NTPC, Tata Power, Power Grid and even JSW Energy. You can see all of the 4 companies initiate buy ratings have come in, and they have stated a very important point that this is India's first ever multi-vector capex upcycle. That's a very big statement coming in from Citi, and it's a multi-year visible story with the breadth of power demand gradually going to expand. Let's talk about the numbers also here. The medium-term forecast is at around 5 to 6% CAGR on the strength of electrification, data center, cooling load, and the policy which is supporting these manufacturing sectors. And let's take the order of preference from the broking house. First is NTPC, second is Tata Power, followed by Power Grid and JSW Energy. Of course, these stocks have re-rated, but there is a further up move expected in most of these stocks, especially on the transmission and distribution space. That's where the bullish commentary is coming. But net, we have for the last 1 month, we have already seen the power stocks already rallying with a lot of brokerages turning bullish on this theme.
Electric utilities as a bullish take from Citi. Any views here, Parag Thakkar?
No, so I like regulated ROE businesses, conventional like NTPC, Power Grid and all those things. JSW Energy, anybody who has a long-term agreement with the state electricity boards and gets a regulated ROE, those kind of businesses are good. This time summer is very heavy, so power demand is expected to be good. But I would say that stocks have rallied also. So it might be overstretched.
Okay. We were talking about the transformers companies earlier today and talking about how they've disappointed in Q4. And what would you say right now? Because they've almost all of them fallen off a cliff, right?
If you would have asked most, I would say, I would not name that company, but the most respectable company in that space, when I was talking to them, they were saying that we are surprised that we are making so much money. The 20-21% margins.
Now you have to tell us which company.
No, it will not be fair for them to.
Okay.
But I would say that they were actually surprised. A transformer company does not make 20-21% margins all the time. So this time there was a disappointment in margins. So stocks got. So this is a problem with the market. Market extrapolates good things. Market extrapolates bad things.
So it's not replicable, you're saying?
No, according to the companies whom I speak to, those kind of margins were one-off.
Okay.
Yeah. And like we said, I think it's exacerbated simply because of the Middle Eastern issue as well. Transformer oil prices are expensive right now. In fact, people are now floating names that the companies which are making this transformer oil, there is a stock called Savita Oil, if I'm not wrong, which is doing this.
Yeah, Apar makes it.
Even?
Apar.
Even Apar makes it. So those are the names that people are now looking at, and no surprise that their stocks have done well. But yeah, the transformer stocks are definitely getting hit.
It's actually the polar opposite of what you've seen with the transformer stocks, right? Where they've fallen off the cliff. Savita has done particularly well.
Yeah, but transformer oil can also correct. So
So what are we thinking about Paytm?
Difficult. But
the expressions from Parag Thakkar. Look at the stock. Vijay Shekhar Sharma is so confident.
No. So basically, I feel that it is out of my circle of competence. But yeah, operating metrics seem to be in right direction.
Yeah, but the fact is that the UPI incentive is now dwindling down.
Yeah, so no, I don't understand that business so well. So let me be very honest.
Okay, so you're saying you would stay away for now.
I don't understand it enough.
Okay, what about on charts?
Nothing exciting really. I mean, it's consolidating in a range. It got multiple resistance levels, plus any kind of cap-up opening will, I think, be taken as an opportunity to exit. 1150 itself is a resistance opening there, just above about 1175 also. So unless you have a strong breakout above some of these levels, Paytm, I'll also club Eternal, in the same pack, by the way. Unless you have a big breakout volume backed one in some of these names, I think they could just consolidate, for some time.
Actually, that's a really good point that Kush is making. And Shrikant, I want you to come in on this as well. Paytm, maybe PB Fintech, Eternal, Swiggy to baat hi bhul jao, but they are all not able to show any kind of a bump up or a breakout now for a number of weeks or months, if you will. Are they therefore in a no trade zone until the trend changes?
So say like Neeraj, we have seen good amount of rally during 2024-25. Now they are into corrective mode. So in this corrective mode, they are going to spend time. That is very clear, as Kush said. But one thing that we cannot forget that they have already fallen to their extreme levels in last 2 months. Now they are rebounding from those levels. So pullback rally is on. On every dip, I can say we should look for taking some long bets on these stocks because it's a pullback and this pullback is going to continue for a longer time. So gradually we can see the levels of 300, 320 on Eternal, for delivery maybe 500, 520, and for Paytm, again, the stock can move towards the levels of 1200. So maybe 1250 sort of level. Broadly, I am of the view that we should be in fact a trader in these stocks on every dip because now they are going to form the what I can say, the series of pattern that is higher top, higher bottom. And in that specifically, we like Eternal.
I do want to talk about Godrej Consumer because we highlighted that stock and the view is that it was a mixed quarter but more negative than positive, and more than anything else the outlook for FY27 is looking a little clouded, particularly on the margin front. So to you, Parag Bhai, if you're talking about the entire space, there are a few stocks that you like.
Yes.
What is the view on GCPL though?
So as I said, Godrej Consumer in soap business, they use palm oil, right? And palm oil prices also go up in line with the crude oil price. So the outlook for the margins will be slightly, plus Indonesia, this quarter also the problems continue. It was a negative growth. So I would say that yes, it is not as exciting as Marico or Pidilights of the world, in my view.
Okay, so it's an avoid, and if you have it, perhaps get out while you can.
But the stock price is also corrected, and it has corrected today. Today also it will correct.
Yeah.
So now I think it is not a time to to surrender, I would say. Now
not the time to
yeah, because stock has also corrected.
Got Kush, if you have a relatively shorter time frame in mind, and of course this is from the lens of a fundamental investor, right? What would you do with the stock? What levels would you watch out for?
Yeah, I like the option that you mentioned, that if you do have a position, it's not a bad idea to move out now. It's run up just a little bit in the recent past, but it's also starting to see a weakness, profit booking. So not a bad idea to exit. 1040 is a strong support zone. If that is broken, the structure will weaken further. So yes, I mean, if you do get an exit at open, great. If not, maybe at least put your stop losses around the 1040 mark.
Okay, well, so FMCG blowing hot, blowing cold a few days, one day up, down the next, so it's a difficult one to maybe trade as a piece. The other one to look at is Meesho, and I wonder, there's not too much chart detail available, isn't it, Kush? Okay, let's leave that out. So Kush, let's try and figure that out maybe 2 minutes early. Why should we always ask you about your top call in the last 10 seconds? Pre-open rates have settled. If you had to bet on one stock for a trade today, which one would that be?
It'll be Gabriel India. It's got massive volume accumulation in the last 3 sessions, 200-day moving average crossed in the last couple of sessions. And despite everything happening, the auto angst, I still remain bullish because the price movement, at least for now, is showing that. So I will continue that positive stance on Gabriel India. Just to reiterate the target and the stop loss, 1115 and 1145. These are your targets. 1055 is where you keep the stop loss.
You've actually disappointed Kush because he enjoys that challenges, by the way. But having said that, let me throw it across to Shrikant Chauhan as well. Do you have a pick from after the pre-open rate that is different from what you picked for us at the start?
Yeah, I think today we have to focus on auto companies. There also we can see some continuation of the previous up move. In that specifically we like Ashok Leyland, which is currently around 166, 167 sort of levels. If we consider its overall technical pattern, then on long-term charts the stock is showing a lot of strength. And yesterday the stock has formed higher bottom sort of formation. So from here again the stock can gradually move towards the levels of 180, 185 and eventually maybe 200 plus. So it's a buy at current levels. Risk reward ratio is quite favorable. We can keep stop loss around 164 for creating any long position.
I just want to quickly bring to notice, and this is something Prime Minister Modi has just posted. He's talked about how this is a year since Operation Sindoor and how time flies and how much we saw coming out from our country in terms of a response. Here's what Prime Minister says. He says, a year ago, our armed forces displayed unparalleled courage, precision and resolve during Operation Sindoor. They gave a fitting response to those who dared to attack innocent Indians at Pahalgam. The entire nation salutes our forces for their valor. Operation Sindhu reflected India's firm response against terrorism and an unwavering commitment. No doubt, a big day to remember. Also a day, Neeraj, which stood out, or a time which stood out for the coming of age or coming to the forefront of Indian defense companies and Indian indigenous defense prowess.
Yeah, I couldn't have placed it in a better fashion. Most certainly, a proud moment for so many Indians to see what the Indian Armed Forces could do with precision in modern day warfare. But let's focus now at 9:15 on the markets, starting off reasonably well, about 0.25% higher, with not much support from the banks, by the way. But the broader market's doing well, because the advanced decline ratio is looking very, very solid. Midcap's 0.5%. Small cap index should come up on your screen, up 0.65%. By the way, with this, is the midcap index at highs? I think we'll just get that checked. But the small cap index too doing really well. So good going at the start for the market. Let's get the heat map up on the screen and show you what's happening at the large cap end of the market first. Fair degree of green, very little red. Let's start with the green first. Bajaj Auto on Q up about 1%. Trent, interestingly, up 1%. Eternal is up about 1%. No rara moves, if you will, in any of the stocks. A rising tide carrying some of the lightweight stocks up in trade. We are not seeing the heavies participate except for State Bank of India, which is in the top 10. But you can see M&M, after the results and the commentary that they've given, having a good move per se. But yeah, that's about it really from the gainers. On the losing side as well, Power Grid, Kotak, maybe a Titan, Reliance is in the red. So keep that in mind. And HDFC Bank is not quite celebrating the clearance of that overhang. So yeah, long and short of it, the large cap move kind of muted, Tamanna. Broader markets, I'm sure, are rip and roaring.
I won't say rip and roll. I think it's a very careful market, right? Because again, we've talked so much about hope, but then do you want to bet on hope is the question, which is what you're seeing in the range coming in. I want to just pull up the advanced decline ratio. We'll pull up the VIX and then we'll pull up the broader indices as well. VIX is okay, steady, about % down. Advanced decline ratio is positive, 1813 to 335. So that is showing that at least bulls are in charge, but no rocking moves. Even the mid cap and the small cap. Let's just pull up the mid cap and the small cap. 0.5% up on the mid cap, 150. That's decent. That's positive. Thereabouts on the small cap, 250 as well. Let's look at the sectoral heat map and look at what's moving there. You have enough of red on the screen. Small cap 250 is actually your biggest winner. That's fantastic. Media stocks are up. Interestingly, we should pull up Sun TV. Even as it's not clear when and how and in what form and fashion the Tamil Nadu government will emerge, because at the end of the day, there's no party which got a full majority. You've seen Sun TV slowly coming back up. So interesting how that's become a proxy for Tamil Nadu politics. But let me just go back to the sectoral heat map if we can. Thank you for that from the graphics team as well. The healthcare stocks are doing okay. So is pharma. Defense is also showing maybe a sentimental uptick. FMCG a little muted, but overall I would say look at the range. Your top mover is less than 1% up, and your bottom mover is but just about 0.25% down. So very narrow, tight range of trade today. Individual stocks is where the action is. So a lot of it around results, actually all of it around results today is what I'm picking up. Paytm, Hexaware, Birlasoft is what we're looking at. Paytm, decent set of numbers, confident management, 4% up right now. The only cloud in the sky, of course, is that UPI incentives from government are beginning to grind down. Hexaware Tech was actually a robust set of numbers, but the stock has run up as well. Birlasoft, on the other end, was a muted set of numbers, but you're seeing that stock about 1% up right now. Let me look at Brigade, PB Fintech and Godrej Consumer in that next list. Brigade Enterprises was weak. Godrej Consumer was also weak, and the fear of palm oil prices going up with crude and hitting margins is very much there because they make soap that needs palm oil. PB Fintech, also good set of numbers, not that much of excitement as we saw in the pre-open session, to be honest. Shree Cement, Misho, Blue Star is the other set that I'm looking at, and quite a few here to cover today. Shree Cement, good set of numbers, 3.5% up. Misho, the losses are there, but they're reducing. That's 6% up. That's doing well today. Blue Star, a little muted as well. So you have a lot of result reactions coming in, but not too many that are popping, Alex.
Yeah, but a few stocks in the broader markets that are doing particularly well, and that breadth continues to hold. It's not worsened too badly. In fact, a very strong market breadth at this juncture. The question is, do we hold on to that? And by the way, the Midcap index, the Midcap 150, having hit intraday a fresh high, and that's something to talk about, right? Even as we have geopolitical crisis that is not dissipated, even as you have challenges on oil, you have a significant comeback in the mid-cap index that took place in the month of April, as much as 13% and a further 2 or 3% or thereabouts in the month of May, and that has taken us to fresh highs. But a few stocks that stand out: Aditya Birla Lifestyle Brands is up at about 7% or thereabouts. Aptus Value is doing well today. Affle is up and about. Shree Cement is up and about 3% each. And very interestingly, from my perspective, and something that, if I remember correctly, Kush called out earlier in the week, is J&K Bank, which is up about 3.7% as things stand right now. If I remember correctly, this was a call earlier in the week, wasn't it?
It's been a call for about a month now. The stocks, it's consolidated way too long, but the breakout also was equally strong, and hence the conviction. I've said in the past, 150 on this one, positionally very easily achievable. I won't be surprised for this to actually go beyond that as well. That's the kind of setup and that's the kind of momentum there is. Despite having run up quite a bit, if you see the weekly setup, the accumulation in the last 2 weeks, very healthy. So if you do have a position, my suggestion would be continue to hold. Keep a trailing stop loss around the 125, 130 zone now.
Okay, some of the other stocks that I mentioned, Shrikant, and I'm going to list them out for you again. Aditya Birla Lifestyle Brands now climbing even further, 7.5% higher as we speak right now. Aptus Value building on those strengths as well, 6.4% higher. Let me throw in J&K Bank and get your view on that as well. And Paytm up about 3.3%. Which of these would you trade?
Yeah, I think so, in this particular basket of stocks, if we have to really select any one or two stocks, then I think we can go for very first, that is J&K Bank. Even at 141, 142, the stock is showing a lot of momentum. And whenever we have seen any specific momentum sort of stocks in such type of sluggish market, there we should look for taking some trades. And stock is now very close to its immediate highest level of 144, 145. So on the dismissal of that, we can see the levels of maybe 155 sort of level. So certainly even at this level, it's a buy. The other stock on which we are bullish is Paytm, but currently it is very close to its resistance level of 1150, 1160. But eventually the stock is heading for the levels of 1250 sort of levels. So there also we should look for taking some long bets.
Okay, I'm just wondering how we are looking at some of the auto pack. Shrikant, are you bullish on a Bajaj Auto? How do you look at that buyback, if you have a view there, and any of the other auto pack right now? Or do you think that auto run that we saw last couple of days will cool off now?
Again, we have to be very selective in the auto space. Bajaj Auto, Hero Motors, I think they are currently participating into the upward activity of the sector. But eventually, Mahindra and Mahindra, Tata Motors, commercial vehicles, and TVS Motors, I think these are the three stocks which can do really well. From here, the Mahindra and Mahindra can move towards the levels of at least 3550, 3600. So we are recommending these stocks with a positional point of view. We also like TVS Motors. It has formed good base close to 3300, 3400 sort of levels. And from here, the stock is again heading for the levels of 4000. In fact, this one is the most outperforming stock in this particular space. And if we consider its overall technical pattern, then I think it is heading for the levels of maybe 4,400 or 4,500. So it looks really strong candidate to buy for. And from the Tata Motors space, I think instead of focusing on Tata Motors passenger vehicle, if we focus on Tata Motors commercial vehicle, then I think gradually we can see the levels of 500. But for Hero Motors, Bajaj Auto, I think they have reached to their immediate resistance levels, and there we should look for taking some profit on long positions.
Okay, take profit on long positions when it comes to Bajaj Auto and some of that auto pack. You know, you're seeing a pretty decent morning though, I must say, especially in the broader markets. And want to look at a polycab as well. With everything we've seen with cables and wires and that entire space, competition, etc., polycab numbers were decent.
This
some
company
good
continues to do well.
upgrades. Yeah. At the current levels and current valuations, you like this?
No, I don't like it, current valuations, but the company continues to do. Even RR Cable, we saw the numbers.
Phenolex cable is also doing well. The entire space is doing good right now.
Yeah. That space is doing well.
What are your favorites then?
No, so basically, not necessary, but RR Cable is something which I am evaluating. I saw the results. This quarter result was also very excellent.
RR Cable.
Yeah, RR Cable. Good results, yeah.
Okay.
Hill copper is buzzing actually. Can we pull that up, please? The intraday chart. It suddenly spiked, I believe, or rather, it has actually had a bit of a spike, 4.4%. Kush, on the charts, would you trade this or would you sit by?
I would wait just a tad bit. Although if I did have a long position, I don't see an issue holding that long position because, you know, the bias is positive. But it's gone into a long consolidation phase where, you know, after that, very sharp run up a couple of months ago, it's just consolidating now. Again, trying to regain those 580, 590 zones. Maybe in the clear of 600, you know, it could have a fresh run. And hence, the risk reward ratio from here for a fresh buy is not as favorable. But if you did have a position, not a bad idea to hold. And just a quick word on something that Neeraj mentioned at the start. The small cap 250 index, by the way, is still some distance away from its all-time highs. But the mid cap 100, by the way, has hit all-time high. So if you did have positions, in all mid caps, you'd probably be feeling a bull run right now.
Nifty metal is also at a record high. So you are seeing the broader markets come on. But, I want to pick up a theme that we touched upon very slightly just before we had the market open, which is defense, right? And we had that Prime Minister's post on Operation Sindoor, and that's a proud moment. Defense companies, and we should pull up the one-year chart for both the Nifty India defense and some of the key defense players, have shown steady growth there. Do you think that story still sustains, Parag?
So basically BEL, as I said, see, this in defense what happens is the order books are there. The execution is lumpy, right? And so, and from that perspective, I've always seen that BEL continues to deliver and execute. And they are part of almost all the projects. So I continue to prefer BEL in that space. HAL, of course, now that GE engine problem is getting resolved, is doing well.
I want to see the one-year chart for BEL. I think it's gone up some 30-40%. HAL has been pretty standard, but BEL has seen a 41% uptake. On charts, any of the defense plays that look interesting to you, Kush?
MTAR and data patterns, although they've run up quite a bit and are right now consolidating, that's a good sign. You want to buy these stocks when they're consolidating, and you want to buy.
Just look at MTAR in the last 12 months. It's 359% up in the last 12 months.
And a large part of that over the last 1 year.
When it was 4,700, Motilal Oswal came out with the report of 6,000 and everybody's saying you are nuts. and in 10 days, the stock went to 6,300.
Yeah.
Quite something.
Sorry, which was the other one?
Data patterns.
Okay.
So both of these, they've, as now was shown on that one-year graph, they have strength, they have momentum. I think maybe some declines, you could consider these as buy. Even in the consolidation phase right now, you could consider, some of these names. BEL is something that you buy and hold for long term. It's like the HDFC Bank of Defense.
HDFC Bank of Defense is BEL. Good description. Even data patterns is doubled in a year. So I think it's an interesting story to see because, of course, Operation Sindoor geopolitically as something for every Indian so important. And on the other side, the fact that your Indian defense companies have also come to the fore at the same time. So I think that's good. Look at the Nifty defense versus the Nifty, and the Nifty India defense segment has really performed well in that sense, and that's a broader theme that we're seeing as well. I want to thank you, Parag Bhai, Kush, Shrikant, for joining us today on the show. Shrikant, you want to quickly come in with what is your top defense stock before we wrap up this segment?
Yeah, I think we should focus on HAL, Hindustan Aeronautic. In last 12 to 18 months, the stock has corrected very well from its high. And now the stock is preparing for the immediate level of 5,000 very first, but eventually the stock can even cross its previous high. So I'm of the view that the stock is really showing a lot of strength and momentum. And if it is going to cross its previous high, that means the defense theme is definitely going to do well in the next maybe 6 to 12 months of time. So we should be buyer in defense, maybe ETFs or basket of stocks, but broadly we should be buyer in stocks like HL very first and Bharat Electronics.
Okay, Bharat Electronics and HAL on your radar. Shrikant, thank you as well for joining us today. Let's talk about Gallantt Ispat. They've reported a mixed Q4 performance with revenue growth driven by higher volumes and capacity ramp up. Before we speak to Mayank Agarwal, CEO at Gallantt Ispat, Varsha joining in with more details.
Well, talking about Q4, yes, there was a revenue growth which was led by, volume spike and capacity ramp up, but there was a margin pressure. This was due to, higher raw material and input costs, and also increase in finance costs impacted the net profit. Talking about the growth strategy, the capacity expansion target stands at around 12.3 lakh, million ton. Rupees 1,500 crore has been allocated for mining integration, and 300 crore is in plan for solar power expansion. Lastly, on the capex program, total capex stand at around 3,000 crore is being executed over the next 2 to 3 years. So yes, triggers are playing when it comes to the Gujarat debottling, and India's steel outlook also remains robust. But yes, margin pressure is one of the key things, which has led to steady or I would say a weak performance.
Okay. Well, Varsha, thanks for that. Let's get in Mayank Agarwal, the CEO of Gallantt Ispat, on the show. Mayank, great having you. Thank you so much for taking the time out. This is Neeraj Shah here. Good morning. And as I read your presentation of the earnings presentation that you guys have given, what stands out is that you seem to believe that this is a decade of structural demand and not a cycle, which is very counterintuitive to how metals have behaved per se, right? It has always been a cyclical product. What gives you this confidence, and where, according to you, are we in that cycle?
So a very good morning to you and to your viewers, and thank you for having me here. So why we say that it is structured and it's going to sustain is that we are primarily into long products, and which is governed by the domestic demand and supply scenario. And with the kind of infrastructural push that we see, particularly in India and also in the addressable market where we are, which is Uttar Pradesh and Gujarat, we see a very robust spending on the infrastructure, which makes us believe that it is structural and it is going to sustain.
So here's the question, right? If I look at what you have done, Mayank, let's say, and I'll use a simple statistic, I'll not use cash flows, so on and so forth. But if I look at what effectively you've done in terms of revenue growth, EBITDA growth, etc., because those are the two key parameters that you want to look for a structural demand play, the numbers should have looked different from what they are looking from FY23 to FY26. You were at 4,057 crores March 2023. You are 4,400 crores growth, but okay. Even on EBITDA front, 3,700 crores, 3,693 in March FY23, 3,700 crores March 2026. What's happening?
So I will explain that in detail to you. When we talk about the volume growth, so the last year we defined the plan of the capex, which your rep was also talking about. And the capex investment started in FY26, which are bound to be completed in the FY25, which are bound to be completed in FY26 in H2. So the volume growth would be coming from that, as currently the installed capacities are pretty maxed out with the capacity utilization at about 86%, although we are targeting to achieve that beyond 90% in the ongoing financial year. But the volume growth would be coming in from the capex on the capacity addition that we are doing. If we talk about the EBITDA per ton and EBITDA overall, there has been a substantial jump year-on-year basis. Where our per ton EBITDA in the last 4-5 years has reached from about 5,000 rupees a ton to the FY26, which is currently 8,800 rupees a ton. that is 17.33% year-on-year basis. So I believe that per ton EBITDA of 8,800 is pretty remarkable as an achievement for the company on a long product.
Mayank, very good morning. Tamanna Inamdar here. Just trying to understand how you see the direction for the EBITDA per ton, because I believe there's this debottlenecking that you're doing in Gujarat right now of your upstream operations. Will that significantly improve your EBITDA per ton metric?
Definitely. Currently, with the total 3,000 crore capex, 1,200 crores is going into capacity addition as well as debottlenecking of the upstream projects, especially products in Gujarat, where we see some improvement that can be done. So the capex is already on way, and it will all be completed in S2. So for the second half of the current financial year, we'll see the impacts coming in for that. Besides that, the 1,500 crore capex that we are doing in the mine development, which is scheduled to be completed by FY28, that is 2 years from now, wherein both the units completely will be fully integrated with the mines, and it would make an impact of at least 2,000 rupees a ton on the EBITDA. So while we are driving the volume growth on one side from 1 million ton to 1.3 million ton, which is 30% in the current FY itself. And it's not a long story that we are talking about. It's a short-term thing that we are talking about.
Describe short-term, please, Mr. Agrawal. When you're saying short-term, what is the time range?
So short-term is all this 1,500 crore investment on upstream debottlenecking in Gujarat, and capacity addition would be completed in S2 itself. So certain units would be commissioned in Q2, certain would be in Q3. So Q3 onward, we will see the complete impact coming in. And going forward, with the mines kicking in, it will further add an EBITDA to the company. So overall, the margins are going to be improving, definitely substantially, while on the other side, we are already driving the volume growth.
Let me just
so
come
the
to you.
future looks very...
Sure. Let me just come to you on the margin point when you say improving substantially, because your margins did get squeezed by 200 odd basis points because of raw material impact, I suppose. Wouldn't that be affected because of West Asia crisis, etc.? What is the margin picture that you're seeing because of the two opposing factors, right? Raw material and import costs or input costs at one end, and then the debottlenecking that you're describing.
So while in the metal industry, we are all aware that the realizations are not in our hand. But having said that, what we can best do is to optimize our cost efficiencies to drive the volume growth, which would ultimately, definitely over a longer period, improve the EBITDA. So EBITDA, when you compare even with Q3 to Q4 in FY26, Q3 was about 7,800 rupees a ton of EBITDA, which has jumped to 8,800 rupees in Q4. And the overall EBITDA also for the entire year has jumped by about 6 to 7% in FY26 when we compare it to 25. So on a year-on-year basis, over the last 3-4 years, we have substantially improved our EBITDA margins, and we continue to do so. And that will definitely improve our EBITDA in the long run. Obviously, in the short run, currently with the raw material prices pressure due to various geopolitical issues will impact in the short term. But in the long term, we feel that driven by the cost efficiencies and the kind of infrastructural spending that the country is doing, we are very well positioned in the two main markets, which is UP and Gujarat, to encash the same. Also, not to forget here, which is very important, I would like to mention, is that the company is completely net debt zero, wherein there is no term loan.
Sure.
And in fact, in the last quarter, we have had some earnings from on the interest side.
Okay.
And this entire capex is being funded internally.
Okay. But I do want to ask about that actually, man.
On the working capital expense.
Sure.
Yeah.
I do want to ask about that because that was going to be my question on the finance cost. Because if you look at that line item in the P&L, that seems to have, to a certain extent, affected the bottom line. So therefore, is that, as you describe, working capital led? Seemingly it is. And while you're setting this up and you're undergoing this debottlenecking, do you expect that that's going to be a little bit of a wobbly sort of a thing, or a volatile sort of a thing, till things settle down over FY27?
No, I don't think so, really. Because, the 5-10% here and there, but not substantially.
So therefore, you don't anticipate that finance. So will you say that will finance costs be more or less in this range in FY27 as well? And you're likely to see net debt zero as well?
Yes, net debt zero. We aim to continue the same because the current capex are already ongoing, as I said, and they are already planned, and most of it we will meet out from the EBITDA.
Okay. Just a last question, Mayank, and I think this will encapsulate quite a bit, because you've described that your margin performance will be better in the second half as a lot of those tailwinds kick in. But if you look at FY27 as a whole, would you say that your earnings are going to be volume-led or margin-led?
It will be on the both sides, majorly volume-led, because in terms of upstream, it's only Gujarat where certain improvements would be coming in at the back end, but broadly volume growth, because the entire 1.3 would be commissioned in H2. So we'll get the half-year benefit there.
Fantastic. All right, Mayank, absolute pleasure speaking with you. Thanks so much for taking the time.
Thank you for having me. Thank you so much.
All right, KPIT Technologies is what we're talking about next. It's posted its fourth quarter results, but it's actually missed estimates, and the stock reacting sharply. Let's go across and, in fact, hand it over to Hiral, who spoke with the management. Hiral?
So as we know, KPIT Tech has posted, pretty inline set of numbers, but I think there is a miss that has come in when you talk about the EBITDA front for FY26. In terms of the constant currency growth as well, we're talking of a number of 1.8% on a sequential basis versus a 1.5% what the company had achieved in the third quarter of FY26. In fact, they've announced an initial investment of $10 million in Cymotive. So that's going to be one of the other talking points. And the FY27 guidance has been lowered on the EBITDA front at 20.5% from a 21.2% as well. Kishore Patil, MD and CEO at KPIT Tech, joins in. Kishore, welcome to the show. Always a pleasure to speak to you. My question coming to you is, you've ended FY26, I beg your pardon, with an EBITDA margin of what? 20.8%. Missing that 21% margin guidance. I know it's a marginal miss, if we can say that. What have been the specific headwinds in the fourth quarter that has led to the slippage? And were there any one-off costs or any structural shifts that you saw?
The first thing is, I think during this quarter, we have been talking about investing into multiple areas, and one of the areas which we have been investing into is AI, and some of the R&D investments we wanted to scale up. I think our R&D investments from about 3%, we have scaled up to about 5 to 6%, depending upon that. That is one reason why it has, to some extent, been in the range, but a little bit less. From that perspective. The second thing I would say that the acquisition expenses have also hit to a certain extent in between. So with these two, actually, it is in that range. I think it's something which we have talked about last quarter. Similarly, it is in the range what we talked about last quarter.
Okay. So let's look at FY27 then, because the guidance of 20.5% to 21.2% is slightly lower if I have to look at the bottom end than the previous expectations as well. Does this range actually account for further integration costs of Cymotive, or is it higher than expected R&D for AI?
There are two reasons for this. First is the currency movements have been really very unpredictable in the recently. I think if you really look at it, has really a significant impact on EBITDA as well as profit. So we don't know how the currency movements will happen. We can talk about constant currency. It's more complex than that because there are multiple currencies come in as we are well spread across the three geographies. That is one point. The second is we will continue to invest into this, and basically we say that it could be more than 21.2%. also. So it really depends upon how the things scale up. So I think at the end of the year, we are pretty confident it could be higher on the basis of higher revenues and etc. That's what we feel. Also, in the medium term, we believe that profitability will be much higher than this.
Okay, so going ahead, profitability is going to be the key from here on. Now, if you have to look at the two major SDV programs, they also end in the first half of FY27, Kishore. And this probably there could be a significant revenue hole that the company will have to plug on the back of this. So if you could help us understand what's the kind of revenue contribution that these two programs have had in the fourth quarter, and do you have enough, shelf-ready projects in account to ensure that the sequential growth does not dip in the first half?
So there are, I can only answer in two ways. One is we have given one statement which says that had it not happened on this side, we would have grown 4 to 5% every quarter on quarter next year. So it shows it's a significant part. At the same time, you can see that the wins for us in terms of 349 million, again, one of the strongest quarter in terms of deal wins recently, as well as a couple of large engagements we announced. And of course, the discussions we are having across, I think that gives us the confidence that it will substantially, make up for this. So of course, we are saying that we will grow. How it will pan out every quarter, how actually some of these deals will, impact us as well. Some of these are the basically depends upon the actual modalities of every project. So that's why it cannot be 100% set. That's why we have said that the first half may be softer, and at the same time, we are saying that we have been in a position to make up for this. So otherwise, the growth would have been 4 to 5% this year. So it means that the wins in the other part of the business they are strong.
Got it. So if you have to look at it from a business perspective, Kishore, with the pivot that's happening from a linear service model to a 50% non-linear solution model is what we are seeing, right? So is there any cannibalization happening when it comes to traditional services for AI-infused solutions? And if so, the kind of impact you could see when it comes to your revenues per employee or even the long-term contract pricing?
So 2-3 things I would say that the first thing is our revenues per person have increased consistently over last 4 years, and we expect it to continue to increase in next few years as well. So revenue per employee will keep on going. So I think that that will be there. We actually believe that the overall pivot we are having in terms of solutions and product actually will be it will be accretive in terms of margins, and as the share of products and solutions will increase in the overall business, that the margins will improve. Actually, that is one of our major levers, and from that perspective, one of the thing in terms of solution is you take the ownership. So actually, you expand the scope. And even in case of the AI world, there is a lot of integration requirements and possibility. Specifically in case of our area, AR&D, there is much more deeper engagement required as an integrator, because you have solutions, you have products, but you also need what you call a deterministic output, which cannot come out of model. There is an infrastructure requirements and the whole integration of the whole system to ensure output. So I think that that's why we see a relatively less impact in our vertical.
So, Kishore, an interesting point that you made about AI as well. Let me pivot to the acquisition that you've made, which is Simotive, if I'm pronouncing it correctly. Why is Simotive chosen specifically when it comes to the AI-led cybersecurity strategy over developing these capabilities in-house? Because your R&D spends are also usually on the higher side. So why this one, number one? And two, the specific revenue or EBIT hurdles that the company will have to actually clear to hit that upper end of the valuation in terms of the acquisition? And what's the impact you're seeing when it comes to the EPS over the next 2 years?
You have asked multiple questions, so I will start from one by one. First, it will have no impact on EPS for next few years. Actually, it may just improve some revenues, but we don't see any impact because the way we structure the deal, till they hit certain milestones, we don't consolidate it, but we still get some benefit in terms of what KPIT as an independent entity would deliver. So I think from that perspective, it has no impact in the next 2 years. See, basically Side Motive, one of our key customers and and CARIAD, which is the software arm of Volkswagen Group, is a important stakeholder, and the ability of Motive to really include their solutions in millions of vehicles there is the really critical thing for us. And the reason we are saying is in the world of AI cybersecurity becomes more important, as well as what KPIT builds the solution, cybersecurity will become more important. Overall, if you look at the software-defined vehicle concept, now it is becoming more AI-defined vehicles. So having this kind of a cybersecurity expertise across the value chain, across the V cycle will be very important. I think that's what we are looking for, providing these solutions to our client.
Okay. And overall, if you have to look at the growth that is coming in specifically from commercial, which is the on and off highway segments, was the growth in the fourth quarter also driven by this segment? And how are you seeing the passenger vehicle segment, develop from here on? Because there is commentary saying that there is a prolonged slowdown that is probably on the cards.
So there are 2-3 things I would like to say. I believe passenger car segment, the overall spend will increase. It could be specific to a certain OEM for a certain time. But if you take a medium term, it is the overall increase is a clear trend. And the only thing is there is a shift in the spend. What I mean is, I think many people think that by reduction spend, which is also not true, but in certain parts of the world, reduction in the spend of electrification will mean that overall spend will go down. That is not the fact. Actually, the spend is increasing multiple areas, but to name 2 most prominent is autonomy, and the second is the digital cockpit. So these are the areas. So the spend areas are a bit shifting, I think, and we see those trend. And if you look at some of our wins, which we have talked about, one of that is the digital cockpit and the experience part.
All right, that's an interesting conversation, but something about the first half not looking good is a template that the street doesn't like. We've seen that in enough earnings this season. KPIT is no different, down about 5% in trade today, in arguably the stock of the morning, but for all the wrong reasons. 709 and counting. Okay, we are in the midst of the earnings season and a host of earnings expected today. Our research team is standing by to list down the key expectations. And Mahima, let's start with Dabur, because FMCG is right up there. What is it that the street is working with? What is the one thing to watch out for according to you?
Right, so Neeraj, overall, when the Q4 business update came out for Dabur, right, it was the expectations seem to be largely in line with what the estimates are looking like, and EBITDA growth will be growing ahead of revenues. Revenue may see a rise of around 7.5%, EBITDA also around 7.7%, and net profit may see a growth of around 10%. Q4 business suggested that there is going to be mid-single-digit revenue growth. India FMCG demand seen growing at high single-digit rate. Home and personal care to grow in mid-teens, and international business will be hit by the Middle East tensions. Operating profit to grow faster than revenues. Now, key things to watch out for, I think for Dabur, the one key thing that we'll be watching out for as to how the new CEO, that is Harjit S. Bhalla, is going to take it forward from here, because we've seen in the last year how new CEOs and CFOs have reshaped the landscape of a lot of FMCG companies. So that's something that I'll be watching out for, especially in Dabur.
Okay, Mahima, what about Britannia then?
So for Britannia, the view is that overall revenue may rise by around 10%. EBITDA may see a growth of 15%. So this counter is going to be performing slightly better than its peers, and net profit may see a growth of around 18%. Gradual improvement in volumes can be expected, but going forward, I think it will be important to see as to how price hikes and calibrated price hikes is what Britannia takes, because Britannia is very careful when it comes to taking price hikes, because they don't want their volumes to get impacted. Plus, overall, I think margin outlook will be something that we'll be watching out for, considering that if they take price hikes, how will that impact their margins? So in terms of Britannia, I think the other thing that is expected is here also the EBITDA is going to grow faster than the revenue growth, and that's something that we'll be watching out for as well. So this is the overall view of what you can expect from something like a Britannia as well.
Got it. Okay, Mahima, thanks for that. Now, Bharat Forge is the next one, set to announce its Q4 numbers. Puneet is here with the key expectations. Puneet, we know that the recent Class 8 truck sales have looked solid. Can they, but that's for the month of April, can the March quarter live up to the rise in the stock price?
Well, thank you for that. Just 4 key points, and as you rightly mentioned, one of them is the Class 8 truck order. Now, YOY, there's been a very strong jump, and for 2026 itself, the cumulative orders are up 110% on a YOY basis. Seasonality month on month is seen in this particular time frame, so it's down from 34% in the month of March, so some commentary there. Second one will be on results. Revenues is seen on a consolidated basis to grow at 18%. EBITDA expected to rise by 15%, but the margins, the percentage will be down by 50 basis points to 16.9%. Largely because of the commodity cost impact. So some commentary there will be something to watch. Profits expected to rise by 30% on a consolidated basis, but that's the second key point. Watch out for what happens in standalone. The revenue growth is expected to be lower, so consol business will do much better in this quarter. And just final 2 key points. After quarter 3, the company had said that the worst is over for them, and hence you saw very sharp reaction post that, and they also said that it's fair to say that the worst is behind us and things are starting to look up both in the domestic and the export market. So that's point number 3. And fourth and final point on what to watch out for has been in the steel business of Europe, which was the loss-making entity, the timeline for that, and defense continues to be one of the promising areas for the company.
Okay, Puneet, thank you for that. So we're setting you up for the day and all the major results which are coming in. The other one, of course, is Lupin. The street is expecting strong earnings this quarter for Lupin, with the US business leading the growth chart. Varsha, what are you penciling in?
Well, every company has a story. Now, for Lupin, why strong numbers are expected? Because of their limited competition drugs which are actually aiding for the company. Now, on to the 4 numbers. Well, revenue is expected to rise 22%, EBITDA may rise 42%. Look at the margins. Margins are expected at 27% versus 23% last year. Net profit may rise 54%. So strong year-on-year growth is expected, though quarter-on-quarter or sequentially you may see some pressure. While onto the revenue drivers, US business is expected to lead the growth. Tolvaptan is expected to support the growth, which treats low sodium in blood. Onto the US business, revenue is expected between $346 to $350 million. Growth will be driven by key generics and the new launches, and the limited competition products will actually aid performance for the company. Onto the India business, growth is expected at 10 to 11%, which will led by chronic therapies ahead of IPM. Lastly, on the outlook, niche launches will support US growth, and India business is expected to remain steady year on year. So overall, a strong set of numbers is expected when it comes to Lupin.
We'll take a very short break, but don't go away. We have an exciting half hour up ahead for you. We're going to be speaking to Gurmeet Chadda on all things markets, and of course, speaking with the brigade management on their numbers and their outlook. Pavitra Shankar will be with us. We'll be right back after this very small break.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open.
All right, welcome back. Markets cooling off. Just pull up the intraday of the Nifty, cooling off a bit in the last few minutes or so. But still in the positive territory. But the sectoral heat map will also give you an idea of what is working. The Bank Nifty also not really firing this morning. Auto stocks are the one which are in action, and we'll pull up the internals of the Nifty Auto, Bajaj Auto, that way leading the pack, and that's pretty much the only one which is giving you some action over there. Hero Moto also looking pretty decent, as is M&M and Bosch. So it is an auto day in that sense, but nothing too much to celebrate. I want to pull up the Midcap intraday, because remember, the Midcap and the Nifty Metal both hit new highs before cooling off. The Midcap 150 is also cooled off a fair bit, so that profit booking coming in, and that really is the mood, isn't it, Neeraj, where that confidence that things are going to move very clearly on the geopolitical front is still not baked in.
Yeah, and for the right reasons, right, Tamanna? Just the number of pushbacks that we've gotten on the posts that have been done, that we are at the end of the war, and the other side has nothing out there. It's unreal. I've never seen a geopolitical situation with conversations and the posts of this nature ever in my life.
So, I think this is geopolitics in the world of social media, because a lot of your information is coming through sources on posts. You don't know half the time, even if the right person is posting, are they an actual representative? So it's getting a bit fuzzy, and especially on the Iranian side, because that nation functions in a very different way.
Yeah, but okay, you've tracked this far longer, but my limited point being, earlier, or in the case of, let's say, in any other conflict that we use, if it was fuzzy because there was lack of information for the right reasons, you don't want to reveal military secrets out there. This is fuzzy because of misinformation being fed on almost a daily basis.
Yeah.
It's unreal as to how this is happening.
I mean, war by reels. Have you ever seen that?
Yeah, exactly. Well put, yeah.
I mean, so it's psyops completely. And in the Iranian context also, that whole leadership is functioning in a very different way. It's been closed off. The world is now discovering what they can do or what they do. So it's all a bit confusing over there. But let's go back to what the markets are doing. And like we said, the markets have cooled off. Some newsmakers that we're focusing on. Citi has downgraded Vedanta to a sell. Sharad is joining us. Details of the brokerage note. What is Citi saying, Sharad?
Well, a big downgrade coming in for Vedanta from Citi, and of course there is a uncertainty now post the demerger regarding the company's cash usage policy and of course the dividend distribution segment as well. And because of that, this downgrade is happening in. From buy, it has gone to sell rating, and the target price is set at 265 rupees per share. That implies a 17% downside from the current levels. Now, more than 90% of this attributable EBITDA is only from the zinc business, and that is where there's a bearishness coming in, because there is a change in the dividend policy, and Vedanta no longer is bound to be there by the earlier policy of dividend distribution. So that is a key concern coming in, and that is where uncertainty could come when it comes to the cash use. Apart from that, the spot LME is also suggesting that Vedanta is currently fairly valued. So concerns coming in from broking houses when it comes to Vedanta.
Yeah, most certainly. By the way, some stocks and need a specific marking. So in Arvind, a deal has come through. If I'm not wrong, that's one of the messages that somebody sent, but 8% higher for Arvind, 420 and counting. Watch out for that. Paytm is a healthy 6% higher, so good move today. And crude sensitives are reacting. Kansai, Nerolac, for example, up 5%. Keep that in mind. The stock which has literally taken my breath away by the virtue of its move is Sterlite Tech, up another 5% today. They are now investing about $100 million in the US as well. But it's not about just the 5% up move today. Look at what Sterlite Tech has done in the last 3 months or the last 6 months, from a 150, 160 price to currently about 350, or currently 358. That's about 100. In 6 months, it's a 214% rise. This is when markets by and large have sulked. So quite interesting as to the move that has happened there. And Tamanna, we're talking about Vodafone and what it is doing. SpiceJet is not doing badly either, up 5% today.
ATF relief for all airlines. I want to see what Interglobe is doing as well. So SpiceJet, Interglobe, let's look at those. 5%. SpiceJet is on a upper circuit today. Interglobe cooling off a bit. So possibly ATF relief is one of the factors which is looking at. Even we should look at Kansai, Nerolac, Asian Paints, Indigo Paint, some of the paint companies as well, as you have that relief coming in from crude. So crude sensitives will be one big, I would say, factor to look at. But if you're looking at some other stocks, we were talking a short while ago about Hero Motors, and look at what Jefferies is saying. They've upgraded to hold from an underperform. Big upgrade come from Hero Motor, even when Bajaj Auto is in focus. And we should do a split screen with Hero and Bajaj on both sides of it to look at that stock price. Bajaj Auto also, of course, numbers, and then plus that buyback coming in, which the street always likes a buyback. But as far as Jefferies is concerned on Hero Motor, they've upgraded to a hold from an underperform. Target price set at 5,000 rupees. That's actually lower than where the current market price is. But the way they describe it is important. They're finding a trough. The two-wheeler demand is holding up well and expect 8% industry volume CAGR over FY26 to 29. Hero continues to face adverse demand profile shift, but has regained some market share. EV franchise is improving as well. Valuation is reasonable and 4% dividend yield is attractive. Let's look at Hero and let's look at Bajaj while we're talking about it. TVS is the other one that we should pick up as well, and just take a look at what's happening at that stock. So auto sector and especially two-wheelers in focus this afternoon. So that becomes one key segment. What's surprising is that banks are not holding out at all. Maybe some of that priced in yesterday after the emergency credit guarantee scheme buffer that they've got.
Just what I think Kush, Shrikant and everybody else is saying, that this is the trajectory of the bank Nifty is looking so weak, and one trigger needed, but maybe that credit guarantee scheme wasn't a trigger enough. But Tamanna, you pointed a very nice bucket of stocks, which is the paint companies, because one is Kansai Nerolac, which is doing well. Nuvoco Vistas as well is doing reasonably well for itself. So clearly that piece of the pie is looking okay. Some brokerage names are interesting ones at that. So Aptus has one, and Investec has a note on Aptus. They have maintained a buy with the target price of 315. They say growth resumes in Q4. Strong disbursement growth was seen, and AUM was up about 21% YOY. Disbursements grew about 17%, and profit after tax was broadly in line with estimates. But asset quality has improved, and valuations are cheap for attractive return multiples. Maybe that's why the stock is up 5%. On cue, Gurmeet Chadda with us to talk about his thoughts on the markets and the way ahead. Gurmeet, thanks so much for joining in on a short notice, must say, so really appreciate your time.
Most welcome.
Gurmeet, while the broader war overhang remains and the Nifty is sluggish, the broader markets have hit highs today. So if you are in the broader markets, you've come back to the normal bull market that you were in. Is that a right way to think of it? Or is this something that could correct?
Needed selectively, yes. So if you, for example, were in energy space and power equipment space, you are actually probably better off than what you were, let's say, 6 months back. If you rightly positioned in defense, that space has done very well. If you've also picked up consumption names where especially food and beverages segment, look at Nestle's number, look at some of the other commentary which is coming, you have done well. But let's say if you've been, and maybe if you take Bank Nifty's move in last few days, maybe that as well. But if you are still in a little bit more in oil sensitives, I think consumer durables, etc. So it's been a bit of a mixed bag, and that's where I think it becomes very tricky in this market. I think one concern which is there is that FIs are still big sellers. Yesterday also we saw 6,000 crore kind of a selling. I think YTD they are already $15-16 billion out of India, and this is coming when globally flows have been very good. Just look at Kospi, look at Taiwan, look at some of the emerging markets. So I think the pressure now is more supply side, and I think the market is now factoring in some kind of a resolution happening over the next few weeks. But it's this supply pressure, I think, which may keep things under check for some more time.
Gurmeet, I'm wondering if this is that moment that investors will look at in hindsight and say, did I miss this moment? Because those opportunities are coming in fits and starts, right? Unlike a COVID where you had a very clear crash down and then, if you had the guts to take a contrarian view, you would. Here, those opportunities are presenting themselves in little flashes and bursts. Are we looking at some of those opportunities right now from a 2-year, 3-year perspective?
Yeah, 100%. Just look at the way, as I was telling you, the entire power equipment space has done. If you picked up any transformer stock, you would have made 30-40% in last few weeks. You would have picked up any good transmission distribution name, whether you were in Hitachi, GE Vernova, whether you picked up a cable and wire name like Polycab or KEI, or you picked up something, even in some of the PSU names in renewables, I think you would have done well. Polycab numbers were phenomenal yesterday, and management guided for better growth. Even the FMEG segment did well. So I think it depends upon your position. Similarly, if you were in tier 2 banks and PSU banks versus HDFC, ICICI, you have done a lot of good work in terms of to your portfolio. So I think it's a market where it's rewarding earnings, it's rewarding good guidance, and it's punishing subdued performance despite valuations being reasonable. So IT, because the commentary was so weak, despite valuation comfort, stocks haven't done well. And you have somebody like a Forge delivering good set of numbers, valuations being rich, and markets rewarding. So I think the only hedge now is good earnings and good outlook, and that is how the market is getting positioned. I also think at some point of time, some bit of unwinding may happen in the AI trade. It's becoming too stretched in my view. I may prove wrong. Markets can always make you look stupid in the short run, but it's getting stretched. Look at Kospi, 40% movement in a month. Look at some of the Korean stocks, look at some of the other names. I think it's too sharp a movement. I think some distribution will happen. And that's when probably, assuming oil prices remain low, you'll see a broader participation coming from some of the weaker names as well.
Are you liking what you're seeing with the auto space, Gurmeet? Especially the two-wheelers?
Oh yes, we've been overweight auto. We have TVS in the OEM space. We have Sandhar Technology, which we added a weight more, where 60% portfolio is more two-wheelers, 40% is four-wheelers. Sandhar is the biggest supplier to TVS, almost 55%. And they are now all 3-4 verticals are doing well. Fabrication is doing well. Log division is doing well. EV portfolio is shaping up nicely. So that's one stock we added. We added Lumax. That's very well. It makes LED lights largely, and that's also done well. Off late, we have added one very small auto ancillary, which is Rajratan Global. They make bead wires for tire. The stock got battered in 2022 post-COVID after their Thailand business got impacted by Chinese dumping. That business has stabilized. They've set up a new plant in Chennai, which will contribute another 50-60,000 tons this year. So, good operating leverage kicking in. And hopefully with broader auto demand remaining good, I think this should do well. So I think in our auto ancillary mobility portfolio, we must be about 18% roughly in our portfolio.
Gurmeet, what is it that you would look to get off the train in, presumably in the broader end of the market? Because this has a rising tide, it has carried a lot of boats along with it. Not everything is going to benefit. In fact, some things might get impacted badly because of higher crude and otherwise.
So Neeraj, as I said, I agree with you in terms of fundamentals. But as I said, wherever earning momentum is good, market is rewarding it. So maybe the energy portfolio you may want to trim a little bit. Let's say, for example, if oil prices come off and they come off durably and not just intraday, maybe some of the oil sensitives you may want to shift some weight. Because the energy portfolio for us is like 22-23%. So maybe take off 10% because you made 30-40% in few names. And get back to things which are still beaten down. Maybe selectively chemical names, they are showing some signs of pickup. Selectively some names in, for example, somebody like a Reliance, which hasn't done well because of the pressure on polymers. Recycling, circular economy. For example, we have had a notification from the government on 40% mixing of recycled plastics. In PET bottles. We have a critical mineral mission in terms of recycling of critical minerals and resources. So some of those names, which are not as much in flavor and maybe in some cases out of flavor, you may want to get in. As I said, provided, see a durable reduction in both in energy prices and, in terms of shipments from Hormuz.
Okay. Talking about the West Asia crisis, one sector which seems to be sort of an indicator of what is happening there is real estate, and sometimes it tends to move in tandem with whatever is happening geopolitically. A bit of a mixed bag in the Q4 numbers. Gurmeet, what has been your takeaway?
I'm a little worried, Tamanna, to be honest, because if we are talking of negative hiring by IT services companies, this will have an impact on commercial space as well. I think I'm seeing a lot of startups struggling now to raise money round 2, round 3 and series B, C, and that they were bigger acquirer of commercial real estate. And then it has a trickle down effect on discretionary consumption, higher end discretionary consumption. So especially the mid luxury segment may get impacted. I think the mass segment will continue to do well. So we are in a very uncharted territory where probably you have a blue collar boom and a white collar slowdown. So, if you see the biggest openings, if you see job portals, they are electricians, welders, commercial truck drivers, mechanical shop floor workers, right? And maybe the bottom of the pyramid does well. So I think you probably need your consumption portfolio to reflect that. Be a little more towards the lower end of the consumption. Look at something like Meesho, for example, doing such well. Some of the good platform plays. You saw FMCG businesses reporting good numbers at the lower end. And maybe, get a little slow on high-end discretionary, which is, let's say, luxury real estate and others. So that's my thought. It's a little early to comment on that, but that probably seems to be the case where you will have a bit of a blue collar boom.
Gurmeet, thank you so much for joining us. It's always a pleasure to have you on and, to hear the clarity that you bring to everything that we ask you under the sun.
Thank you,
Gurmeet Chadda there. But since we were talking about real estate, just building on that, we're focusing on Brigade. Brigade's Q4 numbers were softer than expected. Sharad is joining in to give us a run-through of the operational metrics before we get into that conversation with Pavitra Shankar of Brigade. Sharad.
Well, that's right. For Brigade Enterprises, the overall weak set of numbers have come in. But what led to this? There are two key reasons for that. The first one is the pre-sales numbers. They were lower than what the street was estimating. And remember the cash flow segment, that has also been a concern. The operating cash flow, to be precise, that's down 34% on a year-on-year basis. And this is because of the higher construction spends and the overheads coming in. Overall, the numbers have been impacted due to the overestimation of the launch pre-sales which were there, and of course some collections were also on the weaker side. Hospitality also, the segment that just grew only 5% on a year-on-year basis. So a little bit of concern is definitely there on the counter, and that's why we are seeing a sell-off, at least in the opening session.
Yeah, I'm going to just take that to Pavitra Shankar, Managing Director at Brigade Enterprises. Pavitra, thank you for your time and sitting down with us on your results. I think if I look at your pre-sales Q4, they look pretty robust, but on an annual basis, it's underperforming versus what analysts were penciling in and some of your guidance as well. How do you see the entire picture?
Hi, good morning. Thanks for having me. Yes, we did manage to get a good Q4 in. We launched 4 million square feet. On the residential side, we sold around 2,500 crores of pre-sales, which equated to just about 2 million square feet. But yes, for the full year picture, we did see that we weren't able to get to where we would have liked to be. A lot of that was due to our launches getting back-ended. Some of the approvals did not come into the financial year as we would have wanted it to happen. We did manage to salvage a couple of those launches though, and that reflected in Q4, whereas the first 3 quarters we didn't have much of launch activity at all. That said, our sustenance sales did do well, and which is why the overall year is still, looking quite okay, considering that the last few years, at least 40% of our numbers has come from new launches. This year, that contribution was less, but the overall, contribution from sustenance was good. So I think in terms of on-ground demand, things are still looking all right. And, we are positive about the launches that we have upcoming as well. We do expect some of those launches that are coming into H1, to do well. But even in the upcoming financial year, we have some dependency on, new launches coming in to the pipeline.
You've actually, Ms. Shankar, hit on exactly what I wanted to ask, because I'm assuming from what you've said that the margin squeeze, the net profit drop is all because of the delay in these launches and the permissions which come in. Isn't that a problem that can persist?
So a couple of things there. The margins that you're talking about are actually reflecting revenues and which happen at the time of registration and project handover. Okay. So it's not related to the pre-sales numbers. The pre-sales are more of a leading indicator, what we might expect to happen over the next, few years after construction has happened. But on the margin side, it's really the projects that are getting registered and handed over today. Those were those were sold at slightly lower rates than what we have today in terms of an APR. So the margins for those projects are a little bit lower, and that's what we are seeing today. But on the pre-sale side, a lot of these projects, or most of these projects, are happening at much higher rates than we sold, say, 4 years ago. So in future, our margin outlook is much better than what you're seeing on ground today.
Pavitra, good morning. Neeraj here.
Hi, Neeraj.
You are visibly trying to change the, the texture of your company from being a real estate or a flat selling company, if you will, if I can usually put it, to having multiple streams. Is this diversification a strategy to effectively counterbalance a slowdown in one of the segments with the other? And how does it start looking, let's say, 12 months or 24 months out, the different segments in percentage terms, if you will?
Actually, Neeraj, we've been a diversified company from a domains business, like from a residential, yes, office, retail, hospitality perspective. I think for our last 40 years, this is our 40th year. The last 5 to 6 years have seen a dramatic ramp up on the residential side, and naturally that is because of all the opportunities that were there for that on the residential side. We are entering into a capex cycle on hospitality and commercial. So yes, in the next few years, you will see a lot more contribution from, from a value perspective on both the hospitality and the office side of the business. Residential will also increase, but all these 3 different segments have their own market cycles. I think real estate or the residential side, we've seen, a fantastic, cycle for the last few years, and we do see that stabilizing. And the office market as well has done well, and we are now positioned to put a lot more focus and capex into our office portfolio. Hospitality, as you know, that entity listed last year, and we do have an expansion plan there as well, adding, another 1,700 keys to an existing operating portfolio of 1,600 keys. So, we have always believed in the diversified business and continue to go in that fashion. I think what we're seeing today is just a blip in terms of launches not coming in to Q4, and we will see that normalize over the next financial year.
Through the year, it will get normalized, and you're not facing any issues with regards to the clearances from the authority as well, right? Because at this time last year, that was an Achilles heel for you and multiple other developers in that region.
I think the approvals environment has continue to be a little challenging compared to historical for markets like Bangalore. I think in Hyderabad and Chennai, there is a little bit more predictability. There are a lot of changes in Bangalore in terms of, the local authorities. Some of the rules are constantly changing. So from that perspective, it's less clear than maybe what we were used to in the past. But I would say, we are expecting things to still remain a challenge. So, we are working hard to see where we can constrict some of those timelines and, work with that. So we're not going with a rosy picture in terms of expecting things to happen sooner than they possibly can.
Talking about the picture ahead, Ms. Shankar, some concerns about whether it's going to be less rosy, especially for commercial real estate, with what's happening with IT jobs and looking at the concentration of where you are. I know you will say GCC opportunities will replace some of those job cuts, but on balance, isn't that a headwind that you are possibly preparing for?
Yeah, I think on AI, it is a developing situation. There's a lot of conversation and, thoughts about impact, which part of the workforce it's going to impact. I think it's definitely something that's disrupting. We are keeping a close eye on it. Whether the jobs are going to shift from IT to GCC or even within GCC. That said, there are still a lot of new GCCs entering the market that are AI first and AI driven, and we're still seeing opportunities for those GCCs to expand. Even in markets like Chennai and Hyderabad, which are our newer markets compared to Bangalore for us, we're seeing pretty strong demand on ground. I think it's developing. We'll have to wait and see. Ours is a sort of, longer term business that is reacting to short term news and short term, discussions on this. But we will see how it pans out. If there's any one thing, we are, a long-term player. We're looking at still, building high-quality developments, mixed-use developments, which I think are, what do well when it comes to flight to quality. So from that perspective, we are still very much geared up and positive about all three markets where we are.
Thank you so much for coming in today and answering all of our questions. We truly appreciate it. Bhavita Shankar there of Brigade.
Thank you.
And as we wrap India Market Open today, I wanted to highlight this story. This really caught my eye, Neeraj. And there, the visuals on your screen. Look at that. That's a humanoid that South Korea has introduced. It's its first humanoid robot called Gabi. And they actually had Gabi take the oath and go through all of the procedures to become a Buddhist monk. I thought this was stunning. So futuristic and stunning, but this is happening in this day and age.
Yeah, and I don't know if purists say that, oh, this is bad, but this is fascinating stuff, Tamanna. This is fascinating as to where we are going on this line.
Yeah, the fact that there is a humanoid is fine. Now we are seeing versions of that. But this inculcation into culture and religion and humanizing the humanoid, I thought was very cool.
Your and mine future best friend could be a humanoid.
You never know. I think for a lot of people, their AI chatbot is someone that they talk to more and more. Maybe not in India yet, but around the world, that's happening more and more. Well, we leave you with food for thought as we take a very quick break from Neeraj and the team that put the show together. Thank you for watching. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Economy, business.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri, joining very shortly by Mahima as well. But before we start taking all of those, a very quick check of what the markets are doing, because another important session where you saw multiple key earning reactions today, and Bajaj Auto was definitely one of them. So you've seen a recovery back again from the lows for the Nifty 50, now above 24,300 yet again. Taken across from the dash that we'd seen essentially in the last hour of the trading session. But also the other aspect that, let's look at the heat map now, also giving you that perspective. Bajaj Auto, I spoke about a big buyback announced by the company in its 100th year. So they've distributed all of their profits for FY26, and that will be by dividend and buyback. But HDFC Life is now the top Nifty gainer, Bajaj Auto in the top two. So is Mahindra and Mahindra, continuing their momentum after a strong set of earnings for quarter four. Apart from that, we've seen Titan being slightly under pressure today. So is Sun Pharma as well as Adani Ports, Indigo and TCS. Those are some of the other ones. In terms of sectoral heat map though, we've seen, in terms of the sector that's doing well, auto continues to be that the second consecutive day. Yesterday was led by reactions, what we saw on Hero MotoCorp as well as on Mahindra and Mahindra. Today, Bajaj has taken that baton and doing very well in trade today. India Defence as well as energy are some of the other sectors that's doing well, but majority of them being in the green today is something that we'll take with both hands at this point of time. And quickly, the advanced decline ratio as well now has been largely positive, a 2:1, a 3:1 ratio that we've been seeing today as well. Very decently, of almost 1,850 stocks that are advancing in trade today as well, versus the declines of 736, almost 2.5 times are the ones that are favoring the advances as of now. But also the individual names, the BSE 500, because we saw some reactions coming in on Shree Cement early on in today's trading session. But barring that as well, a lot of result reaction today. Embassy Development yesterday was up 20%. So is again on the back of that NCLT update that's benefiting the company. So another 20% today. Tejas Networks is is moving in today's trade yet again, and so is Godrej Industries, Rosari Biotech, Orient Electric, as well as Aptus Value. Now Aptus also buzzing on the back of results. The brokerages maintain a positive view on this counter, while largely KPIT Tech has been disappointing. Brigade, we just spoke to the management on India Market Open, as well as PB Fintech down. It's a decent result from PB Fintech, but still down in trade today as well. But as always, it is Thursday. Let me welcome in Kush Bora, founder of kushbora.com, now in the studio, as well as Shaina Mukaddam, independent market expert on the fundamental side of things. Both of you, thanks so much for joining in. Let me start and go across, take the first query itself. This one is coming in on a recent listing, on Central Ministry Planning, which is of course one of the key subsidiaries of Coal India.
Our viewer Radhakrishnan from Kochi has bought shares at 162, and his query largely being stocks up over 214 rupees now. Is this a good time to buy more or hold on to his existing holding? Shine, I know it's a very recent listing, but any view that you have on this or on the space?
No, I don't have any. I don't track new listings.
And anything on Coal India that you feel, because the results were quite decent actually in terms of the quarterly updates that they also given. Anything on this one?
Yeah, Coal India is a dividend play. So as of now, yes, one can hold it and then review it maybe a couple of months down the line. But as of now, it's a hold. Coal prices are also stabilizing, and we are talking of increasing production also, which had seen some bit of a dip in the last couple of quarters. But I think there is going to be some up move in that. So it's a hold as of now.
Got it. Well, the next question, coming in now, it's on what we've seen on Sterlite Tech at 195. And Kush Raghuram Patro from Bhubaneswar wants to know if he should continue to hold on to this in the next 3 to 6 months. What's your view?
First up, a very good morning. What's the buy price again?
195.
Wow. I mean, he should go out and party. I mean, in a market like this, if you're making these stellar gains, kudos to you. But as you would have already guessed, my suggestion would be to book partially, maybe at least about 25 to 30%, because the momentum is still very strong. Of course, it's overheated on the daily and the weekly setup, both of them. But, the momentum's strong. The volume's also fairly healthy right now. So yes, don't let go entirely, but enjoy some profits. Take about 25 to 30% off the table. For the rest of the quantity, you could keep stop losses near the 330 to 335 range.
Got it. Well, take across now the next question. That's the view on Sterlite Tech. Results will also actually not have bad for this counter. But next one that's coming in is, from Sanjay from Bangalore. And Kush, this one's also for you. He is holding IRFC at 134. Now, we've discussed the stock previously, and he was also aware of that. So his question is, stock was at 87 in the month of March, hit a low, currently trading about 106, and his buying price is 134. So would you recommend him to continue holding this counter? What's your view?
So the query is very well framed, and he's been tracking this very closely, obviously. But this is not something that was doing well even before the war started, and the markets and a lot of stocks crashed, right? So my suggestion, I think you should start exiting this gradually. There is an up move, in this one, but as you can already see, there is resistance also building up. So I think 108, 110, it's the immediate resistance. My suggestion, just to give you that chance of, reducing your losses, hold with a stop loss at 102. That's the immediate support. But as it crosses 110, 115, those levels, start exiting gradually. Don't wait for your buy price.
Got it. Well, taking on the next question now, and this one is coming in on Aptus Value. Ambika from Chennai is holding on to shares of almost 850 shares, but she's bought it at 198. Let's pull up Aptus Value. The earnings were pretty good, is what she's highlighting, and Brokerage also continue to maintain that positive view. But Shaina, what was your recommendation in the medium term for this counter? Is it one of the preferred plays in the housing finance space?
Well, in terms of valuation, it is quite reasonable as of now. I would say that given the overall, space which is likely to do well in the coming year, valuations at about 3 times price to book, which is, in my view, okay for the size. It's pretty small compared to the rest of the pack. So I would say as of now, it's a hold, and you can review it after a couple of months. But yes, you can hold it now.
Got it. Well, the next question now coming in. This one, it's on Star Health. Now, our viewer Biswajit from Kolkata is holding on to these shares for the last 18 months at 509, and essentially hasn't gone anywhere. It's recovered from the lows, but has been a weak one at that. He wants to hold for 2 years or so of future prospect. Kush, I'll come back to you on this one, is because it's a very interesting chart. He's holding because 4,000 shares, and hence the view. But China, on the fundamentals, quarter 4 was a surprisingly good quarter. Any view that you have on Star Health now?
Star Health also, the numbers were quite decent. Of course, on a sequential basis, there was some bit of a, I would say a flattish type of numbers, but on a Y-to-Y basis was good. And I would say even at current levels, it looks decent. So we need to hold it as of now and track it a bit more closely to see how their growth happens over the year.
Kush, because Star Health, we saw that, downtick at reach almost 400 yet again, and then has seen a buying again from March end levels. Do you think it's sustainable on the charts?
Puneet, a small anecdote. I had attended an event about 2.5 years ago. Okay, where I spoke to a lot of fund managers, and they said, how the entire sector is very well placed, and this stock in particular is so beautifully placed, right? And it's still not done well, even when it had market preference. It did not do well. Yes, you've seen some kind of recovery, in the last month, 2 months, 3 months, but that's the kind of space that, that's the kind of move a lot of stocks have seen. I really wouldn't suggest holding on to this for a long time. SBI Life in this space broadly, I know this is health, that is life is slightly different, but if you want to stay in the insurance space broadly, but I would suggest it's a good idea to exit right now. It's been a rank underperformer. The rebound that you're seeing is from deep oversold territories. There will be supply pressures that, at the higher levels. So my suggestion, if you have it, exit. And as a fresh buy, I really don't recommend it unless, some key resistance levels are taken out on the upside.
Got it. Well, keep Star Health, on your radar and a view both from the fundamental and the technical aspect for today. But let's go across and take a caller from Vijayawada. And Aruna has a stock query for us. Aruna, very good morning to you. What's your query? Hi, Aruna. Can you hear me? We seem to have not been getting any response from Aruna, but we have a stock query, a very topical one at that, because we've seen that big reaction coming in on Voltamp as well. But what would you recommend here? Shaina, she wants to enter into transformers and rectifiers. Actually kind of like a horrid result, right? From Voltamp, stock was down 20% as well this week. Any view that you have on that space, and is it a right time to enter Trill?
Well, Trill has gone through, has had its, I would say a space where it corrected substantially. If you see in the last, couple of, I would say months itself, because of some negative news that they had. But I would believe that the numbers were quite good, and the order book is also good. So at current levels, I would say one can definitely hold. It is not very expensive. It's a small cap stock. And in fact, even Voltam, I think in terms of potential going forward, even there, it is there for the overall sector, including Voltam. So I am positive on this space and including both the stocks.
Got it. Well, that's the view coming in on Trill as well as Voltam. Voltam, of course, showed us, but Shaina, actually just a follow-up, because that 50% decline in profits, you feel that it could be an interesting opportunity even to look at post the correction, or anything that you heard in the con call, or a view on the results?
Actually, the correction has happened quite sharp. And there was a bounce. The numbers were pretty disappointing, yes. But I think given the opportunity and given the order book for the overall sector as well as for Voltam and transformers and rectifiers, I think over the next 1 odd year, as they improve their overall efficiency performance, and there is some bit of raw material pressure that is impacting the metal pricing, that is impacting them for the shorter term. But I think once that is sorted out, I think these stocks should do well over a period of time. And both of them are small caps. So I think to that extent, that segment should outperform once we have stabilization in the overall raw material costs.
Got that view, Shaina. But let's go across, take the next question. This one's on Crompton Greaves, Kush, and Ashok from Ludhiana, who is a regular viewer of the show. So thanks so much for that, Ashok. And for sending in your query as well. He is holding on to 1,800 shares bought at 312 and asking what should he do with this counter now?
Yeah, not a bad buy. It's just the price that is slightly elevated. I like the moves on this one, especially what it's done in the last 5 to 6 weeks. Of course, it's had a little up and down here and there, but on the whole, the trajectory is positive. Volume accumulation very healthy. Last 2 sessions, including today, by the way, it's taken out the 200-day moving average after resisting there for some time. So, like I said, not a bad buy. It's just that the price is slightly elevated. Hence, I would suggest a hold on this one. Keep your stop loss at the 275 zone. That's the 200-day moving average. So maybe just under that or thereabouts. And on the way up, the immediate resistance is actually at 320, and any meaningful resistance after that comes in at 345, 350. So yes, you might want to put a stop loss at 275 and keep trailing it as the stock moves higher.
Got it. Well, that's the view coming in on Crompton. The next question is coming in from Mr. Fernandez, and he's holding on to Sirma at a very attractive buying price of just 587. He's held on to 50 shares and wants to hold for the long term, asking if he can add more at this level. Shaina, He most certainly got it right at 587, but the stock's not cheap now in terms of versus the other peers as well. I think that the discount is kind of gone now. But would you recommend him to enter now, wait for some more time, just look at how Q4 pans out?
Yeah, I would say so. Better to buy at a slight dip because the rally has been very sharp and valuations are on the higher side. While, of course, the longer term in terms of the EMS space is pretty strong. So yes, you can buy, but I would say better to buy it at slight dips because of the sharp run up we've seen. I would say closer to about 900, 950, if at all you see that sort of levels, that would be a good space to add it.
Got that view. Stocks up over 50% in just the last 1 year, and we'll of course be speaking to the management this time as well on Q4 on how it pans out. But Kush, the next question coming in on LIC Housing Finance for the last for a short-term view, a very 2 to 3 month view is what Puneet Saxena from Ghaziabad is highlighting now. It's one which I know that you don't like trading on the result day. And has been very undervalued in that sense, but what would you recommend?
Incidentally, just this morning, Parag Bhai and everyone, we had this conversation about LIC Housing Finance. Looks good. Yeah. Looks good. If you see the last 7 to 8 weeks, it has had consecutive gains. The volume's also fairly healthy. My suggestion, you should continue holding on to this one. This entire space, by the way, is doing well. Again, other housing finance is something that Parag Bhai mentioned. India Shelter today was my call. So some of these stocks are, as a pocket, starting to do well. So you'd want to stick with that. So yes, LIC Housing Finance does look like a good buy and a hold from here on. 630. Is the first level on the upside and 670 is the second one, and I would suggest a stop loss slightly deepish, close to the 550 mark.
Got your view on that, but the next question coming in now is from Rohit Jain from Bangalore, and his question largely being shine on Bharti Airtel, bought at 1760. He's holding on to 30 shares, so he's currently in profits but wants to add 100 more. Now, Shaina, it's a very interesting play, right, for Airtel, because you have that kind of cash generation also coming in, and potentially now still no price hikes as of now, but that could be in the next few months, few years, that we'll have to find out. But what's your view on the stock now?
Yeah, I think, this is one of the stocks that you could have in your portfolio for the longer term because the telecom is a very important sector. Bharti is a very important player there. Having said that, I would say that, the stock is likely to show some bit of consolidation given the valuations not being cheap. So to add further, I would add it closer to about 1,700, 1,750. Wait for slight dips and then add.
Got that view, but time now to just dive into the BSE F&O setup, and Sharad is joining us exactly to do that. Sharad, over to you.
Thanks a lot for that. And right now we're seeing a good technical levels also of most of the indices. We're seeing a good buying coming in, at least in the broader indices. Over here we see for Sensex we have M&M, Trent and NTPC doing the trick. All the three stocks above 1%. What's not working is definitely a little bit of profit booking coming in when it comes to Sun Pharma, HUL, TCS and Titan also makes it to the list. But still we could say it's a narrow range bound move happening with a positive bias coming in. It's a stock pickers market, and let's see what's there. Long build up, what are the key positions looking like? And Polycab is doing well. The cable wire space, the numbers are really strong, and we are seeing across basket buying happening in this segment. And right now we are seeing that for Polycab also near that 8,900 mark. Paytm on back of earnings, especially on the core business front, that is where the bullishness is coming. Concall also came in, stock up almost 5%. Let's also look at the short build up. We are having KPIT Tech, earnings impact is definitely there. Some positions are being changed here, and Godrej Consumer, we can say largely the numbers, especially the PAT and EBITDA, did miss the street estimates as well, and we'll of course exclusively get you more conversation on that. Long unwinding continues for BPCL and Oracle Financial Services, each falling around 2 to 3% And lastly, I'd like to point out the short covering candidates. REC makes it to the list. After that, of course, Bajaj Auto is also there. So these are the stocks which are buzzing in the F&O space.
Well, thanks so much for that, Sharad. But Morpin Labs is the other one that we are looking at, and Satyanarayan Bhatt from Bangalore is holding on to shares at 60 rupees per share. So he's currently sitting on a loss. Kush, he's been holding on for more than a year. Stocks climbed from that low of 33. But what's your recommendation on this one now?
Yeah, not looking too strong, by the way. Multiple attempts at crossing this 45 zone and even 47, if I just extend that zone, they've fizzled out. The primary trend for this one actually has been negative ever since mid 2024, not even late 2024, where everything started to drift down. I'd actually be curious, why did he buy this? Was it more of a hope trade because the stock had fallen quite a bit? But anyway, right now, if it doesn't cross 47, then I think this negative biased consolidation, time-wise consolidation would continue for some time. I would suggest a stop loss at the 40 mark. Once that is broken, the structure could weaken and you might want to exit. So for now, hold, but keep a tight stop loss at 40. And on the upside, look for 47 being crossed.
Got it. Well, got that view, Kush. That's on Morapan Labs. Something to watch out for. But let's go across. Take our next caller for today. It's coming from Srinagar, and Asif has a stock query for us. Asif, very good morning to you. Welcome to Ask Profit. What's your query?
Good morning, sir. Good morning, sir. I was asking for Rashi Peripherals. I am holding currently 1,500 number. Bought at 460.80 something.
Okay.
Currently, stock is trading at 513.14. Should I book profit or wait for long?
Got it. Well, and Asif, any particular reason? And I think we were speaking to you for the first time, so thanks so much for calling in. Appreciate your time. Any particular reason that you had bought this counter? I know it's a recent listing, but was it a fundamental view that you looked at the results because you're sitting on decent gains right now?
I was just the dip that came in the first week of March.
Yeah.
I just entered it with the hope that it will go to 500. It will go to 500 or at least to 476.
Got it.
Then I waited and hold it, and now it is making a type of double top pattern at 550. Should I book it or wait for long?
Got it. Well, Asif, firstly, many congratulations on buying it, and what your thesis was has come true with crossing 500. But Kush, what would you recommend to Asif now? Was he smart enough to buy it? Should he continue to hold?
I think the smarter decision was to hold on to this one. But Puneet, it just so happens that this morning we were talking about the word hope being repeatedly put into the conversations, and I hear that again in Asif's commentary as well. But Asif, kudos to you. Good buy. Holding on to this one is an even braver decision. Now I would suggest is a good time to book partial profits. Book out 50%. It's overheated on the weekly setup. Definitely overheated on the daily setup as well. So you might want to take some money off the table. So book 50% for sure. Rest of the quantity you can hold with a tight stop loss at 500. Any kind of dip towards that should be taken as an opportunity to exit completely.
Got it. Well, that's the view. And Asif, hopefully we keep hearing from you yet again on your stock related queries, and hopefully this advice helps you. But another question now, this one's coming in on Bharat Forge. Now, Anjali from Bangalore, and we've got this quite a bit today, Shaina, that she is following the counter. She knows that the results are going to come today, and asking if it's a good time to enter. What would you recommend here, Shaina? Because the last quarter was a very big surprise. Very strong commentary came in from the management that this is the worst that they've seen is over. What's your view on the stock now? Is it a good pick or a slightly more overheated run up against before we could see those material gains come in?
Well, yeah, there could be some bit of softness in terms of the growth because of, the demand in the American market for trucks and the supply issues, as well as some raw material and transportation costs. At the same time, I think, given the size of defense orders that they are getting and the potential going forward, especially with the Middle East issues settling, I would say hold it through the numbers and hold it for a 3 to 6 month view and then review it. But I think as of now, it's a hold. It could see some bit of consolidation, but this is a stock you can continue to hold.
Got that view, Shaina. But Shaina as well as Kush, it's now time for the rapid fire round in this edition of Ask Profit. You both know the drill. First question coming in from Ravi from Hyderabad on Vari Energies at 3525. Shaina, should he continue to hold?
Yeah, it's a hold because the sector is doing very well.
Lalita from Bangalore has bought into Trent at 4,300. Should he continue to hold or average down?
No, don't average, but yes, you can continue to hold. Stop loss at 4125.
Got it. Ramesh from Bangalore has bought into Suzlon on 955 shares at 61 though, and asking what he should do. Should he book out Shaina or average down right now?
I would say just continue holding. I wouldn't suggest averaging as of now.
Got it. The next question coming in is from Murthy from Vishakhapatnam, holding on to Jain Irrigation Kush at 40 rupees. He's holding 500 shares. Should he continue to do that?
The stock's really not done anything, just that it's very close to his buy price and moving higher. So I would suggest a hold with a stop loss at 33. You might want to start exiting just above your buy price or close to that.
Got it. Well, Raju from Tirupati holds Vedanta after demerger at 276. Shaina, would you just recommend him to hold on, see the other players come in, or exit?
Well, Vedanta, as of now, the major holding is in Hindustan Zinc. So I would say continue to hold because there is a holding company discount that is there.
Yep.
And I would believe that's better to hold as of now.
Got it. Well, watch out for listings then, and hopefully that could be something for you, Raju. But next question coming in from Usha from Bangalore, holding Delta Water 600 shares at 326. Now, Kush, this has been a very, very volatile counter, but do you have any recommendation by any chance?
Very limited data. I don't track it often, but right now seems to be recovering some lost ground. You can hold stop loss at 275.
Got it. The next question, coming in now, it's is on alkyl amines or Deepak Nitrate. What's a better buy? And he wants to know the technical setup. So fundamentally, we've been discussing the stock of its particular products, price being increased. But Kush, either thing that you like for Vanita?
Deepak Nitrite, I think this has been a call as well that I'd given about last week on the channel. Very strong move, 6 weeks of gains. You can buy even, okay, you should buy on decline, my bad, because it's slightly overheated. So maybe buying close to the 1750 mark would be ideal, and stop losses near the 1680 zone. The stock has momentum and volumes going for it.
Got it. Jatin from Chandigarh holds on to Infosys at 1390. He can only hold for 3 months. Kush, would you recommend him to exit or just wait till the 3-month time to see what happens?
Exit.
The next question coming in now, this one's from Krish from Chandigarh, holding on to United Spirits, 1,000 shares that he's bought at 1,300. He wants the long-term view here, Shaina. What would you recommend? It's a big position.
Well, I would suggest that he sells half his position as of now. The numbers were a bit disappointing.
Got it. Well, the final question for us for this rapid fire round on Vesuvius. I bought at 522 Kush, and by a viewer, AK Bhalla, he wants to know a view on the stock.
Yes, you can continue to hold. Stop loss at 505, 510 zone.
Got it. Well, that is the first half an hour of the show and first round of rapid fire. A lot more stock-related queries after a very interesting conversation on the other side of this break. So stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth.
Hello and welcome to the show. Company in focus is Meesho. The company's share price is rising by 5.5% gain after the results. Company reported narrowed Q4 losses and also the revenue increased. We are joined by Dhiresh Bansal, CFO of Meesho. Starting with the first question, Dhiresh, of course, a good set of numbers and growth in many fronts, but the operating loss has really widened on a YOY basis. What really led to this, and also the guidance picture for this particular financial year quarters in terms of the operating performance?
Sure. So I think if, like you said rightly, I think on the top line front, we've seen very good traction. Our NMV, which is the key top line metric that we consider in our business, grew by about 43% year on year. And that was on the back of annual transacting user base growing at almost 33% year on year. Crossing now 264 million annual transacting users with a frequency of above 10 times a year. If you, I think, recall some of the earlier commentary that we have during the year, where I think we saw some disruption coming through on the logistics front, especially in Q2 and Q3 of the year, with sort of consolidation happening in the 3PL ecosystem. Most of those disruptions are kind of behind us now. So if you look at it on a QOQ basis, sequentially, we have improved our EBITDA margin roughly by 245 pips, moving from about minus 4.3 to minus 1.7% of NMV, which is comparable with what it was in Q1 of the year, which was prior to these kind of logistics-related disruptions. So all of these are squarely kind of behind us now, and we would kind of progress from here on. Even if you look at unit economics front, we're back to about 4% sort of contribution margin on the back of both our ad revenue monetization seeing an uptick versus previous quarter, as well as restoration of some of the logistics related margin that we had in our business. So I think the more instructive number on the bottom line front to see is the improvement that we are seeing on a quarterly basis, given some of these trends were more recent versus on a YOY basis. And of course, I think associated with the growth, we're also seeing operating leverage come through in our business in various levels.
Right. So Dhiresh, the stock is up over 5%. And of course, you have also announced 100 crore rupees investment in Meesho Payment. How will this really work out for the company in terms of the investments and the returns on that? And also, will it also push back your path to profitability?
Sure. So if you look at in the context of our balance sheet, I think 100 crores is not a very large investment. It is sitting in a sort of new initiative that we are doing around financial services in our business. Especially if you look at the kind of sellers as well as consumers that we have, a lot of them are underserved when it comes to credit. And given all the platform data that we have tied up with NBFC partners to also start lending to some of these ecosystem partners, which helps improve their business, provide better pricing on the platform from the consumer standpoint, be able to shop through the month and pay at the end of the month, which is a common behavior for them when it comes to the offline world. So separately, standalone as a business, financial services, if you look at globally, some of the value-focused e-commerce players like Alibaba has Ant, Mercado Libre has kind of Mercado Pago, Shopee has C-Money. A lot of them have created a lot of value for their shareholders through these new initiatives as well. And in line with that, as well as our strategy from a bottom-up perspective as well, we feel that this is an important area where we can generate value and hence start experimenting on some of our user cohorts here.
Right. Also, Dinesh, in your space, AI is also playing a big role. You've said 70% of the codes are generated by AI. What is the impact of AI and what is the investment entailed and how is this panning out for the company?
Sure. So the AI investments kind of largely sit in two buckets in our business. One is around the server and infrastructure cost line items that we see, as well as the people investments that we make across in terms of hiring best sort of AI scientists, data engineers, etc. as well. So here, the approach that we've taken is with the advent of various tools, be it from the Anthropic or kind of OpenAI stable, we are seeing very good traction in terms of improving the velocity of product feature launches in our business. So if you think about in an earlier environment, we always had a lot more ideas than what we could execute on, simply because there was a specific bandwidth that we used to allocate to, for example, engineering. But that is lesser of a concern now. So we see improvement in product velocity here. It also leads to improvement in the cost structure overall. For instance, in logistics, when it comes to it, a lot of misroutes that used to happen, which used to cause failed deliveries, there we have launched specific LLM models, which now help us kind of drive lower failed deliveries and as a result, improve the cost structure. On the user activation front, we've launched Vani, which is our voice agent, which is leading to almost 22% jump versus the baseline in terms of activating installed users into transacting users. So we're seeing these benefits across line items. It's not just a singular one. And we'll keep kind of talking about this more and quantifying them more as we kind of go along.
All right, Dinesh Bansal, thank you so much for joining us right here on NDTV Profit. All the best for the next quarter. All right, take a look at that particular stock price has pared down the gains of over 5.5% to now 4.5% since we started this conversation. I hand it over back to my colleagues in the studio, Mahima as well as Puneet. Take it away.
Right, Nisha, thank you so much for doing that conversation for us. In fact, although operationally things have been much better for Meesho this quarter, but like Parag Bhai puts it, 89,000 crore market cap with a 255 crore for 1 quarter of EBITDA loss, right? So that's something that we'll be watching out for Meesho, especially as to when the company turns profit. Yeah. And that's the problem for all of these new age tech companies, right? But, moving forward and taking all your stock-related questions, Manoj from USA is writing in. He's holding 90 shares of BSE, bought at the levels of 1076 per share. Wants to know if he can sell or hold discount. He's not mentioned the time period, but Kush, your view on the charts for BSE right now?
Has been bullish for a while, continues to remain so. It's just that from a very near-term perspective, this one's gone into overheated territories. If he's okay trading, some of these shares, then he should book out partially and then look to accumulate, the same quantity around the 3,500, 3,600 mark. But on the whole, the structure continues to remain bullish.
Got it. Well, the next question coming in from Bangalore and on BHEL, actually, it's a counter coach that just flown in through the last month, right? He bought it at 285, holding 150 shares. This is a good time to book profits?
Book profits, yes. I'm glad you mentioned this because I remember last week or was it the week before, there was a viewer who asked this in around 300 odd levels a couple of weeks ago actually, and I said it's a good idea to maybe take some money off the table, and it's just gone through the roof. The reason was 300, 310. That's been a level that it's not been able to cross for a while now, and now when it has, it's done that with a gusto. So very strong momentum, very strong volume action also. It's just that now it's overheated, so you might want to take money off the table. Re-entry point would be about 360, 355.
Okay, the next one is on IT stocks. Isho from Kolkata is saying that he wants to know if this time is a good time to maybe invest in a mid-cap IT counter from a long-term perspective. He's already holding Oracle Financial Services that he bought at 6645. Shaina, I'll come to you on this one. Are you liking anything in that space? Of course, he's seeing good profits already on Oracle Finance. Should he book out one thing and maybe invest in something else in the mid-cap space?
Well, the overall IT sector continues to face some bit of consolidation and a little bit of hesitancy in terms of new, upside in the shorter term. But yeah, if you're looking at a slight mid-cap type of IT stock, Persistent, in my view, because of its business opportunity, does look quite good. So you could look at Persistent, even Tata Elxsi, surprisingly after the correction and given the business prospects going forward, I think Tata Elxsi could be another stock that you could look at any depths to keep in your long-term portfolio.
Correct. Well, quarter four was slightly disappointing for Tata Elxsi, but has corrected, as Shaina correctly pointed out at this point of time. But Solar Industries, Kush, Uma from Bangalore, has been holding on to this particular counter, but wants to enter this yet again. Now, it's a very expensive stock on the fundamentals, but what do the charts suggest?
Yeah, so the charts are fairly strong and had a good run, but now it's gone into a consolidation phase. I would suggest a good entry point is close to the 15,000 and about 15,200. That's the range. If you do get a dip and if you do get the stock around those levels, it's a good entry point. Like I said, had a massive run in the last couple of years. Last 1 year or so, it's consolidating. But, this is the time when you want to enter. So about 15,000 or thereabouts is where you can consider an entry. And on the way up, the stock could hit 16,600 and 18,000 levels in the coming months.
Okay, the next one is on L&T. By the way, before I take the next question, for viewers who are tuning in, you can also call us on the numbers that will be flashing on your screen up there and ask your queries live on the show. Niva is asking about L&T, by the way. She's saying whether to enter into this counter right now or what could be the right entry levels from a long-term perspective. Shaina, I'll come to you on this one. She's looking at a time horizon of 2 years. Considering that the street was not happy with the earnings, plus of course the West Asia conflict had an impact, on this counter. Overall, what are your views with L&T right now? Does it make sense to make an entry?
If you're a long-term investor with a 2-year horizon, yes, because there seems to be some bit of settlement in the Middle East, and 40% of their revenues does come from there. Also, in terms of raw material costs, they have taken the impact as of now to some extent. I would suggest that if you are looking for a long term, yes, you can start buying even at current levels, and then you could add at slightly deeper levels, if at all, depending on where the market and L&T goes. You could add it again, like further at closer to about 3,200. So I think that is the type of range. Start buying now, and then you can keep adding the stock moves 500 rupees plus minus.
Well, got that view, Shaina. That's on L&T. 3,200 would be a treat for investors if it gets to there, but got that view. But let's go on another caller from Hyderabad. Ravi has a stock query for us. Ravi, very good morning to you. What's your query?
Yeah, very good morning. I have a query on L&T Finance.
Okay.
And I just want to know, is it a good time to enter into this stock? And my time horizon is next 1 year.
Next 1 year. Okay, got it. Well, Shaina, you did speak about one of the bigger companies. What about the smaller subsidiary? Would you recommend entering into L&T Finance?
L&T Finance is doing reasonably well as of now. In terms of valuation also, it is, well placed compared to the other IT stocks, especially in the sort of mid-cap type of stocks compared to, say, Persistent, L&T Finance, I'm so sorry, compared to the other finance companies. It is relatively priced. It has performed, but I think even at current levels, one can keep adding. If you look at price to book, it's about 2.5 times, not too expensive. So one can hold it as of now. And you could look at levels close to about, if you're looking at the shorter term, it could be closer to about 315 type of levels, which you could review it at.
All right, so that's the view on L&T Finance. I think we've got Murli, who's also calling us from Hyderabad. Murli, a very good morning to you. Go ahead, ask a question.
Yeah, good morning. This is Murli from Hyderabad. I'm a small-time investor. I have Apollo Microsystem at an average of 69. these 3 years, I did book some profit. I just wanted to know if I should hold it for under 6 months to 1 year.
Okay, interesting. Interesting that you bought it at such attractive levels, Murli, and that you're already sitting on, more profits. He's already booked some profits, Kush. But from a 6 months to 1 year point of view, do you think he should continue to hold for further upside?
He's such a smart chap. He's entered at a fantastic price, seen it till here, and also he said he's booked some profits along the way.
Well,
What do you need us for, Murli, really? So kudos on this entire investment and that trade that you made on booking profits as well. I think Apollo Microsystems is doing well, has got good momentum. I think you should continue holding on to this one. Maybe if you want to book another round of shares in terms of partial profit booking, not a bad idea at the current level. But on the whole, with the kind of movement that the entire segment is seeing, I think you should continue holding on at least some quantity. On the way up, there is a good possibility that the stock could hit 345 and about 375 levels or so. So continue holding on to it. On the downside, I would suggest a stop loss near the 275 mark.
Correct. Well, let's put up Newgen Software and got your view, Kush, and very good buy also from a viewer at just 69. Has been done well, but on Newgen Software, company came out with its results last week, and just to get a quick perspective on them, Virender Jeet, CEO of Newgen Software, is now joining in. Virender, very good morning to you. Thank so much for joining in again. Let me just start with the annuity revenue part as well, because the results are largely decent. Revenues were up, of course, 13% on a quarterly basis, but your annuity revenue share is now inched up to almost 62%. Could you give us some perspective of if you have any targets for FY27, where do you expect it to be, and do you feel that with such high percentage of annuity revenue coming in now, there could be newer projects that you could look at for the other 30% of revenues almost, and is there a higher growth that you're expecting for that particular range?
Good morning, and thank you for that question. See, you're right. So annuity revenues are a function of our business because we are into the sale of licenses and subscription, and both of these have a compounding effect of annuity. So as the company grows, organically the annuity revenues have grown, and you've seen over the last 4 or 5 years, they've grown from less than 50% to almost now 62%. We do expect this percentage of revenue share will keep on going. And I think, as you're rightly saying, as this grows, that we should be able to have more predictable revenue streams going into the next year, because large part of the base revenue will get covered through the annuity. This year, we are sitting on a lower base of our license revenues, what we have done than historical rates. So we are in a better position to really have a better growth year compared to last year.
And Virender, since we've seen such a massive change coming in, especially in this quarter related to AI models as well as integration of those in medium-term enterprises, how has that impacted your licenses business? Is it that certain existing orders or the newer orders that you get in are now having a higher requirement of those tools, and how are you countering it at this point of time?
It's a very good question. So, software products generally have to be ahead of the technology curve. So last 2.5 year investment in building AI functionality in our products and leading with agentic AI in many cases, getting products like Marvin, Harper, Lumen out or last, has started showing results. Today, unlike other industries in product industries, most of the use cases you are selling have AI central to that. I would say last year, almost 30% of our use cases, what was said, would have an AI significant component. This year, that may jump to 50%. And as the products keep on delivering better value to the customer, there's a good opportunity that we should be able to, position them better, get a higher return on that. But, I think one thing we should understand, classification of AI revenue and non-AI revenue does not exist for product companies. Most of the use cases have AI central to their existence.
And fair point there as well. But just in terms of growth as well, because, from FY23 on, you were just sub 1,000 crores in terms of revenue. FY25, just in 2 years, you were able to add almost, to jump to almost 1,500 crores. This year, are you satisfied with the growth? It's been slightly more slower compared to historical average as well for this year. Is there any particular reason that the growth could be a little slower this year, and the expectation that now that the base year is also stronger for you, is there a higher growth, maybe of 15 to 20% that you're expecting for FY27?
No, first of all, we are not quite satisfied with what we did this year. I think it has been bit disappointing on many fronts. And I think there are two primary reasons. One is about, we did lose some amount of momentum in last quarter in Middle East, because Middle East is almost 33% of our revenue. We think that's settling down after Q2. The other part is, I think, very important to understand that, as you rightly said, we had grown at a phenomenal rate over the last 3 years on account of higher license prices and license sale. Now that part of revenue has almost come to a standstill in terms of, from India and Middle East. It has not really grown on those numbers, though we continue to have healthy deal wins. We did more than around 49 logos across the world, had a lot of logos, but the license base has been reset. On that license base, it is typically more convenient to have a higher growth this year. And we are, this company is investing in both in R&D and sales and marketing at a substantial level. And we don't expect single digit growth. We are always looking at, around our historical growth rates, reaching around 20% and even doing potential to do better than that.
Good. Well, Virendra, thanks so much for joining in paucity of time today. So couldn't have a longer conversation, definitely one warranted. But, thanks so much for being so upfront about all aspects about the business. Look forward to our next conversation.
Thank you very much.
Well, that was the management of Newgen Software, and from management's own admission, a lot to expect into next year. Couldn't transcribe into this year as well in terms of growth, but let's go across and get back to your stock-related queries and well. And this one is on the pharma space. Now, our viewer wanted to know some perspective on the pharma space for the next 3 months, Kush, on Glenmark Pharma or Mankind, as well as anything in the hospital space that you like in this particular time frame.
Wow, a lot of queries packed into one, right? So look, let me start with the broad view. Overall, the pharma space is doing well, but you still have to be very selective in in the entire basket, because some of them have run up quite a bit and might just cool off, and a lot of other names haven't really done well. So those are the ones that you want to avoid. So as far as the stocks go, Glenmark I think is doing well. It's already run up quite a bit, consolidating. So you could consider this for a trade. However, I prefer Cenorus Pharma, something that we've given a call on earlier as well. Good accumulation, good run up on this one. 20-day moving average support also acting up, and if you do buy right now, keep a stop loss at the 890 mark on the way up. Has a potential to hit 865, even 1000 levels in the coming months time. So this is the one I like. Generally constructive on the pharma space, but like I said, you have to be constructive. Lupin or Aurobindo, just to throw in some names, but a trade on Cenorus.
Okay, all right. The next one that we have is on Brigade Enterprises. Vivek from Chennai wants to know, from a long-term perspective, what could be the good price to make an entry into this counter, and what should be the next course of action from a long-term perspective? Shaina, your view on Brigade Enterprises?
Yeah, so I think Brigade, the overall real estate sector as well as Brigade is doing pretty well in terms of their sales. I would say that you could add, you could start adding it close to even current levels, and then take another keep adding over the next couple of quarters, maybe 740 type of levels for the medium to longer term.
Thank you, Shaina. But the next question coming in from Rajan Iyer, who's a retired banker, and he's been holding on to ITC Hotels at 170 and holding 2,000 shares of theirs for the last 1 year. Now, of course, has been a disappointing performance, went down all the way, come back up again to that buying price of Rajan's. But Shaina, would you recommend him to switch out? And he's asking if he should switch out to BSC or Fractal. I think you gave your view on BSC, but just in terms of ITC Hotels, is it a good time to switch, or should just wait now since the correction has largely taken place?
I think it's better to continue to hold to ITC Hotels, because correction has taken place. It started to move up again. And once I think travel starts opening up in a big way, especially international travel and conferences, ITC Hotels should rebound quite well to about 200 type of levels over the next 1 odd year. They are growing pretty fast. Already with 13,000 rooms, they are talking of expanding it to about 18,000 rooms over the next maybe 2 years. So I would suggest continue to hold.
Okay, all right. So that's the view on ITC Hotels. It's time for a rapid fire round. You both know the drill. Kush and Shaina. I'll start with the first question. Ajay from Bengaluru is asking about Polycab. Is this the right level to make an entry post the correction? Kush?
This is a level to book profits. A good entry level would be 8,500, 8,600 thereabouts. So right now, don't.
But well, the next question coming in on Lloyd's Engineering, and Aditya from Tamil Nadu is holding on to these shares at 750, Shaina. What would you recommend him to do? He's holding on to 500 shares and asking if he should continue to hold at this point of time.
Yeah, hold as of now. In terms of valuation, it is better, and there's some, quite a bit happening in terms of investments by large investors in the stocks. So continue to hold.
Okay, Eternal is the next one. 1900 shares bought at the levels of 80 rupees. Should I continue to hold, exit? Please advise. Ram Mohan from Dubai is asking this question. Kush, your view?
Yeah, it looks like a long-term investment. You can continue to hold.
Got it. Well, just one correction actually. Aditya from Tamil Nadu, his question was on Lloyd's Metal and Engineering. So he bought it at 750. Company is trading at 1741. China, does your view still stand?
Yeah. The view stands.
Okay.
Okay, the next one is on SBI. This question is for you, Kush. Entry price and stop loss for SBI. What are the technicals looking like? Sunita from Delhi is asking this question.
Wait for the 1100, 1110 zone to be taken out. Right now it's consolidating, but mild positive bias. So wait for 1100 to be taken out. On the downside, keep a stop loss at 1055.
V. Murli from Bangalore is holding on to 50 shares of ICRA, actually bought at 5,400. Can he add more China in the near term?
No, I don't track this.
Anything on the charts, Kush, that you might have?
Yeah, not doing too well, so I would give it a miss.
Okay.
Okay, HCL Tech from a long-term perspective. What's the view, China? Ashok is bought at the levels of 1400.
Yeah, it's a hold for the long term. Yeah.
Got it. The next question coming in now. This one is on RCF, and a viewer has been holding on for the last few years at 70 rupees per share. Asking what he should do. Kush, he's almost doubled his money. What's your view for Pawan?
Yeah, exit.
City Union Bank holding for the next 1 to 2 years. What should be the right entry price, Shahina?
City Union Bank, actually, in terms of the smaller banks, it looks quite okay, at least as of now. And if he wants to, hold, he can continue holding. Any fresh entry should be, at lower levels, maybe close to about 250 type of money.
Got it. Well, we also had a management change very recently as well. After a 15-year tenure, the MD has, finally put his boots up. But an interesting counter nonetheless. Ramakrishnan from Visakhapatnam is asking on Tarrell. We've answered that. But on Clean Science, he's asking a target course. He's bought at 900.
Clean Science, you can still hold. I think on the way up, you can look at 935 and about 975 as your targets. Although it's a gradual run-up, stop loss at 835.
Got it. Well, that is the end of the rapid fire as well as this edition of Fast Profit. Shaina as well as Kush, thanks so much for joining in, helping us solve all these stock-related queries. But viewers, stay tuned. KYC comes up next, and also all your stock-related queries, the remaining ones will be solved at 2 p.m. So we'll see you there.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market opening. Now in its boldest lineup.
Hello and welcome. You're watching NDTV Profit. The stock that we're putting spotlight on today is Godrej Consumer on the back of its numbers. And to take this conversation ahead and to understand as to how things are shaping up beyond FY26, to understand all of this, we're joined by Asif Mabari, who's the CFO of Godrej Consumer, joining us now. Asif, always a pleasure speaking to you. My first question to you is with regards to margins. I'm sure that you got a lot of questions around this in your investor call as well. But trying to understand that you have said that because of this West Asia conflict, there is inflationary pressure on raw materials and that could put pressure on the margins going forward in FY27. Considering that you've already taken calibrated price hikes, you would probably take price hikes in Q1. How are you seeing that trajectory of margins? Let's say, do you think second half of FY27 is when you come back to your normative range?
No, so I think firstly, the way we closed last year and what we delivered in quarter 3 and quarter 4, we're actually entering FY27 from a position of strength. We had a good set of numbers coming out in quarter 4. Double-digit top-line growth, 11% revenue, backed with a strong volume growth. India volumes at an 8% and delivering a strong double-digit EBITDA and PAT. So with margins being kind of coming back in second half. So we're entering FY27 with a position of strength. When it comes to the volatility in commodity, this kind of volatility is something which we've seen in the past. And I think our action, our strategy has been to first try to kind of mitigate as much of the commodity increases with cost reductions, which we have done, and then take calibrated price increases. We've already triggered on price increases across the portfolio.
Yeah.
Hence, from an annualized basis, we do not kind of see a worry in terms of delivering a medium-term kind of guidance in terms of top line and profit growth. There can be some bit of movement in terms of margin within quarters, but that's something which is not really worrisome as far as.
Understood. Asif, can you help me understand as to what's the quantum of raw material inflation in the past quarter that you've seen, which is carried forward in May also in terms of percentage, and that versus the percentage of price hikes that you've taken?
So broadly, give or take, we've kind of been impacted by around 6-7% in terms of inflation. We have taken broadly around 4 to 5% price increases. We've kind of tried to optimize some of the cost. So we have broadly kind of been able to offset this increases. We would believe that across the portfolio, more or less the pricing has been taken. There could be certain further price increases in detergents and soaps once this current round of pricing stabilizes. So we'll see how that pans out. But at these level of commodity prices, we do not kind of be we are not really worried in terms of the profit profile of the company.
And what could be that percentage of price hikes that you would take going forward? Any particular range in mind?
We'll have to see how long the kind of conflicts last, where do commodities stay. So very difficult to kind of give out an exact number. But as I said, the large chunk of the price increases have been taken. But yeah, in these two categories, in soaps and detergents, there could be some more price increase depending on how commodities pan out. We'll have to just take it in a few months.
Fair. Okay. As if the other aspect is that the common commentary from all the FMCG companies across board has been that no matter what happens, volume growth is going to be the strategy going forward. Is that the strategy that you are also adopting? This quarter also the volume growth has been, on a good footing. Do you think there could be a further upside from here on? Maybe a double digits by the end of the FY27 is something we can expect. Early double digits, if not, more than that.
No, so as a company, it has, for the last 2 years, we've always spoken about stepping up the underlying volume growth, driven by a strong underlying volume growth step up in India, and we have been on the trajectory. A lot of effort has gone in terms of building new categories, and that have kind of added onto this journey. So our strategy clearly remains on stepping up volume growth further. Our North Star is about getting into double-digit volume growth. And I think we are kind of slowly improving on this trajectory if you see the track record. So that remains something which we are kind of obsessed about. And along with that, we want to kind of ensure that revenue and profits also fall in place.
For GCPL, harsh summers and weaker monsoons has both effects, right? It's good and bad both, because your home insecticides will perform well, soaps could be under pressure, etc. How are you viewing that play out? Because we are expecting an El Nino effect, and that could possibly lead to harsh summers and weaker monsoons.
No, so we to that extent we have the advantage of offsetting happening within our categories, and some of these weather trends do kind of change as we get more closer to the months. So we are not significantly worried in terms of how this could play out. We have seen historically also when there have been El Nino, we've not had severe impact in terms of the business, and we have multiple levers of growth which have been kind of action over the last few quarters. So we remain quite bullish in terms of where we should be able to take the business to an FY27, even if it's an El Nino year.
Okay, as if home care growth has always, been the outperformer. In the last couple of quarters also we have seen that. From a slightly long-term perspective, 3 to 5 years, how do you, see the mix panning out in terms of home care and personal care?
No, so we've again had a great quarter in terms of home care. Both parts of home care have done extremely well for us. Household insecticides business, after the relaunches which we did with a superior product and a new molecule, and the launch of Agarbatti has extremely performed well. And when it comes to liquid detergents, again, that's had a very, very good run. Fab is kind of looking at one of the real success stories from GCPL perspective, and we're seeing sequential growth of this across the nation. It started off with a journey in South, now it's kind of really expanded its footprint quite well. So we're quite happy with the way home care is kind of shaping up. When it comes to personal care, there has been a bit of volatility because of commodity prices in the soaps business. On an annualized basis, we're quite happy with the gains which we made on hair color. We made strong penetration gains, and we actually kind of delivered good growth on an annualized basis. There is sometimes some volatility which happens on a quarter to quarter. But we do see the larger skin cleansing business actually kind of perform quite well in the medium to long term. There is still a huge opportunity to kind of upgrade into face wash, body wash, and hand wash. And we have strong brands now in all these three segments. So we do see a good outlook both on home care and personal care.
As if your Indonesia business, you've said that FY27 is where, it'll, bounce back from where it stands right now, right? This quarter also we've seen some recovery happening, and last quarters also we've seen gradual improvement. Just want to get a sense in terms of what are the concrete indicators that you think will bring back Indonesia in a big way, considering how your other international geographies are doing, and what is the kind of growth that you're expecting from that business?
So I think we're quite happy with the way the Indonesia business now has stabilized over the last 2 quarters. Growth is stabilizing at mid-single digit, and the pricing pressures are now kind of broadly out. So next year we do see getting some bit of a revenue kind of improvement happening, and we should start going towards higher revenues from what we've kind of seen, and profit growth also should be back in the business next year. So that's really in terms of Indonesia. When it comes to our GOM business, which is Africa, US, and Middle East, we've had a very, very strong run. Profit deliveries over the last 10 quarters, and we've had strong growth over the last 5 quarters. A lot of work has happened in terms of fixing the business, and we do see the momentum of the business continue in terms of double-digit growth, both on top line and on bottom line going into FY27.
Okay. Can you give me some perspective on your recent acquisitions as to how the growth has been like for something like a Mostak?
Yeah. So it's been too early. But we're actually quite happy with the way things have spanned out in the last few months, and we are very bullish in terms of what the brand potential is in the next few years. So actually quite happy with how things have spanned out in early days.
Just one last question, Asif, from my end is with regards to advertisement spends, because it's a mixed bag when it comes to a lot of these FMCG companies, right? A lot of there's aggressive approach where companies are going ahead and investing a large chunk in advertisement, and that's bringing them volume growth, while some companies are taking a conservative approach. What is it that you are doing in FY27 when it comes to advertisement costs?
No, so I think when it comes to advertising costs, we have always been spending at the right level of spends depending on what is the need of the hour. So depending on the requirement basis, launches, innovations, and expansions, we have always invested into advertising. And at the same time, we do ensure that we kind of get more and more effective in the quantum of spends. So the idea is to kind of enhance reach at the best possible cost. And we will play this double lever even as we enter into FY27 to ensure that our costs are kind of optimized while we get into higher and higher reach.
All right, just one last quick one as well. In terms of acquisitions, do you think more acquisitions could be a possibility on the cards if you find them attractive, especially in the digital space?
No, so we will be open to acquisitions. We always have been, and we will remain open, provided we find the right fitment and the right strategic fitment. Yeah.
Well, that's the management of GCPL whom we are talking about. And time for a quick break. And on the other side, we'll be taking a look at all the KYC parameters that worked in the favor of the company. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk.
Welcome back. You are watching KYC on NDTV Profit, and the company on our radar today is GCPL, Godrej Consumers. But what this company is all about, I'm sure a lot of you know about it, but let's do a revision and let's see if you know the entire story or not. The first thing is, of course, the Godrej Group's FMCG company of more than 120 years of history they already have. Now they manufacture and they market household and personal care products. That's something which you see in your everyday life as well. But let's look into the detail कि company में क्या-क्या actual products हैं. Let's see the household products which we have seen across. The Mortein brand is there, which is there in everyone's homes. That's something to watch out for. Insecticides, air care, fabric care, and now home hygiene setup is coming in. This is the household segment which I am talking about. Apart from that, there is a personal hygiene segment or the personal care segment. This is the personal wash and hygiene segment. There is a hair color segment, deodorant and fragrances also. Remember, there is an acquisition also which they had earlier done as well. So that's also included in this business, the Park Avenue acquisition I'm talking about. But apart from that, there is premium beauty and the professional product is something which the company has its business from. Apart from this, let's look at the other key things to talk about the company, and they are present in more than 80 plus countries as per their annual report, and that list is expanding as India's FMCG story goes forward as well. Also, let's look at the coverage in the new launches segment, especially the pet care segment. Remember, this is the high-end, high-margin segment which is growing a lot in the Indian urban markets at least, and the brand is Godrej Ninja. That's what we are talking about. That's where the new launches is coming in the company. Apart from that, let's look at how the company is moving ahead, and the segmental revenue breakup is very much important. Roughly 62% of the revenue comes from the Indian segment which I am talking about. After that, in balance, 14% each is coming in for the Indonesia and Africa, US markets. The other markets, that's at around 10%. The brokerage's view on Q4 is very much important because the Q4 numbers is something where the interest has come for the street. The standalone organic volume growth stood at roughly 7% on a year-on-year basis. Also, looking at the other key factors, the home care segment in India, they performed strongly, but the personal care segment, that is where a modest performance has been. And of course, we have talked about the margins pressure which is expected to come in the first half of FY27. Overall, EBITDA grew quite strong at 18% in the Indian markets. Apart from this, also what the brokerages have spoken about is the overall international business, that on a CC, that means constant currency basis, has grown in a mid-single digit with a muted EBITDA growth. So that also needs to work, especially the Indonesian business. That is where the concern comes in, and the higher input cost is a concern in the upcoming quarters, and that is why we are seeing some kind of negative selling pressure in the company. Apart from that, outlook ahead is important, and this is what I mentioned. The Q1, Q2 is expected to have a higher top line growth, but the concern is not the top line growth. The concern is definitely the margins, the inflation cost which has gone up. That is where the important news flow is, and that is how you should be looking at this stock futuristically. Apart from these outlooks, the pricing pressure on the Indonesia, that's expected to bottom out, and of course some hints have started coming in this quarter as well. A warmer summer is expected to be negative for the insecticide business, but positive for the soap segment. So there are mixed trends coming in because of a longer summer. Also, the supply chain disruptions, they provide a competitive advantage to the company because there is a larger player, and that is where they might get benefited from consolidation, and that's where a little bit of alpha could be there. But let's look at the growth trend for the company for the next 5 years. They have updated that growth targets. The standalone business, this is roughly a 9% growth coming in, and not a very big number to be honest, but looking at Indonesia, that is coming out from a revival, so the number is on the lower side. USA, Mid East and Latin America, that's also at 5%, 9% growth coming in. So single digit growth mostly coming in most of the categories. So we need to be looking at how the company looks. But let's just see how we judge a company in KYC, and there are important rating parameters also, be it a mid cap, small cap, or today's case large cap. The rating parameters are largely the same. Income statement, balance sheet, cash flow is something which we look out for. Also the return ratios, especially the ROC numbers, that is where my interest lies. Apart from that, we have shareholding segment. Of course, the FIDI movement is something we'll track for Godrej Consumer and Street Cred, out how much returns have actually been made, kitna paisa actually bana. Valuations, we'll try to compare their peers in this segment, and lastly we'll take the analyst take of how much of them are bullish or having a sell, buy or a hold call. That's the entire takeaway coming in from the parameters. Let's talk about the first parameter. That's the income statement. And of course, the revenue looks big, EBITDA looks big, but look at the CAGR growth which is coming in. This is just in single digit. That seems like the growth seems to have, of course, a high base is there because the company's size is big. But nevertheless, the growth numbers needs to come, and this is coming in for the larger players also. This is just not this company, other FMCG players as well. Fourth quarter numbers, the revenue went up 11%, coming in at 3,900 crore rupees. And also looking at the key numbers, EBITDA saw an 11% jump, and now of course the street is concerned on the margin impact as well. It was flattish at around 21.6%, and the PAT numbers also, if you could just pull that out, that's around 10%. So yes, it is growing, but it's not growing very fast. That's a little bit of concern coming in, and because of that, and the numbers were also, you could say, mixed, and the street taking it in the negative side, I'm going to give this a 0 when it comes to the income statement. That means a thumbs down coming in. But let's talk about the balance sheet, how things have moved. And balance sheet largely it's a debt-free company. That's why you can see a lot of numbers here, but the debt, it is 0. So cash bank balance is pretty much strong. It's a legacy company. It's coming in from a strong conglomerate. So their balance sheet management is top notch. So there's no questions to be asked. So it's a strong thumbs up when it comes to the balance sheet segment. So we spoke about the income statement. We spoke about the balance sheet. Let's talk about the cash flow. In this kind of nature of a business, there is of course the general trade. There's an offline trade. At times the payment cycles also move around. And remember, there's a GST rate cut benefits also happened. And now slowly the FMCG back is seeing that growth in numbers. Why I'm talking about it? Because the cash flow from operations, that's around 2,070 odd crore rupees. That has actually increased, and it has come to almost 2,500 odd crore rupees. A slight dip coming in from the FY27 numbers. EBITDA also, we're seeing a decent up move coming in, but it's largely flattish. These are all the single digit growth numbers. But the way the cash flow management is happening, the way the working capital management is happening, that is where it's showing a good strength. So just compare in FY24 the cash flow operations to EBITDA, that stood at 70%. Now after that it's ranged 85%, and now it's around 80 odd percent. So at an average, if you take the conversion ratios in the working capital is really strong. The net cash flows also interestingly have maintained. There is of course lumpiness here. Remember in FY24 in the numbers there were some exceptional losses also, but net the cash flow is impressive, and most of the parameters which we tracked are doing well, and they're ticking the list of how we judge a company in KYC. So it's a strong thumbs up when it comes to the cash flow segment. Also, let's talk about the return ratios, how things pan out. And remember, these businesses which they are functioning in, they are moving towards the premiumization. A lot of acquisition is something which the management is quite bullish on. And look at the ROC numbers. That number in FY23 was 17%. ऐसे धंधे में आपको 15-16 मिलना बिल्कुल चाहिए, and the company is actually outperforming that as well. And now it's constantly holding that 19% mark. So the return ratio for GCPL, even if you compare it with the peers, is still on the stronger side. So net, it's a strong thumbs up when it comes to the return ratios. Also, let's talk about the shareholding, how things have moved. And remember, this is the portion to look at, where that is where there was an equity dilution event, and now it's at around 53%, but still the promoter stake is in the positive. FIs, let's look at how things have moved. Around 23% was there in March 2024, then it came down to 20%, and that sell-off continues, and now it's at 13%. That means 10% of the stake sell-off has happened in the last 2 years. But on the other hand, the story flips. If you talk about the DIs are having almost 9% stake in March 24, and they have been nibbling in the stock. Of course, at times people talk about the valuations higher for the FMCG space, and that's something we'll come back to. And that has doubled from 9% to 18%. So one side FIs are reducing, the other side DIs are taking up stake, and that is where it's kind of nullifying my analysis in the shareholding segment. Promoters are holding 53 and they haven't changed. That's a good sign after their equity dilution event. And the public stake, that is also slowly going up as well. So net it's a neutral rating when it comes to the overall shareholding segment. But most important thing is how much has the stock made you money for, and at times it tests a lot of patience. And let's just see how much patience has been tested for the long-term investors. And yes, it has been tested. Look at that, last 5 years, there has been just 56% returns coming in. So your expectation should be on the higher side, and largely this has outperformed the Nifty also if you take the last 5 years numbers. Last 1 year stock is down 12% from 2025 highs, stock is down 16%, but the dip which we saw in the March lows, from there the up move is definitely there. It's up 11%. So for long-term investors, the stock has tested a lot of patience, and remember, a little bit of dividend announcements here there are definitely there, but we have adjusted that to give you that perspective of how things have moved. But yes, investors do expect more in terms of returns from the company. It's a very stable bet, a stable FMCG company, and at times for flight to safety, this counter is very helpful for DIs as well as HNIs and retail as well. So net, it's a neutral rating. It's not been a big multi-bagger in the time frame which I have judged the company, but nevertheless, it's a neutral rating for the street cred. Let's talk about the valuations, how things matter here, and valuations are very much interesting. A lot of uniqueness is there in some FMCG companies. Some do have tobacco also. I have removed that company, but other companies, just look at the 12-month forward P ratio. Everyone is definitely concerned on the FMCG companies. Their valuations is a big question mark always, but nevertheless, there is a flight to safety, and at times they continue to manage that. That means India is a consumption rich and a good market to give these valuations. It's at 73 times for Nestle, it's on the higher side. And if you look at the company GCPL, their 12-month forward P ratio is coming at 44 times. It's largely neutral compared to its peers. On the cheaper companies, we have Colgate-Palmolive, that's around 40 times, and Dabur, that's shade below 40 times, 39 odd times. If you could just show the valuation comparison for the first table, we'll understand the other companies also where the valuations are, and it's on the higher side. For Marico, it's at around 49 times. For Colgate, for HUL, it's at around 47 times, and around 44 times, which is at an even level, is GCPL, compared to the names which I had earlier spoken about. So net, the valuations, it's not that attractive in the entire FMCG pack, and neither for the company as well. So definitely the company needs to come up with some other valuation re-rating. If it can happen to the sector, that's something to watch out for. But net, peer comparison, I would still like to give this a neutral rating as well. Let's talk about the outlook, how much it's important, and instead of outlook, we are taking the analyst take. There are totally 38 analysts tracking the stock. 82% of them still have a buy rating. Almost 16% have hold, and 2% have just the sell rating. So net, the community is quite bullish on them. The 12-month target price is at 1230 rupees. And let's look at the return potential also, what stands here. And that's roughly from the current levels, almost 19% for the next 12 months. So you can say the analyst stake is very strong, and they have given a strong thumbs up when it comes to the company. But let's revise the overall ratings in KYC for GCPL. Where does the rating stand? And nevertheless, this company is already discovered, a lot of analysts are there, but we find, what alpha can be made from here. Income statement, the company needs to prove. Balance sheet, cash flow, that's rock solid. Return ratios is very strong, above that 15% mark, which you look at. And looking at the street cred and shareholding also, let's see what rating parameters we have given. Till now, it's 3 thumbs up. Okay, there's one more thumbs up from the analyst side as well, which we had noticed in our analysis. But the shareholding portion, one side, we have DIs, they have been doubling their stake. On the other hand, they have FIs, which have been reducing the stake, But street cred, in the last 5 years, the stock has given almost 54% odd% of returns. But the street wants more. Ye dil mange more. That's something to watch out for. And valuations, it's still a very expensive sector, to be honest. Let's give you the final ratings of our analysis of GCPL in KYC, and we have given the company 5.5 out of 8. It's largely in line with the average numbers which we generally give to a company in KYC. So this is the entire story for GCPL. Thanks for tuning into KYC, only on NDTV Profit, for your profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open. Now in
Benchmarks trade under pressure today with Nifty 50 and Sensex hovering close to day's low. PSU banks, IT and real estate are the top sectoral laggards. Auto and energy remain resilient. Inline Q4 by Bajaj Auto as net profit jumps 34% YOY basis. Additionally, the company has announced a bumper dividend of 150 rupees per share. It has also announced its biggest buyback in the last 4 years. And Paytm's net profit for the fourth quarter slipped 18.2% sequentially. Soft Q4 for Birlasoft, strong for Hexaware. Oil finds its footing after a brutal sell-off. Brent below 102, WTI nears 95 as Washington floats a deal to ease the Hormuz choke point. Markets now watch Tehran's next move. Earnings polls suggest a steady quarter for Dabur, but all eyes are on Britannia. Stronger profit growth expected, margins seen improving, and EBITDA likely to outpace revenue as pricing returns amid rising input costs. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. Let's take it straight to the markets. And yes, after trending in the pressure zone at 12 o'clock, now Nifty 50 is showing some resilience and is bouncing back. There you go. Take a look at the kind of spike that it is seeing and turning into the green. That's the most important part. But remember, 24,350 levels crossed. Remember yesterday's last hour surge on hopes of US-Iran deal and also the choke point of Hormuz may be seeing some bit of sanity coming in, which also led to the oil prices softening. That is really impacting the overall market sentiment. But it has seen its own bit of pressure because yesterday's last hour surge really took up all the benefits and baked in the benefits that is coming in with the hope of a deal between US and Iran. Let's also take a look at the internals. Well, IT sector is the one which is also a laggard today, 0.5% down in trade. When we take a look at the broader market, that's where the action is. So that really continues the momentum with value picks really being seen, and that's where it is showing quite a bit of outperformance. When we take a look at auto, defense, metals, energy, pharma, these are the sectors which have been trending pretty well, and those are the sectors really doing well, while the PSU banks, IT, realty, FMCG continue to be the laggards. When we take a look at the internals of Nifty 50, well, Mahindra and Mahindra, after a strong set of numbers, continues its momentum. Even today, ICICI Bank has flipped its position. HDFC Life, Bajaj Auto, NTPC, these are the key contributors. While on the flip side, HDFC Bank is a key dragger, along with the largest bank, SBI, and of course, some of the IT firms like TCS also on the downward trend. So that's the picture really coming in on the market side. But if we really take a look at some of the counters when we talk about the Midcap 100 universe, and the ones which are really gaining in momentum are the ones like Polycab, Paytm, remember, after its results, which was softish on a sequential basis, but a lot of important commentary really coming in from the management on the AI push also probably working well. That counter is 6% up in trade. Also, not to forget IIFL Capital, that has announced its transaction with Fairfax, likely to become a promoter after two separate tranches of investment. That is, one is preferential buyout of shares and then an open offer. And that particular stock is the news of the day, 5.5% up on IIFL Finance, with Fairfax looking at becoming a co-promoter in the company with two tranches of the deal. Let's take it straight across to Sachin Shah, the Executive Director and Fund Manager at MK Investment Managers. Sachin, pleasure welcoming you on NDTV Profit. What do you make of the market momentum? There has been quite a bit of volatility, and after the last hour surge yesterday, today, of course, market is really understanding where US and Iran deal is and where oil settles. How do you see the way forward, and how critical is Iran's really response to this particular matter?
Yeah, hi. Thank you so much for having me on the show. Always a pleasure. Yes, I think the good news is that we are seeing the light at the end of the tunnel as far as the war is concerned. Clearly, signs that things are easing off out there, which is how markets are reacting positively, but in a cautious way, and rightly so. Which is, I think, a very matured way of markets reacting to the news that we are seeing. So from that perspective, I think it's a very, very healthy thing. Also, we are in the midst of an earnings season. And I think so far what we've seen in the earnings have been very, very decent. There has been no major negative surprises. In fact, even most of the management commentaries as far as the demand scenario is concerned, and also particularly to do with the raw material inflation that we all are anticipating and how will that impact the demand at the ground level. I think most of the managements are indicating that so far the demand has been fairly resilient. And also I think the manufacturers have been matured enough to not take very sharp price increases. They have also been very measured. And from that perspective, I think the demand destruction fear is also not playing out at this point in time, which is how I think the markets have gone into this positive trajectory. At least we have seen in the month of April, and we are seeing that sustenance even in the first week of May.
That's right, Sachin. In fact, that is the key point, that the demand, as has been coming out from most of the earnings we have seen so far, and a lot of large earnings have already been announced, they have not shown that demand has taken a beating. And that probably, is that the indication also that is being given for this particular quarter? How will you play this quarter and have a view on next 2 quarters, which was being considered as a more difficult period if the war really continues? So everything hinges on the war situation and the crude oil prices. So what are you baking in? And El Nino effect, lower than expected monsoon is also an important factor to watch out.
Yeah, I agree. So that's what I said earlier, that we will have to move. We are moving in that positive trajectory but we will have to move with a lot of cautiousness. So the movement that we are seeing in the markets right now, remaining in some bit of trading zone, is a very matured move. At the same time, I think there is going to be some fuel inflation coming in sooner, probably sooner rather than later. But the question is how much. And the second thing is also how much can it actually impact the demand for is it a 1 quarter issue or is it a 1 year issue is the real question. So far, I think all the management commentaries are suggesting that they are not overly worried at this point in time. And that's what I think we will go by because and sometimes it's futile to preempt things too much. And if there is a challenge also, what we are seeing is that at least at some of the ground level indicators, like say, for example, if you look at the rural real wage growth is very, very strong in terms of the growth is now almost as high as 8-9%. And this is after good 2-3 years of negative to flat rural wage growth, particularly in real terms. So I think that gives a lot of confidence that the demand side should probably sustain and chances of it collapsing are not very high, because we are also seeing decent amount of ground activity in terms of the construction side, infrastructure side, particularly on the upcountry in this country, which is also probably going to help the purchasing power and sustenance of this demand side.
All right, Sachin Shah, always a pleasure speaking to you. Thank you so much for joining in. Radico Khaitan has been really pumping up on stock, 2.3% up after the results. And my colleague Hiral joins in to take us through the management commentary. Hiral.
Thank you for that, Nisha. In fact, Radico Khaitan has actually outperformed peers as well in terms of performance. And clearly, the revenue performance has been in line with what the street was estimating. Let's get in Dilip K. Bantia, Chief Financial Officer at Radico Khaitan, to talk to us as well. Mr. Bantia, welcome to the show. Always a pleasure to speak to you. The company has actually outperformed peers. Now, if you have to look at the fourth quarter getting into FY27, what are your key takeaways in terms of what FY27 could look like? Because a lot of concerns that are being pointed out for the industry as a whole.
It has been a robust quarter for Radico. It has been an all-round performance across all parameters. Last few years, which we have actually focused on our premiumization journey, that is reflecting now. Our quarter 4 has seen a growth of around 28% on P&A category. Our EBITDA has grown in this, and it is all-time high EBITDA of 286 crores, which is a jump of around 64%. And EBITDA margin also is highest ever, 19%. So this has been an all-around performance for this quarter. As on annualized basis, our prestige and above category grew by 22%. The top line grew by, as a milestone on the top line is 6,000 crore, which is again 25% jump over last year. And we had seen first time the EBITDA of more than 1,000 crore, which is up by 52%, and EBITDA margin also jumped by 300 basis points. So we are very confident about our premiumization journey. It continues to getting momentum and strengthening. For 27, the outlook is like this, that this year we grew our luxury portfolio by 40%. I think next year again we are aspiring to grow is by 25%. With P&A category volume to grow by 20%, and EBITDA margin, as we have always guided, is on expansion trajectory based on the ongoing premiumization journey. So we'll improve our margin by 125 basis points. So outlook is quite bright for 27 as well.
In spite of the concerns coming in from West Asia, you're saying 125 basis point improvement in margin. Are you also factoring in the raw material inflation impact in terms of your estimates for FY27?
Yeah, we are affecting the raw material inflation impact. How long it persists is a matter of question. But in spite of the what we have seen some increase in glass prices, PET resin prices, and all that. But we continue because of our premiumization journey. We continues to be confident in delivering our margin and top line growth. So P&A category growth of 20% will continue to boost our margin expansion trajectory and 125 basis points. Until and unless if it is a very, very scary situation and the crude goes very high, if it remains here and there, then of course our margin expansion will continue to be there.
You've been talking about the growth in the premium category. Because FY26 was so good, your base in terms of FY27 is going to be really high. How sustainable is this growth going to look like?
So actually, company has launched various brands in the premium space and luxury space over the year. And some of the brands like the 1943 Virasat, which has been launched 3-4 months back. We have only spread it out to 4-5 states. We have to take it to 15 to 20 states in this year. Spirit of Kashmir, which has been launched in September, August, and all that on full scale. So that is also growing, and I think this is only available in 7-8 states. We have to take it to 18-20 states. Royal Ranthambore, which is again growing at a 50% plus, and these brands are going to be on this high base also. The After Dark Deluxe Whiskey, which is a very large segment of 75 million cases, we are actually rebuilding this brand for at least last 3-4 years. So we will continue to gain momentum. Magic Moment vodka with the flavors of India, which are innovative in various, and we are the leader in the vodka category. So these are the area on a high base. Still, we are very confident to deliver the P&A category growth of 20% plus in 27.
Okay. The most important thing that is being talked about right now is the Karnataka policy as well. What is the impact on business that you're expecting?
So Karnataka has been very progressive policy. Actually, the purpose of this policy has been ease of doing business. And as last time they reduced the excise duty by 20%, I think the industry has grown by 28 to 30%. And we grew by more than 100% on our premium category. This year, again, the slab is getting rationalized, and I think P&A premiumization will further get momentum and strengthened. So this is a very, very progressive policy, and we are very confident to deliver on the premiumization in this policy. So the policy document is yet to come, but the broad framework which has been notified by the state government is very, very interesting and for premiumization.
Right. I know we did speak about the impact of the conflict, but if you can quantify that for us in the form of any price hikes that have been taken or any price hikes that could be planned in FY27 as well.
The price hikes actually is a regular phenomena, and actually in this year also we have got some price hikes in the 7-8 states. But that is amount to be around 60 basis points across on a weighted average basis. It continues to be very, very this thing, and the close interactions are happening with some of the state governments and large states. And because of this scenario and all thing, I think the state government will be looking at that positively. But I can't say right now which state will give, but definitely that is on cards.
Okay, so I think developments are pretty interesting. Commentary very strong. Thank you so much for joining in. Always a pleasure to speak to you as well. Nisha, over to you. Commentary seeming very strong right now from the management, though the stock has not run much in the last 6 months.
All right. Thank you so much, Hiral, for that very interesting and informative commentary coming in from Radico Khaitan, and over 2% gain there. Moving on then, Hyderabad-based Skyroot Aerospace is raising $60 million, which is set to boost its Vikram 1 launch aspirations. Rishabh Bhatnagar joins in with all the details. Tell us, Rishabh.
Absolutely. The headline is, of course, that India has minted its first ever space tech unicorn. This is the first ever company that has come out India in the space tech sector that has crossed a valuation of over $1 billion. This is, of course, thanks to the $60 million that they've raised in the current round. This comes right ahead of the Vikram 1 launch that they have scheduled, and that has been in the pipeline for a bit. Let me tell you a bit about this round. GIC, Sherpalo Ventures, as well as BlackRock funds have invested in this round. A very key member, a very influential tech investor, Ram Shriram, is also going to join the board of Skyroot Aerospace. What they will use these funds to is to sort of launch their scale-up, their launches that are in the pipeline. They're going to expand their manufacturing, as well as, of course, this is going to be a big boost for the Vikram 2 launch that is also in the pipeline. So all eyes on, of course, now the Vikram 1 launch, the first ever space tech company to receive a unicorn level valuation in India. So all eyes on Vikram 1 as well as Vikram 2.
Right, that's a big aspect in the aerospace business. And also, remember Vikram 1 being launched with ISRO by Skyroot. Thank you so much, Rishabh, for getting us all those details. Now, Meesho, that has really posted a strong set of numbers, but operating loss has really widened. The stock is gaining over 3% in trade, and Meesho says the path to profitability is sharpening for the company. Ad revenues are rising. Contribution margins are back to Q1 levels, and while there is no fixed profitability time for the company says it's steadily moving closer to positive EBITDA and also free cash flow. Listen in.
Right. So if I talk about the drivers for profitability, if you look at our contribution margin, it's largely composed of ad revenues related margin as well as logistics related margin. If I talk about ad revenues, which is sellers promoting their listing on the platform, that has seen an uptake in this quarter as a percentage of NMV versus previous quarter. So it's growing faster than our NMV. And also on the logistics margin front, we restored our contribution margin back to Q1 levels from where it had dipped in Q2 and Q3, given the disruptions that I just kind of spoke about. So now I think going forward, we will continue to progress from here. The fixed cost base below contribution margin would obviously grow at a slower pace than the growth in NMV that we are expecting, and that would lead to increasing operating leverage as well. So we'll keep improving the adjusted EBITDA margin as well as free cash flows in our business. I don't have a specific timeline on crossing the threshold, but like I mentioned, I think we've obviously made a lot of progress in the past quarter, and we'll continue to work towards that.
All right, path to profitability being defined by the new age companies listed recently. Let's take it to FMCG sector, and Emami steps into the personalized beauty, acquiring 60% of Ink Nut Digital for about 321 crore rupees cash, valuing the digital brands at 3 times the sales value. Mahima joins in with all the details and the number crunching behind the valuation and what it brings to the table for Emami. Mahima.
Right, so it's very interesting because, the acquisition of 60% of this Ink Nut Digital is going to happen in the next 30 days. The consideration stands at 321 odd crore, and remaining 40% will be acquired in the next 4 to 4.5 odd years. Now, valuations is at 3 times price to sales, but as of September 25, the cash position stood at around 225 odd crores. That cash position must have grown a bit, and from that they're going to make that payment of 321 crores. So the entire cash position, that means, is going to be used for this acquisition. Now, what does the company basically do? Engaged in personalized beauty and personal care segment, operating through flagship brands like Vedix and Skincraft. Vedix is basically, it integrates Ayurveda plus the modern data. So it makes these kind of products, and Skincraft is adopting the dermatology-led approach. So that's the product that Skincraft makes. Now, it's interesting to see that, the company that they've acquired, the turnover for that company has been reducing. It stood at around 231 crore in 22-23, FY 22-23, went to 196 crore in 23-24, and went down to further 175 crore in FY 24-25. So the question here really will be whether, pooling your entire cash position for this acquisition where turnover has been going down, plus whether they'll be able to scale this this turnover and bring it back to the original levels or not is something that we'll be watching out for. But of course, the acquisition has happened at an attractive level of 3 times price to sales, so not a concern there. But how they'll scale it up is a question from here on. So that's the overall view of this acquisition that Emami has made.
All right. Thank you so much, Mahima, for joining in with all those details. An interesting acquisition in the FMCG space, but also keep an eye out on the markets. And yes, there is a sustained recovery that is being seen. Nifty 50 is now comfortably in the green zone with 0.2% up almost in trade. And also 24,375 level crossed. And that is really adding to the momentum. Remember, the Midcap universe has already been outperforming its Nifty Bank, which has really led that particular recovery because it was really in the red and it has now moved on to the green. So keep an eye out on the market recovery and also softening crude prices, which are giving some bit of positivity in the market. Moving on, let's also take a look at what are the newsmakers and which are the stocks to watch out for in today's market. Well, Shivam joins in with that entire list. Shivam, what all makes it to your list today?
Well, yes, the first stock in our list today is Waaree Energies, as the wholly owned subsidiary Waaree Forever Energies 4 Private Limited has signed a power purchase agreement with the Solar Power Energy Corporation, and within this agreement, the company has to develop a 300 megawatt wind power project in Gujarat. Second stock is Rossell Tech Systems, where the company has secured a major order from an overseas defense customer, and within this order, the company will manufacture electrical wire harnesses, and the timeline for this project is to be executed within 8 to 12 months. Third stock is Servotech Renewables, and the company has received order from South Central Railway of 1400 kilowatt rooftop solar systems installation, and the company will be responsible for designing, manufacturing and installation of these systems across multiple railway sites. Now, the last stock in the watch list is the Aris Infra Solutions, where the subsidiary Aris Uniton Solutions Private Limited has announced a strategic alliance with Vadva Group for development of Vice City Township project in Panvel, and the gross domestic value of this project stands at 650 crores, and also the company is planning to release additional inventory of around 400 to 450 crores.
All right, Shivam, thank you so much for a detailed list on stocks to watch and what's really making news today. But also it's earnings season, and the big and important earnings that's really coming in from the consumption space today is Britannia. The stock is really gaining in trade. It's almost less than 0.5% up in trade, ahead of its quarterly numbers today. Mahima is here with what is it that the street is expecting in terms of positivity, and the stock is gaining on the back of what expectations? Mahima, tell us.
So for Britannia, the view is that overall revenue may rise by around 10%. EBITDA may see a growth of 15%. So this counter is going to be performing slightly better than its peers, and net profit may see a growth of around 18%. Gradual improvement in volumes can be expected, but going forward, I think it will be important to see as to how price hikes and calibrated price hikes is what Britannia takes, because Britannia is very careful when it comes to taking price hikes because they don't want their volumes to get impacted. Plus, overall, I think margin outlook will be something that we'll be watching out for, considering that if they take price hikes, how will that impact their margins? So in terms of Britannia, I think the other thing that is expected is here also the EBITDA is going to grow faster than the revenue growth, and that's something that we'll be watching out for as well. So this is the overall view of what you can expect from something like a Britannia as well.
All right. Thank you so much, Mahima, for all those details. Britannia stock and also the results to be watched out for, but completely out of time on this edition of Markets at 12. But do keep it with NDTV Profit. And thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Sharad Dubey, who's standing at the NDTV Profit market bit with all the action. Sharad, an interesting day of trade because yesterday in that last hour, you did see that spike that did come in on the back of a resolution plan that could be in place between the US and Iran. Today as well, if you see in terms of the way trade has started, I mean, there is selling pressure which is back when you talk about PSBs and IT, but it's very interesting where you're seeing the profit booking coming in.
Right, thanks a lot for that, Hiral. And yes, you're right, we had a good gap up opening, but then market is stuck in a range. If you just take the entire picture, of almost 150 point range, it's where the movement is happening. Of course, there's a Sensex expiry at play as well. Nifty Bank also looks flat right now. Of course, there was a positive news flow, so a good bump up was there. If you could just show the Nifty Bank also to understand, how that has moved. And yes, now also we are seeing a very zigzag kind of a movement and almost flat levels Nifty Bank is currently at. But nevertheless, the technicals look kind of supportive right now. Let's just see the factors at play right now. What happens now? We just have one more trading session for this week. The US-Iran deal optimism is still persisting in the market. Some trades are being made. And globally also we are seeing that Nifty Bank still remain in a range bound. And of course, if you look at the broader markets, that is where a little bit of momentum is there. The technical setup is still positive for both our benchmark indices, and the value buying is continuing in SMIDs, and this is a really good pattern, especially in the mid cap and the small cap segment. Risk off sentiment seems to come down right now, and that is where we are seeing that war risk premium also coming down. The rupee continues to strengthen for the second straight day. Hiral, this is an important point, and some RBI interventions are also at play. Global yields have cooled off. This augurs well for most of the equity markets, especially in the emerging market segment. And it's earnings. We have Bicon, Pidilite, Dabur and Britannia. All these major earnings would be coming in, and that's where the focus would be actually lying in. So yes, focus will be moving much more towards the fundamentals right now, especially in the earnings season.
Okay, interesting names that you're watching out for in terms of earnings, but let's quickly look at the watch list. GCPL, the pressure on margins is something that could be likely, and that's the reason why that stock is in focus. Meesho has reported a strong set of numbers. Bajaj Auto, the board has approved a buyback, and the quarter also has been pretty strong, and there is a upgradation happening in terms of the management where Rakesh Sharma is being elevated. Embassy Development, NCLAT has quashed the insolvency case, and since then that stock has been on fire over the last 2 to 3 trading sessions. IFL Capital is also buzzing in trade on the back of Fairfax India looking to invest 2,000 odd crores. Aptus, again a strong Q4, brokerages are upbeat. Paytm also has posted a good set of numbers, and a KPIT Tech has lowered their FY27 guidance, and that stock is under pressure. Polycab, again on the back of earnings, along with the Brigade Enterprises, which is reacting. Avalon also, along with CG Power, is reacting to numbers, and a Shree Cement. So that's the watch list for today. But over to you, Sharad, to take the rapid fire with Gaurav Sharma.
Well, thanks a lot, Hiral, for that. Gaurav, it's always a pleasure to have you. Good afternoon. We'll start our rapid fire segment, and the first stock in focus is going to be GCPL. Of course, the numbers were on the weaker side, and the margins, that's also an impact coming in. But what's looking on the technical charts? More sell-off, any stop losses?
Hi Sharad, very good afternoon to you. Thanks for having me today. Stock is looking weak. Most of the pharma stocks are underperforming, and so is Godrej Consumer Products. I see a further decline towards 1,000 and 980 zone coming in soon.
Right. Apart from the Godrej Consumer, also looking at the realty pack, especially the Brigade, the numbers also came in recently, also on the weaker side, especially on the pre-sales front. Your views on the technical charts?
Looking slightly weak, but caution is advised here. It is better to take a stop at 760 at the moment. If the stock fails to hold above the same, then some profit taking is possible. Otherwise, it is consolidating at higher levels.
Right, and the next stock is Meesho. The losses, we talk about it, especially the operational front, they have come down. A little bit of margins bump also. Gaurav, your views on this technical charts?
One should hold on to the position. Stock is looking relatively stronger here. 188 should be the closing stop. One can hold the position for immediate targets close to 225.
Right, next stock is Bajaj Auto over here. Of course, stock has been going up on the bonus announcement as well. But how do you see this, at least on the fundamental portion on these current levels to look at?
Good set of numbers company has reported. Good monthly sales figures. 150 rupees of dividend the company has announced. Things are moving in well. Their electric vehicle segment has also has started gaining pace. So one should hold on to the position. Things are looking bright.
All right, things are looking bright for Bajaj Auto. Well, the interesting stocks, and this is our rapid fire segment. Over to you, Hiral.
Thanks for that. In fact, let's see if any of these make it to Google Trends trending stocks as well. Let's see if any of these names are there, because last couple of days there were a lot of common factors that were playing out. Today you have HFCL, which was there yesterday along with the Vodafone Idea, but Bajaj Auto, CG Power and KPIT Tech, these are a few of the other names which are trending, which are on NDTV Profits list as well. We've spoken about a couple of other names, but Gaurav, anything that you have to say with regards to where a Bajaj Auto or a CG Power or Vodafone Idea go?
Bajaj Auto, Hiral is looking good. One should hold on to the positions. Any decline, 4 to 5% of cut on price front should be utilized as a fresh entry point for traders. Investors should comfortably go on holding the stock. As far as CG Power is concerned, it has also done well, created good value for their investors. Has been a traders fancy stock also. A clear-cut 650 to 860 plus levels up move witnessed of late. I think these are good times to hold on to your position, keeping a stop at 800 and look for targets close to 1000.
Interesting targets coming in on that one. In fact, the power pack has been in focus as well over the last couple of months. But thank you so much for joining in. Always a pleasure to speak to you. But as we are in the middle of earnings season and a host of earnings expected today as well, let's look at our Dabur in trade. Mahima joins us with all the details as to what could be the key expectations, because the stock is already at the day's highest levels with gains of around 0.9% coming in there. Mahima, what are you expecting from a Dabur?
Overall, when the Q4 business update came out for Dabur, right, it was the expectations seem to be largely in line with what the estimates are looking like, and EBITDA growth will be growing ahead of revenues. Revenue may see a rise of around 7.5%, EBITDA also around 7.7%, and net profit may see a growth of around 10%. Q4 business suggested that there is going to be mid-single-digit revenue growth. India FMCG demand seen growing at high single-digit rate. Home and personal care to grow in mid-teens, and international business will be hit by the Middle East tensions. Operating profit to grow faster than revenues. Now, key things to watch out for, I think, for Dabur, the one key thing that we'll be watching out for as to how the new CEO, that is Harjit S. Bhalla, is going to take it forward from here, because we've seen in the last year how new CEOs and CFOs have reshaped the landscape of a lot of FMCG companies. So that's something that I'll be watching out for, especially in Dabur.
Okay, so that's with regards to where Dabur goes. In fact, the trend has been very interesting with FMCG companies that have already reported numbers so far, because everyone has said that there could be pressure when it comes to margins if there are price hikes which are not taken. So price hikes could be on the cards as well. Two options there. And thirdly, companies are going to watch out for volume growth versus value growth in FY27. So that's what the street is looking at specifically when it comes to commentary, because Q4 has been very strong, taking all the GST impact into consideration. But the key is going to be how the first half of FY27 is actually going to pan out. But moving on, Bharat Forge is another one which will be announcing numbers as well. Let's understand from Puneet as to what is the kind of expectation, because you have the Class 8 truck orders that have been declining as well, but that is a very small portion from the overall, the overall picture. Around what, 7 to 8% is the kind of contribution that they see from Class 8 trucks, but that stock also is in focus. Puneet, over to you. What is your expectation?
Well, thank you for that. Just 4 key points, and as you rightly mentioned, one of them is the Class 8 truck order. Now, YOY, there's been a very strong jump, and for 2026 itself, the cumulative orders are up 110% on a YOY basis. Seasonality month on month is seen in this particular time frame, so it's down from 34% in the month of March, so some commentary there. Second one will be on results. Revenues is seen on a consolidated basis to grow at 18%. EBITDA expected to rise by 15%, but the margins, the percentage will be down by 50 basis points to 16.9%. Largely because of the commodity cost impact. So some commentary there will be something to watch. Profits expected to rise by 30% on a consolidated basis, but that's the second key point. Watch out for what happens in standalone. The revenue growth is expected to be lower, so consol business will do much better in this quarter. And just final 2 key points. After Q3, the company had said that the worst is over for them, and hence you saw very sharp reaction post that, and they also said that it's fair to say that the worst is behind us, and things are starting to look up both in the domestic and the export market. So that's point number 3. And fourth and final point on what to watch out for has been in the steel business of Europe, which was a loss-making entity, the timeline for that, and defense continues to be one of the promising areas for the company.
Okay, thank you so much for that. So Bharat Forge is going to be in focus, but very quickly, let's just pull up Nifty 50 on the screens along with Bank Nifty, because you have Nifty 50, which is retraced that 24,400 market. Again, we are spiked at the day's highest levels. So very strong moves coming in terms of markets right now. Let's pull up Bank Nifty on the screens as well. And this is something that we should be addressing as to what's happening there. Bank Nifty also seeing a strong spike. Is there something brewing when it comes to, US-Iran? That is the key question question that the street has been watching out for, and that's what the markets have been looking at as well. But probably some announcements that could be on the cards. But clearly, strong moves there. In fact, let me just ask Sharad as well if he's picking up any points. Let's look at the sectoral heat map, and we'll also see the contribution from Nifty 50 contributors right now to see the way markets are panning out. In terms of sectors, auto, energy, metals, all of them trading in the positive. It's only FMCG, IT and PSU which are lagging, but good moves coming in there. Let's look at the sectoral the heat map in terms of Nifty 50 or even the contributors when it comes to Nifty 50 to understand the kind of moves that we should be picking up. If you see in terms of Nifty 50 heat map, categorically HDFC Life, Bajaj Auto, M&M, NTPC, Grasim, top gainers coming in there along with the other names like Tata, you have Shriram Finance, ONGC, mainly Titan, Nestle, HUL, so it's that pack which is losing out. But Sharad, the quick question, I mean, a strong move coming in terms of Nifty as Bank Nifty as well right now. We've seen both of them actually go to the day's highest levels.
Well, that's right, Hiral, and largely it seems like there are some reports also coming in.
Yes, I think, Sharad, that's what we need to highlight right now. You have Iran and US who've reached an agreement on easing a blockade. I think a geopolitical analyst on the same is something that we should be talking about too as well right now. But let's stay with this story where Iran and US have reached an agreement when it comes to where easing of the blockade goes. And this is something which will actually be beneficial across sectors, across segments, and that's the reason why you're seeing that kind of a surge coming in terms of where markets are concerned. Bank Nifty at the day's highest levels with gains of 0.6% coming in there. You have Midcap 150 as well. Sharad, over to you. If you can just quickly go through in terms of what's happening with the markets, because an agreement on easing the blockade, which was one of the contours of the deal that we were talking about yesterday, that it seems has been cleared.
Yes, you're right, Hiral, and we can see that action happening, be it Nifty, Nifty Bank, Midcap, or the small cap indices. And this, you could say, is one of the biggest positives, reports. It's coming out. I remember in the morning itself, we had a gap up opening as well, as there were optimism coming in on the end of the war. But now this is a specific report which is coming in. I just want to read out. This is coming in from Al Arabiya. It's media reports coming in where the agreement has been reached between Iran and USA when it comes to the easing of blockade. Of course, remember, it's not a complete opening, but easing has started, and that itself is a very positive outlook coming in. I'd just like to show the top gainers in the Nifty, the BSE 500 index. You start understanding there's a good volume-based buying happening. So, Hiral, we'll be looking at the details also about this agreement, and of course the authenticity also, because at times what happens is these reports come and at times they fizzle out as well. And remember, today is a Sensex expiry also, so you expect volatility to come. But remember, the mid caps, small caps, all of them are seeing a good buying over here.
Okay, thank you so much, Sharad, for that. In fact, let me just quickly pull up NSE 500 components as well and see what's happening on that front and stay with that sharp spike that is happening in the markets right now. If you see in terms of BSE 500, from a Godrej Industries to Embassy Developers, Piramal Pharma, Craftsman Auto, Nuvoco, Vistas, all of them seeing a sharp surge as we speak right now, and very strong moves coming in terms of where markets are concerned. Just on that one statement that we've picked up, where the US and Iran have actually reached an agreement when it comes to clearing or easing the blockade in the Strait of Hormuz goes, and that was one of the contours of the deals that we were talking about yesterday. Yesterday we did see that a sharp spike come in terms of where markets were concerned in that last hour of trade, and a similar reaction that is coming in right now. 24,450 is what you're looking at in terms of where markets are concerned, 0.5% higher from the day's lowest levels. The gains are also looking very substantial. Let's quickly look at the contributors of Nifty 50 right now, and then we'll look at Bank Nifty as well, which has also climbed almost 0.6% higher. M&M, ICICI Bank, Reliance Industries, HDFC. These are the ones which are the top contributors today, but 155 points contribution is what you're seeing there. On the losing end, you just have a Titan, HUL, TCS as well as Adani Ports, but that surge when it's coming in terms of markets is seeming to be very strong. Some bit of easing coming in there. In fact, there is intense communication that is happening between US as well as Iran is what you're looking at. The intense communication is to gradually reopen the Strait of Hormuz is what you're seeing right now. So Iran and US have somewhere reached an agreement when it comes to where easing the blockade in the Strait of Hormuz goes, and there is intense communication ongoing to gradually reopen the Strait of Hormuz. On the back of this agreement, I think, is why you're seeing that sharp spike that's coming in terms of where markets go. Nifty 50 at the day's highest levels, Bank Nifty as well. Let's just look at individual charts when it comes to sectors. Let's look at what's happening to the defense space. Let's see what's happening to the consumption space, the banking space. If we can just get the individual intraday charts, that will give us an idea, and the advanced decline ratio at this hour, because that will tell you a trend of what's happened and how the advanced decline ratio in terms of markets have opened up as well. There you go. See, defense is seeing some bit of a cooling effect as well, because this is coming, the war is somewhere coming to a close. If you see in terms of the advanced decline ratio as well, your declines have receded slightly, but your advances have also gained, and we are going towards that 2000 mark. So that is telling you that there is some easing happening. But clearly, reports from Al Arabiya are indicating that there is intense communication to gradually reopen the Strait of Hormuz, and they are looking at, you know, overall negotiations which are probably going in the right direction as well. A sharp spike coming in terms of where markets are concerned, and overall easing of the blockade is what you're seeing right now. Intense communication, and this is coming hours to witness breakthrough in the Strait of Hormuz situation, is what Arab sources are indicating right now. A sharp spike coming in overall in terms of markets. So that's what we're picking up, Sharad. But Sharad, let's quickly move on from here on as well. You have Vedanta also, which is in focus in today's day of trade. You have Citi, which has downgraded Vedanta to a sell. Tell us more in terms of what's happening.
Well, that's true. There is a significant downgrade coming in for Vedanta when it comes to Citi, and they have mentioned a very important point, and that is the dividend distribution policy. There might be a big question mark on that. Why? Because now the demerger is complete, and of course, remember 90% of the EBITDA the street has given it to just the zinc business itself. And if the dividend distribution policy is not there, so there becomes an uncertainty when it comes to the overall cash balances and the cash uses as well. And that is why the street is definitely trying to understand what happens next. Is there a new dividend policy at play, or there's going to be some issues coming ahead? Of course, looking at the SME spot rates, largely the zinc business is fairly valued also right now. So a little bit of, you could say, concern coming in from the broking community when it comes to Vedanta.
Regards to Vedanta, but you know, I think Sharad, one thing is that I'm not able to take off my eyes from what's happening with the markets right now, with what's happening with crude. Let's pull up the rupee as well. Let's see what's happening with Brent crude right now, because I think that is also coming off. It's actually gone below that $100 per barrel mark. 99.81 is what you're tracking in terms of Brent crude, and that is clearly telling you what's happening on the war front. Let's look at the Indian rupee as well, and then we'll see what the futures and markets in terms of globally are indicating. You see the strength in terms of the dollar in the USD, and 94.36 is what you're tracking right now. Strong, you know, moves coming in terms of where the Indian rupee goes as well, Sharad.
Right, Hiral, interesting development coming in, and even Brent crude has gone below that 100 levels also. And just to decode this and give us a little bit more flavor on it, we're joined in by our managing editor, Tamanna Inamdar. Tamanna, what's the important developments happening here?
So Al Arabiya, I'm going by the Al Arabiya handle, and they are citing their Arabic sources, a well-entrenched channel in the area, that is reporting the coming hours will witness a breakthrough for the situation of the ships stuck in the strait. What the sources are saying, that there's an understanding that has been reached regarding easing the siege in exchange for the gradual opening of the Strait of Hormuz. Why this is important, Sharad and Hiral, is because now this is not talking about the two sticking issues, right? What Iran does with its nuclear weapons or its nuclear program.
So there is a development happening right on the strait.
Yeah. So they're not talking about that anymore, or even the other sticking point is whether Iran will let go of any toll or who passes through the strait and what they charge for it. Those are the two sticking points where the whole negotiation is stuck. The fact that this report, and this is Al Arabia's report, this is not our report, but the fact is that markets and crude prices and asset classes are now reacting to it, is because now they are talking about you remove
remove your blockade and I will remove mine, and at least let the ships pass. So if you have that first step, that will be seen as a big positive at this point.
Thanks a lot for that, Tamanna. And yes, that's an interesting point taken, Hiral as well. Let's look at the rupee also. Rupee is also doing well for the second straight day. Rupee strengthening. If you just pull out that, and the yields also, they also started cooling off as well. Hiral?
Absolutely. Thank you for that, Sharad and Tamanna. What's interesting is that the kind of conversations that are ongoing between the US and Iran, they are categorically mirroring what's happening in terms of the markets. You have markets which are at the day's highest levels. The strength that is building up in terms of the Indian rupee also, and Brent, which is down, which has gone below that $95 per barrel mark. Now, the next leg that the street is going to be watching out for is what happens when it comes to, freight insurance, what happens to where tanker rates go, because that's where the normalizing will happen as well. And the key is going to be the kind of positive impact all of this is going to be having in terms of individual companies, whether they will start flowing in from the second quarter of FY27 or the second half of FY27 is the key question. But clearly, after that spike, you're seeing that cooling back effect coming in there. Let's get in Sonam Srivastava, founder and fund manager at Right Research as well. Sonam, welcome to the show. Always a pleasure to speak to you. My question is, one leg of the US-Iran deal where reports are indicating that in terms of where easing of the blockade goes is where they have pretty much come to a closure there. What do you make of this? Because the spike that we're seeing in terms of markets is very interesting right now.
I think see, this definitely is a very big news, and I'm very fortunate that I witnessed it on your channel. But I think it's definitely a very strong move because if this blockade sort of extended, that could have a very negative implication on the Indian market with high inflation and a lot of worries in that front. So any solution that is coming, right, or movement towards a solution, it's definitely a big positive, and we're seeing that reaction in terms of the Nifty, in terms of the currency, etc. But obviously it's an unpredictable situation. I think with this news, it looks like things are moving in the right direction, right?
So things are moving in the right direction, Sonam. So do you think that now the trade is no longer about whether de-escalation happens? It's more about how fast the chain actually compounds?
I think that's again very subjective. I think we just have one news source that has talked about it right now. But it seems like things might unravel quickly because they are talking about a reciprocal deal where you open your blockade and I'll open my blockade. So I think things could move quickly, and the sooner the Strait of Hormuz is open, the sooner there will be normalization of the global trade, and that would be a huge positive for the Indian markets. But I think it is still unpredictable how quickly will that solution come into place, right? Because there are various things that they're negotiating on. Iran has its own set of demands and US has a totally different set of demands, and they will have to find a sweet spot between those for the solution to come in play, right?
Okay, so solution in play is going to be the key from here on. Sonam, if you have to look at individual sectors or stocks which were being affected on the back of the crisis, a lot of them, in fact, I don't know which one to even leave out. Defense as a space was something which did see a surge. How are you looking at, now seeing the defense sector play out? Because it's run up quite a lot. Valuations are not very cheap as well. If all of this settles down in terms of the war-like situation, do you think it would be time to book profits in terms of defense, or are you seeing something more pan out in FY27 from a company's perspective?
No, I think defense, I would not be, going bearish on defense. I think there could be a short-term reaction, right, where people maybe book some profit. But I think defense can be a very strategic play because, with this conflict coming up, you can see that a lot of countries, especially in the GCC space, they want to build their defense arsenal, and India becoming an exporter of defense equipment and different defense components can actually have some role to play there. So I won't say that we'll be selling defense yet, but there could be some reaction that could come into play. But I think there are a few defense stocks that we do like.
Okay. Sonam, stay with us. In fact, we have Vail Awad also, Dr. Vail Awad, West Asia strategist, who will be joining us quickly. But before that, One question I have with you is with regards to where OMCs go. Now that Brent has come below that $95 per barrel mark, and if it sustains at lower levels, your views with regards to OMCs?
See, I think that could be a positive move for a number of downstream companies. Like you can already see Hindustan Petroleum, BPCL. You can see there's a reaction that is coming up after the move. And I think that definitely could bring in relief because the petrol prices were not hiked in India, right? So this if there's a cooling down of crude prices, that does help these OMCs, and that could be a positive move to watch out there.
So positive move to watch out for. Thank you so much for joining in. Always a pleasure to speak to you. But completely out of time with this edition on trending stocks. And what a development where you're seeing signs of Hormuz de-escalation that could be coming in, Sharad. It's a wrap from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag.
Good afternoon, you're watching Lunchtime Trades with me, Shree Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at what the markets are up to, and a very sharp, swift recovery is something that you've seen coming in for Nifty as well as Sensex right now. Nifty up about 80 odd points, thereabout. Sensex up about 197 points as well. Let's quickly take a look at the sectoral picture as well. Now you're looking at autos that are in great shape right now, 1.9% uptick coming in for that particular sector as well. And when you talk about some of these other sectors as well, the likes of energy, metals shining bright as well, pharma, financial services, all in good shape right now. What's not doing so well is IT and FMCG, as well as PSU banks, but you've seen some amount of recovery also coming in for PSU banks. When you talk about the list of top gainers as well from within the Nifty 50, or from the broader universe as well, something like a Tejas Networks with that 16% uptick also is standing out. Piramal Pharma in good shape as well. And when you talk about the Nifty 50 as well, HDFC Life, Bajaj Auto, M&M, NTPC, Grasim Industries, all of those stocks as well buzzing away in trade. When you talk about some of the losers as well, something like HUL, Titan Company, TCS, Tech Mahindra, Nestle, all of those counters from Nifty 50 not doing all that well. And in terms of latest updates that have come out, of course, you do have some amount of commentary coming in and reports from Al Arabia that are talking about how Iran and US are going to be reaching an agreement on the easing of the blockade. And Arab sources are saying that intense communication is going to be gradually reopening the Hormuz as well. And that's something that the market seems to be picking a little bit of an update from as well at this point in time. And that's something that you're seeing in terms of the key updates right now. Let's also get you some insights on this as well. But before we do that, let's also quickly take a look at some of these other buzzers as well. So, of course, there's Bharat Forge that's in focus, and we'll also talk about that on the bottom of your screens. Of course, you're seeing that result also coming in. Net profit down about 17.5%, revenue down about 17.5% as well. EBITDA about 14.1% uptick you've seen coming in there, and EBITDA margins at about 17.2% versus 17.7% on a year-on-year basis. So that's largely what you're seeing coming in as far as something like a Bharat Forge is concerned. But with that in mind, let's also get you some other insights as well. Sarah Claire, foreign policy analyst, joining us on the show right now. And just as we were talking about a moment from right now, you do have those reports coming in from Al Arabia, Sierra, and this is a very important, report that we've got right now. You do have the market that is really cheering that right now. But that aside, how are you looking at this sort of commentary coming in? There's definitely a lot more optimism that's back on the table right now.
Yes, absolutely. I think it's, there is optimism. There is movement happening on these U.S.-Iran talks and easing the blockade and Operation Freedom, which the U.S., had already proposed to get the ships that were stuck in there out. And so we'll just, have to take it one day at a time. I think the Iranian government is reaching a point. I was reading some reports that said, 2 to 3 weeks before total collapse, before irreversible damage on their oil infrastructure. So there are people in Iran who don't want to see that happen. And, it's possible that those people have been able to push the decision makers to some kind of agreement.
That's right, Sarah. In fact, the market mood has also shifted because after a long time, the crude has gone below $100 per barrel, and that is on the hopes of some sort of reconciliation, at least, and that hope is really building in. But Sarah, I wanted to understand from Iran's point of view, what is it that will be the pressure point for them to really come to a conclusion in terms of the negotiation? US, of course, is pressured by also international community as well as their own in-house, developments and political developments there. But Iran is sitting in a position of strength right now, choking that Strait of Hormuz. So what are the pressure points for Iran which will get this bargain done?
Well, I think there's two main considerations for Iran. Number one is the damage to their oil infrastructure. They can't store oil, and the oil that they're producing has nowhere to go. So they're facing the threat of critical damage to their oil infrastructure. And the second issue is the irreparable economic damage that is happening to their country right now due to them not actually being able to get any revenue at all. Their revenue is dramatically reduced. Because they're not selling oil to China mainly, who was, their main customer. And so that's starting to reach, I'm sure, the military who, if they don't get paychecks, Iranian leaders are looking at, possible mass defections from the military, all of these things that are actually making a difference to the leaders. Of course, the Iranian people have been suffering economically this entire time, but we need to look at what actually makes a difference to these leaders. And we are getting to that point from this blockade.
And, in terms of what's happened this week as well, we did see diplomacy taking a little bit of a backseat. Now it's back again in the spotlight. So against this entire backdrop and this very important change in stance from both sides, how are you looking at some of the recent commentary that has come out and the way that both sides right now are positioning themselves?
Well, you saw Secretary Rubio, who was at the White House press, he was filling in for the press secretary, and he talked a lot about Iran. And, he always puts it back on Iran, that they cannot have a nuclear weapon, and they have to stop, supporting terrorism and terror proxies. And I think that just coming back to those very simple issues shows, where the U.S. position is. President Trump is not, interested in remaking Iran in his own image or in the American image, but he wants to make sure for the world that Iran does not have a nuclear weapon. And as you said, we're seeing diplomacy come back. We're seeing the Iranian leadership is now, possibly agreeing to these the American, non-negotiables, the American red lines. And so we could actually see some movement start to happen and see the oil and the Strait and the shipping issues start to get resolved.
No, absolutely, and here's hoping that really does happen. But, lastly, just before we let you go, I wanted to get a quick word in terms of how this has also been a lesson in perception. The entire war and the commentary that has come out around it, especially from the US side, there's been a lot of optics that have been in the center of all of this right now. How are you looking at that as well? And how do you think that evolves going forward, given all of these reports that we're seeing right now?
Well, I think, in terms of the optics, President Trump kept up the pressure. And what's important is he didn't, go for making this into a full-on war. He didn't go for, setting a timeline on this. Oh, we're going to be there for a year. We need this much military power for a year. And those type of statements, which is how you've actually seen past American presidents kind of approach things, because they thought that it would, intimidate possibly the enemies. And I think we're seeing a shift where we Americans, are finally understanding in the Middle East, they are not going to respond to that kind of intimidation and that kind of messaging. And so President Trump has played his cards very close to the vest. He's kept all his options on the table, but ultimately, has repeatedly said that he wants to resolve this quickly. He doesn't want to stay there. So I think that's an important shift. And then in terms of what could happen next, I hope that the diplomacy continues. I hope that the Iranian leadership that is obviously, some of them are seeing that, this crisis is going to have long-term effects on their country, and it's going to have worse effects on their leadership and whatever they want to hold on to, whatever kind of power they want to hold on to. And so it's more logical to engage in the diplomatic process in a constructive way. And I hope that that faction of the leadership does, in fact, push towards actually signing a deal and actually going through with this, because we're seeing positive signs that there is a faction that does exist in that. So we just need to make sure that those people are the people who, have the power to follow through.
No, absolutely, Sierra. And if there's 1 week to be optimistic about all of this since the war started, it's definitely decisively this one. We've seen a lot of positive commentary also come in. Thank you so much for taking time out and joining us this afternoon, at least for us. Let's also move on and take a look at some of these stock-specific action buzzers that we also have. And Nisha, there's a lot that we're looking at right now. IFL Capital also very important updates that we have coming in on that front.
That's right. In fact, Fairfax is going to be the co-promoter in IFL Capital, and this is a news development that was broken right here on NDTV Profit, and this news break is getting confirmed now with the announcement that has been made by IFL Capital, and the stock is up over 5% in trade on the back of that. Remember, 2,000 crore rupees of infusion is really auguring that positive momentum. Let me welcome on the show the management are Venkat Raman, the co-promoter and MD of IFL Capital, joining in with all the details. Venkat, many congratulations on this deal. What does this deal really mean for IFL Capital and this fund infusion? How is that going to be used for the growth propensity of the company?
As you rightly pointed out, Fairfax has been a very long investor in the IFL group. And we have been partners for the last, I would say, 15 years or so. And so the reason this transaction was done is that A, it helps us to improve and augment our balance sheet and financial strength, also gives us necessary capital for growth in the near future. And more importantly, the way the transaction is structured is that Fairfax wants to become a promoter. So they have an intent to take their shareholding to 51%, post open offer, post pref allotment, post everything. And they also want to be a part of the promoter group. So we think that we'll benefit from their name, their brand, their financial strength, global expertise, international standing. And the use of proceeds of this fund is basically to improve our financial standing and also to basically scale up all our businesses. As you know, we have a strong presence in investment banking, institutional broking, and we have also a broking business, but we are now trying to scale up our wealth management practice. So this will help us to scale all our businesses in the days to come.
That's right, Venkat, well pointed out. Wealth and asset management, a very competitive space at that, and you have let go of that with the separation of 361. How is the promotership of Fairfax and their expertise as a promoter really going to help you scale up these new businesses in a very competitive area?
True, because Fairfax has a global standing. They have, I would say, they have an experience across the globe in various businesses, especially in financial services. They have a strong, I would say, balance sheet, credibility, brand, reach, and global expertise. However, having said that, as we speak right now, we believe that the current businesses we have, all of them have a huge runway for growth. So we have presence in institutional banking, institutional broking, investment banking, wealth management. Even in wealth management, if you see our last quarter results, we have announced that we have already got into asset management because we have a portfolio management services. We have launched our own AIFs. So we think that we have all the engines of growth. And having a globally renowned partner like Fairfax will obviously give us an edge. And as you rightly pointed out, Indian financial services is hugely competitive. So we think the association with a brand and partner like Fairfax will help us to improve our competitive positioning.
Right. Venkat, also give us the details of the open offer which got triggered because of the preferential allotment of shares. And also, Fairfax was critical about having a controlling stake in the company as well as part of this transaction.
Yes, actually, as we speak right now, pre the transaction and pre-open offer, pre-pref allotment, Fairfax and associates already have about 30.5%. And the aim of this entire transaction is to do a primary of about 2,000 crores as 350 rupees into the company. And post that, they'll make an open offer. And their stated aim and objective is that they want to be promoters and they want to take their stake to 51%.
All right. And open offer details?
And this is all obviously subject to necessary regulatory and shareholder approvals. So actually, once this pref allotment is done, then they'll make an open offer because as per the existing SEBI guidelines.
That's right, Venkat. And what about the timeline as well as the 2 board seats that also Fairfax is going to get? What all of this means, and also when are you going to conclude this transaction?
I think the necessary shareholder and regulatory approvals, in my opinion, it's a guess, will take roughly about 4 to 5 months or 4 to 6 months. So we hope to conclude this entire transaction in this financial year.
Can you give us some growth projection also of the company with the use of these funds?
You have already said that it will fire up all cylinders on all fronts. But can you give us a sense on the project?
All right, lost that connection with Venkat, but got most of the details of this large transaction. Shreyansi, it means a lot because Fairfax is going to own this company, IIFL Capital, and that will be a very big thing in the financial services space. Also remember that IIFL had IIFL Wealth, which was 361. It got separated, and with that, that wealth and asset management business went out of the purview of this particular group. And after that, now they are rebuilding it with the expertise of Fairfax. So huge competition coming in from IIFL.
Well, absolutely, and Nisha, the stock also seems to be sharing that view as well, because, you do have that 5.5% uptick also coming in when it comes to this counter. But it's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business.
Welcome back. Thank you so much for staying tuned in. Well, it's time now to take a look at Bharat Forge yet again and take a closer look at their earnings fine print. Of course, we told you when the numbers were out as well, the stock. Look at that sharp spike that has really come in for this particular counter. Let's go across to Puneet, who's standing by with all of those important details.
Well, thank you for that. It's definitely been a very interesting quarter for the company and certain commentary driving the momentum now. But in terms of revenue, it's been almost a 17% jump at 4,528 crores, largely in line with the number that we were working with. EBITDA has come in at 778 crore, again an in-line number with the overall profit EBITDA margins at 17.2%. And the profits are subsequently down 17% at 233 crores, missing their estimates largely because of a one-time impact on the consolidated business. And these all numbers which I mentioned are consolidated because of a one-time impact of 98 crores. But despite that, and in the standalone business, though the company has taken a 450 crore impairment impact in this quarter, largely on the e-mobility division that the company has. So, Baba Kalyani in a statement has mentioned that the impairment is an acceptance to take a fresh look at the electric vehicle business and hence a bigger impact seen in the India electric mobility business. But the stock is up 5% today and largely on the back of the guidance for FY27, expecting a 25% revenue growth is what the company has said in FY27 with a commensurate increase in the EBITDA as well as the profitability after tax as well for the India manufacturing business. This will also be driven by execution on orders that are across the business and recovery, especially in the export market. And that that guidance essentially for FY27 is why the stock is up almost 5.5% right now.
No, absolutely. Quite the upbeat guidance coming in. Thank you so much, Puneet, for joining us with that. And there you go. That's the 5.5% uptake also that Puneet was talking about. But let's also talk about something like an Emami also that's also in focus. The stock, of course, not doing all that much. But in terms of the updates, they've stepped into the personalized beauty segment as well, acquiring about 60% of Inknut Digital for somewhere close to 300 crores cash, valuing the digital brands at 3 times sales. And that's the really important update also coming in on this front. Let's go across to Mahima, who's standing by with all of those important details.
Right, so it's very interesting because the acquisition of 60% of this Inknut Digital is going to happen in the next 30 days. The consideration stands at 321 odd crore, and remaining 40% will be acquired in the next 4 to 4.5 odd years. Now, valuations is at 3 times price to sales, but as of September 25, the cash position stood at around 225 odd crores. That cash position must have grown a bit, and from that they're going to make that payment of 321 crores. So the entire cash position, that means, is going to be used for this acquisition. Now, what does the company basically do? Engaged in personalized beauty and personal care segment, operating through flagship brands like Vedix and Skincraft. Vedix is basically, it integrates Ayurveda plus the modern data. So it makes these kind of products, and Skincraft is adopting the dermatology-led approach. So that's the product that Skincraft makes. Now, it's interesting to see that the company that they've acquired, the turnover for that company has been reducing. It stood at around 231 crore in 22-23, FY 22-23, went to 196 crore in 23-24, and went down to further 175 crore in FY 24-25. So the question here really will be whether pooling your entire cash position for this acquisition where turnover has been going down, plus whether they'll be able to scale this turnover and bring it back to the original levels or not, is something that we'll be watching out for. But of course, the acquisition has happened at an attractive level of 3 times price to sales, so not a concern there. But how they'll scale it up is a question from here on. So that's the overall view of this acquisition that Emami has made.
Absolutely, Mahima, and that question is something that time will answer. But of course, you do have that important acquisition news that you're looking at. The stock, of course, like I mentioned, not doing all that much, but it's important to take a look at this update as well. But moving on to more news and updates, NSE OFS is set to see 4 to 5% equity dilution, with PSUs lining up for the stake sale worth about 15,500 crore rupees. SBI may sell more than 1% of this stake as well. Nimit Dixit standing by with all of those details.
Yeah, like you said, we're looking at a stake sale dilution of about 4 to 5%. Now, what this means is on April 27th, PSU said that they'd be pushing to, the government is going to be pushing the PSUs to sell about 10% stake each. Now, how this lines up is PSUs own about 31% of NSE. So just simple maths tells us that that will give them a dilution of about 3.1%. Now, how? Let's break this down. The largest shareholder, LIC, may sell about 5,300 crores, over 1% of NSE's equity. Stock Holding Corporation is going to sell about 2,200 crores, which is 0.44% of NSE's equity. The SBI Group, like you already said, 3,700 crores, 0.75%. And of course, PSU Insurers together may sell 4,000 crores, which is another 0.8%. Now, this totals to about 3.1% at about 15,000 crores. What NSE has told, what is widely known in the news and in reports, is that NSE is looking at a valuation of an issue size of about 20,000 to 23,000 at 4 to 5%. Now, how it will get there is through the other institutional investors who are also looking to invest. This includes New India, GIC, Temasek, Chris Capital, all looking to put in some money, and NSE is going to dilution mark at 23,000 crores.
No, absolutely, and thank you so much, Nimit, for joining us with all
dilution mark at 23,000 crores.
No, absolutely, and thank you so much, Nimit, for joining us with all of those details. So there you go, that's an update coming in on the OFS front for NSE, and that's something that you're talking about. But let's also quickly take a look at oil as well as gold before we wrap on the show. Oil, of course, you're looking at a little bit of a steady move coming in. That has since, in the last few minutes, also changed just a little bit right now. But when you talk about the key triggers, of course, the Hormuz reopening is something that remains important. You've had Sierra Claire talking about what that roadmap could really be looking like as well in terms of those key triggers. Gold on the flip side, extending gains, and that's above and beyond that sort of surge that you saw coming in for gold prices as well. So you do have a softer dollar that is really helping prices. But let's also move on and get you a very important update before we wrap on the show, as key Air India board meeting is underway in Mumbai right now. And issues like CEO succession and financial stress will be dominating the agenda. In fact, Danish is joining in with all of those important details. Danish.
Well, that's correct. NDTV Profit is reporting live from the headquarters of Air India right here in Gurugram. Sources are telling us that the Air India board meeting, which started post 11 a.m., it is about to get over soon. The board initially discussed what the performance of the airline was in the previous fiscal, and we saw that what sort of challenges the airline faced in the past year. Besides this, sources are also telling us that the board could have also discussed certain cost-saving measures, which we will come to know about in a day or two, as Mr. Campbell Wilson will be doing a town hall with the Air India employees tomorrow. Besides that, we are also coming to know from our sources that the board has also discussed that what the targets of the next year should be like, and the new financials of the new fiscal year, they have also been discussed. If we talk about the attendance, Mr. N. Chandrasekaran, who is the chairperson of Tata Sons, he's there for the meeting. Besides that, Mr. Campbell Wilson, the CFO, and other board members, including the CEO of Singapore Airlines, who's also on the board of Air India, he's also present in this meeting. So the board meeting is about to get over very soon, and we'll get some fresh more details. But the top takeaway is that the board will take certain cost-saving measures for the new fiscal.
No, absolutely, and this is an important one to say the least as well, Danish. Thank you so much for taking time out and helping us understand what really happened right now. But let's also take a break on this note. That's all the time that we have on the show, in fact.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. The next half an hour will take you through the most important small cap stocks that have been buzzing in trade today. So first, let's see what's on the show. Firstly, we'll be speaking with the management of BMW Industries, a strong record quarter that the company has reported. PAT at an all-time high. The stock is up nearly 60% in the last 1 month. What's the way forward is the key question. What's their FY27 guidance is the key question that we'll be asking the management. Second, we'll be also speaking with the management of Oswal Pumps on a recent order win announcement that the company has done of close to 162 odd crore rupees. Apart from that, we'll also be looking at stocks like Apcotex Industries, where if you look at the volume, they're nearly 8.5 times on the back, 8.5 times their 20-day average, and the stock has run up on the back of a sharp margin uptick. When it comes to Orient Tech, again, a sharp surge in volume numbers. The stock is up nearly 24% in the last 1 month. So what could be buzzing here is something that we'll try to decode on the show today. And lastly, we'll be also speaking about Vimta Labs. The FY27 revenue target that the management has given is close to 500 crore rupees and is a pharma and a food sector that will be driving growth. We'll speak more about this in detailed manner on the show. So stay tuned and keep watching the Small Cap Buzzers show. Firstly, if you look at the markets now, the Nifty, it has managed to hold on to the 24,300 level. Not much of gains that we are seeing, largely a flat kind of trade. We had seen this spike coming in based on news reports which suggested that there could be that the Strait of Hormuz could start very soon. Based on that, we had seen that spike, but again that has fizzled out and the markets are largely stable and holding on to the 24,300 level. If you look at the sectoral indices, on that front, it's auto and defense names which have been buzzing in trade, but on the losing side, we have consumer durable, FMCG, IT and PSU banks which have been declining. Also, it has been a very good day when it comes to the small cap names. But Varsha, could you take us through which are the key stocks that have been buzzing there?
Yeah, absolutely. You know, a lot of stocks are buzzing on the back of earnings and volumes as usual. Well, you have Raymond Realty, which is again buzzing yesterday. If you see, the stock was also was also buzzing today. It's almost up 12% in trade. You have Cross also in focus. If you see, again on the back of strong volumes. If I were to talk about Orient Tech is other stock which is again buzzing on the back of volumes. Omax Auto, well, this stock's, I mean, in the last 5 or 6 days, the stock is up almost 50 to 60%, if I'm not wrong. Today, if you see, the stock is almost 10% up. Something is cooking in this stock. Well, Rossari Bio is again buzzing on the back of volumes. On the loser side, though, you have Raymond Lifestyle, again in pressure. On the back of Q4 results. CL Educate, Ratnavid Precision are some of the stocks which are under pressure. But one company which is in focus is BMW Industries, I would say. Well, the stock is if you see, the stock is up today, I think 6 or 7%. This is on the back of Q4 numbers and strong numbers that the company has seen, and the EBITDA is the key highlight. EBITDA margin, the spike in the EBITDA margin is the key highlight. But what were the key drivers of this growth? Let's understand from management. We are joined by Harshal Bansal, who is Managing Director at BMW Industries. Well, Mr. Bansal, congratulations on a strong set of numbers and welcome at NDTV Profit. First question, the margins were the highlighting factor when it comes to your results. Good spike in EBITDA margin. What were the key drivers, if you could help us understand?
Thank you so much for having me here, Varshaji. I think a lot of these things have been playing out over the last year. I think the volumes came back with quite a bang in Q4. That with everything we did in terms of belt tightening in Q3, I think pushed up our margins overall.
Right. And so March 26 saw, this quarter saw 28% of margin. Now, you've started your journey when it comes to FY27. What is the revenue growth and margin you are penciling in, and what will be the key drivers for this growth that you have?
So there are two key drivers, Varshaji. We expect our existing business verticals to continue to power the growth, specifically pipes and tubes, but more so our greenfield project in Bokaro starts to come on stream in a phased-wise manner starting this quarter. So we stick to our earlier guidance between FY25 and 28 of 75% top-line growth and 40% PAT growth, CAGR.
So, sorry, 75% revenue growth?
Top-line CAGR and 40% PAT CAGR between 25 and 28.
Okay, between 25 and 28. Got that point. Also, sir, sticking to that margin point, for the whole year, if I were to speak about, your EBITDA margins were 25%, but for March 26 quarter, it was 28%. Now, in FY27 and FY28, what is that margin that investors should pencil in?
So in terms of EBITDA margin, I would suggest, good to pencil in something in the range of 11 to 12%. because our business model will also substantially change going forward. So yeah, that's it for you.
Sir, you said EBITDA margin of 11 to 12%, if I'm not wrong, because currently your EBITDA margin is 28% in
correct, but the business model changes substantially going forward. So from a pure play conversion business, we also start our own manufacturing and sales.
Okay.
So the absolute growth numbers will be, like I mentioned, top line 75% CAGR and bottom line 40%. But in terms of percentages, EBITDAs will normalize to about 11 to 12%.
Okay. Now, over FY25 to FY28, you're expecting this kind of growth, but over FY25 to FY26, the growth has not been that much. I understand that there will be more capex that will be coming online, which will help you. But isn't it a very tall task that you think, or you are quite comfortable that you will be achieving this?
We are quite comfortable, Shomit.
Okay. And one more thing I wanted to check on the steel prices. For the fourth quarter of FY26, we have seen a very strong growth in the steel prices. Was that also one of the reasons that benefited your Q4 numbers, or how does that benefit your business?
So actually, on the conversion business, it really doesn't matter, because for us, this is a free supply from the customer. So steel prices don't affect our numbers.
Right. And sir, this Bokaro project is the biggest strategic shift, in the company's history, because this will be from conversion led to value added coated steel, if I were to talk about.
That's
now.
Right.
Right.
That's
So my question is, what gives you confidence on the demand, absorption once phase 1 starts in Q1 FY27?
So, there is a substantial amount of headroom available in terms of growth, GDP, steel prices, steel consumption. If you look at the per capita steel consumption, it has been consistently growing. If you look at the capex by the government, it has been consistently growing. The usage of steel has been shifting from the base galvanized to higher value-added products like color-coated and all. So that, and in terms of our capacities and looking at the entire steel universe, our capacities are not that big yet.
Okay. The Middle East issue, has that had any impact on the raw material cost for you in the fourth quarter? Are you expecting any impact in the first quarter because of the same?
We expect some effect in terms of prices of gas and fuel, but beyond that, nothing much.
How much can that impact your margins?
Not substantially.
Okay. Also, meanwhile, given the fact that you're doing so much capital expenditure, your debt has increased substantially over the last 3 years. How do you plan to reduce that?
So a lot of the debt is on account of the two projects that came on stream last year. One was specifically the capacity expansion in pipes and tubes, and the other was the rooftop solars which we installed. Going forward, there is a new capex of about 500 odd crores, which is on account of the Bokaro expansion. We are fairly confident that once things start to come on stream, starting this quarter, you'll start to see a tempering of the debt.
Right. And Mr. Bansal, coming to pipes and tubes, the utilization is still, I believe, 34%. Just wanted to understand, when will you see the majority of utilization, maybe 60-70%? When can investor expect that kind of utilizations?
So I think you'll start to see from the existing 34% to maybe 60, 70, 65% over the next 2 to 3 years. And like I mentioned, Varshaji, those are the specific drivers for growth looking at the existing business model. So our conventional business, this is one of the engines that will power it.
Okay. Just last one question from my side. In your presentation, I was seeing that you would be receiving the subsidies for PLI scheme and the state incentive schemes as well. Any timeline on that front?
So there is Shomit, that's the reason why we've not taken it into account when we talk about our financials, because one would like to keep his fingers crossed in terms of the timelines.
Okay, but can you just quantify the amount?
So again, in terms of the PLI, the last year for applicability of the PLI is FY29, and for the submission of the application is FY30. And in terms of the state subsidies, again, it's over a period of time, maybe 5 or 7 years. So whatever the benefits are, they will be spread over a period of time.
Okay, and just one last question, sir. Sorry to again ask you on this one.
No, please go ahead.
The amount, whatever you will receive, you will use it to reduce your debt?
Exactly.
Okay.
All right. Well, thank you so much, Mr. Bansal, for having a conversation with us, and all the best to you.
Pleasure, Varshaji. Thank you so much.
Thank you so much. Well, this was BMW Industries, expecting a strong growth in next 3 years. But moving on, Oswal Pumps is also in focus. Well, the company gets empanelment from MSC DCL for 6,896 solar water pumps, and this order is under PM Kusum B scheme. But to speak more about this, how is the opportunity for the company going ahead, where you're joined by Mr. Amulya Gupta, who is director of Oswal Pumps. Mr. Gupta, welcome at NDTV Profit. Just wanted to understand firstly on the, you're considering this order of 162 crore. Where does your order book goes, and as of today, what is your order book looking like?
Thank you so much, Varsha. Definitely, we have just received an order from Maharashtra regarding 6,900 pumps, and our current order book is around 13,000 pumps, which will be executed in the next 60 days.
Mr. Gupta, talking about the order book, overall, if you could help our viewers to understand the order book in value, and what is the execution timeline of that order book?
So our order book is approximately 350 crores, and these orders will be executed within 60 days of allocation.
Understood. Also, Mr. Gupta, Maharashtra is one of the most competitive, solar pump markets. Now, what differentiate Oswal Pumps in winning this empanelment against your peers?
Absolutely. So definitely Maharashtra is one of the major states where we are working since last 2 years directly. And definitely we have achieved around 10% of complete Maharashtra allocations in the past 2 years. So definitely we're expecting much more in coming years.
Okay, as you're expecting to win more orders in the coming years, if you could just quantify this for what is the total worth of orders that you have placed bids, not only in Maharashtra but overall in the country, and usually what has been your success ratio?
Absolutely. So we have, in the last 2 years, we have approximately executed more than 125,000 pumps across India. If we talk about Maharashtra alone, we have done around 50,000 under this present scheme, which is Magil Tyal Yojana, and more than 64,000 pumps have been done under the PM Kusum Yojana.
Okay. Now, on how has been the growth when it comes to the export market?
So we are expecting around 25% growth in the export market as well.
Okay.
In the current.
I believe in the third quarter, I could not get the number. What is the kind of growth that you're expecting in export?
Expecting around 25% growth.
25% growth. Okay. I believe in the third quarter, you did mention that the PM Kusum 2 Yojana would start from March and April. So has that started? Have you started receiving orders on that front as well?
Basically, we are expecting the launch of PM Kusum 2 by end of this quarter. And definitely by mid of second quarter, we are expecting new orders from PM Kusum 2 as well.
Delayed is what you're saying? Because I believe in the third quarter call, you did mention that it will happen by April.
Yes, so definitely we are expecting within this quarter.
Okay.
And so will the current manufacturing capacity will be sufficient if, Kusum 2.0 expands or scales aggressively? Or should investors expect another round of capex?
Absolutely. So within the current capex, we have already increased our capacities to approximately 150%. And definitely this will not impact any of the production delays once the PM Kusum Yojana launches.
Sir, just to clarify on the order book of pumps, I believe by the end of third quarter, your order book stood at close to 20,463 pumps. So has that order book declined?
No, that order book has been executed in the quarter 4.
Okay. So this is new orders completely.
Yes, there might be few orders from that orders, and there have been new orders coming up. And definitely, we are expecting few more orders from UP, from Maharashtra as well in the coming weeks.
Slowdown in order inflow, right?
Yes, there's no. I think we'll be having good amount of orders in the coming weeks, and we are also focusing on new PM Surya Ghar Yojana as well.
Understood. And sir, you have mentioned in your last call that you're expecting 30-35% CAGR growth, but just wanted to understand, do you want to inch that target up? How is FY27 looking like when it comes to your revenue growth and of course the margins?
So I think if we talk about 27, there is no challenge. We are not seeing any challenge in the revenue growth. I think that will be perfectly inclined with our business, and we have already opened many wings where we have strongly will be strongly achieving the targets.
And what that target would be, sir?
The targets will be approximately same, the 35% CAGR we are expecting.
Why I'm asking you is because I think from 24 to 25 you almost did 89-90% of growth, and I think your FY26 is also looking good. I know you're on silent period, so we won't be talking about FY26, but when it comes to FY27, 30 to 35% growth, isn't that conservative?
I think we're taking conservative. We have much more plans, but what we are 35% is what we are shortly expecting, and definitely we have plans, much more plans.
And so what about margins?
I think margins will be similar. I think there won't be any major substantial change in the margins.
So,
there can be a small decline due to the prices, but I think there won't be any substantial differences.
Okay, so can we expect like 27-28% of margins?
Somewhere near that, absolutely.
Okay, and also, sir, considering the increase in raw material prices all over, how is that impacting your company per se?
So definitely, we have a supply for at least 2 quarters, and I think that won't be a much substantial difference in the margins.
Okay, and sir, there were concerns about your working capital cycle, especially when it comes to receivables. So receivables were very high, in H1. What's the update currently, and how are you addressing those concerns?
I think regarding the working capital, there has been a strong inflow in the last quarter, and definitely we have been planning for this month, this quarter as well. So I think that will improve at a much better level.
Sir, lastly, do you believe PM Kusum is now entering a scale-up phase similar to what rooftop solar saw a few years ago?
Absolutely. We're expecting PM Kusum at a very bigger level.
Understood. Well, with that, thank you so much, sir, for joining in and having a conversation with us, and all the best.
Thank you so much, Varsha. Thank you.
Thank you.
Well, that was the management of Oswal Pumps. Now, before we go on to our next small cap stock, let's get in Sharad to understand what's been buzzing on the F&O side. Sharad, quite a dull day today, at least when it comes to the benchmark.
Exactly, it's quite a dull day. Initially, there was a minor gap up, and then there was a little bit correction, and then news flow coming in from the geopolitical front, and then we saw some good levels. But to be honest, we are at the same level technically where we were at the 1045. Of course, M&M, NTPC, Kotak Mahindra, they are the top gainers. M&M, some good buying has come in, especially in the last 20 odd minutes. But largely, we see it's a very narrow range when it comes to the main indices. Even Reliance is in the green, but not so much also. HDFC Bank is also largely flattish right now. The sell-off little bit is there in the IT space. If you see stocks such as Tech Mahindra and TCS making it to the list. Interestingly, Titan and HUL is also where a little bit of concern is there. But the Q4 numbers is something which we are watching out for. The larger numbers, players also coming, especially Britannia and Dabur. We'll be focusing that as well in the F&O segment. But largely right now, it's a very neutral kind of a movement happening in the asset classes. Let's look at the stocks in focus, the long build-up, what makes it to the list. And over here, we are having Polycab. It remains unchanged. Last time also, it was up 6 to 7 odd %. With Bharat Forge, this is where a little bit of more positions are being added. Stock is up almost 5%. Apart from the long build-up. Let's look at the short build-up, and then we have KPIT Tech. Not major change, but still the stock is down 4%. Last time also it was the same story. Godrej Consumer, the sell-off has intensified a bit. Of course, management did speak about the margin pressure in the coming quarters, and that's the concern coming in. Long unwinding continues for Oracle Financial, but no major trade you can expect out of it. Same story is there for Bandhan Bank. It's entering into that round of consolidation, at least on the short-term basis. Apart from this, let's look at the short covering candidates, and Paytm is seeing a good buying. It's largely some kind of an institutional move as well after its earnings coming in, and for the core business, core margins were better than the street estimates. And Force Motors, we're again seeing the buying happening. It touched briefly the 21,000 mark, and now stock is trading at around 4%. So it's largely a stock pickers market. We are awaiting some Q4 numbers, but definitely quite dull, as Amit had mentioned, when it comes to the benchmark indices.
Well, on the benchmark, but a stock pickers market is what Sharad is telling us. Well, let's move on to our next small cap stock, Apcotex Industries. Strong set of numbers, strong margins, strong volumes. Let's get in Shivam with more details on this counter.
Well, yes, the stock has hit upper circuit in today's session and has risen to 2-year high and is primarily buzzing on the back of strong Q4 numbers and a significant improvement in margins front. Now, before moving on to the financials of the company, let's talk about what the company does. So, company is a leading producer of synthetic rubber and latex and also the construction chemicals. And currently, the company exports to over 45 countries, which include Southeast Asia, Middle East, Japan, Europe, and USA. If we talk about the geographical revenue, the company's revenue currently constitutes of 67% from domestic and 33% from export markets. Now, talking about the Q4 FY26, the revenue of the company has seen a significant improvement of around 14% on YY basis, and this improvement was basically driven by the volume growth and pricing discipline. The EBITDA of the company has also seen a growth of 42%, and EBITDA margin stands at 13.7% on YY basis. The net profit of the company was higher on the back of lower finance cost, higher other income and tax asset, and stands around 35 crores. Now, for supporting the strategic growth and capacity expansion, the company is going to focus more towards on the continued execution of capital expenditure projects. Now, on the acquisition side, the company proposes to acquire 1.275% stake in equity of Amplus Ampere Private Limited, which is a solar power special purpose vehicle. And the objective of this acquisition is that this will enable the captive consumption of solar energy for the company. Now, moving to the stock performance, in 1 week, the stock has given a 27% return, and in 1 month, the stock has given 41% return. So overall, the result looks positive side.
Right. Well, thank you so much, Shivam, for all the details. Well, moving on, let's pull up Vimta Labs. Let's pull up that stock. I think the pharma has started, giving results. It's a pharma season now. It's up almost 5.4%. This is on the back of Q4 numbers, I would say. Well, a strong set of numbers. The growth was actually led by pharma and food division. Strong operating leverage visible despite cost increase. So the company has seen the increase in cost, but operating leverage has played out, and hence we are seeing a pickup in margin as well. Just to speak on the 4 numbers, revenues were up 19% at 112 crore versus 94 crore. EBITDA was up 28%. EBITDA margins at 37.6% versus 35% last year. So a good spike in margins. This is on the back of operating leverage. You have net profit also, which is up 17%. So overall, a good set of numbers, and hence we are seeing this stock buzzing in trade. Let's see what are the growth drivers when it comes to Vimta Labs. Well, rising demand for drug innovation and biologics is of course one of the reasons. Now, biosimilars is the next level of growth for every pharma company. Every pharma company is actually talking about biologics. You have increasing global food safety regulations, also one of the growth drivers that will help this company to grow. Strong push for electronic certification and EV ecosystem. Higher environmental compliance requirements are also, some of the drivers for this company. Well, strategy and way forward, what Vimta is expecting and what's their vision going ahead. They are focusing on capacity expansion and adding new services. Also, they are also increasing their penetration into new markets and partnership. The emphasis is on operational excellence and technology adoption when it comes to this counter. strong focus on governance, risk management and customer centricity. But the highlight of Vimta Lab is of course the margin expansion that the company has seen. The biologics is the next leg of growth for this company, and of course the food division will also lead to the growth. So overall, a thumbs up coming for Vimta Lab, and hence we are seeing the stock buzzing in trade. But with that, guys, it's a wrap on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with the
Hello, welcome. You're watching Ask Profit here at NDTV Profit. This is the afternoon edition. I'm Mahima Vacharajan, and with me, as always, is going to be joined by Puneet Zaveri. This is, of course, a show where we get all your stock-related queries answered. But before we start doing that, let's take a quick look as to how the markets are doing. The Nifty 50 right now is trading just about 0.14% higher. It did see a peak, but it's come off from its day's high point, trading around the 24,300 levels. Just a 34-point, range-bound trade is what we are seeing on the benchmark right now. Let's try to pull up the heat map as well and see as to what's happening over there. What are the counters that are buzzing? What are the counters that are under pressure? You have Coal India, HUL, Titan, TCS, etc. That are under pressure down in that range of 1 to 2%. Titan just ahead of its numbers. But you have counters like HDFC Life that continues to do well, up 3% now. Bajaj Auto also doing fairly well, up 2.8%. M&M, Grasim, Shriram Finance are some of the names. NTPC as well is doing fairly well. So that's with regards to where the Nifty 50 goes. The bank Nifty also, let's try to pull that up because that is also, sort of a range-bound trade, just about 127 odd points, up about 0.2 odd %. 56,100 is the level at which the bank Nifty is trading right now. Let's pull up the sectoral heat map to see as to what sectors are indicating right now in terms of trade. You have your Nifty Defense, which is clearly leading that pack. In terms of, the gains, it's up by about 2.4 odd %. For my Nifty Auto, which did see some profit booking in the last couple of sessions, now it's up 2%. The energy is also doing fairly well, up 0.7%. But on the flip side, FMCG is the one which is taking a knock today, down 0.6%. So that's with regards to where the sectors go. And the BSE 500 lastly, before we start taking all your stock-related questions as to what are the counters. Very specific counters on the back of news flow and earnings buzzing. Godrej Industries, of course, being an exception, up now 20%, followed by something like an embassy developer, which is locked in upper circuit. Tejas, Rosary Biotech, Piramal Pharma doing fairly well. On the flip side, Godrej Consumer on the back of, weak commentary from the management is down 5%. Brigade is where collections is a problem, which is why it's seeing a downtick of around 4% on the back of numbers. KPIT also on the back of numbers, down by about 4 odd %. So that's with regards to where the markets go. But let's start taking all your stock-related queries, and to answer them, we are today joined by Jatin Gedia, VP Technical Research at Teji Mandi, and G. Choklingam, founder and MD at Economics Research, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. The first question that we have is from Keshav, who's writing us from Chennai. He's asking about DLF. He says whether at the current market price is DLF a good option to buy from a 2 to 3 year perspective. Mr. Choklingam, your view?
Yeah. Definitely for medium to long term, it's a great stock. A lot of correction has happened. And let us not forget the fact that in cities like Mumbai, Delhi, the land values have gone up substantially in the last 3-5 years. And DLF is one of the realty companies which holds a sizable land bank. And also through subsidiary, it has got a very good leasing business model, which is perennially a growth business, because as inflation remains in positive, the rental income will keep rising. So short term one may not make money because there is no perception-driven rally for realty stock right now. But it's a fundamentally sound stock to invest for medium to long term. That's my research view.
Okay, all right. The HDB Financial is the next one. Kavita from Bengaluru says that she's bought it at the levels of 740, 145 shares is what she's holding. Wants to know if she can expect a near-term, bounce back in the counter. Is there chances of gain is what she's asking. Jatin, your view on the charts?
Yeah, technically the stock has reversed its downtrend. Since last couple of weeks it was consolidating, and now it's starting the next leg of the up move, which could take the stock to 780 to 800 odd level. So continue to hold on to the stock with a 680 rupees stop loss.
Okay, all right. The next one that we have, by the way, before I take the next question, for viewers who are watching us, you can also give us a call on that number. You can call us, ask us live your stock-related questions. All right, the next one is on IRIDA. Shankar from Bengaluru is planning to buy around 1,000 odd shares. He wants to know the target price for this one. Jatin, I'll stick with you, considering that Shankar always asks short-term related questions. Though he's not mentioned the time period, but your view on the charts for IRIDA.
Yeah, see, IRIDA has been also consolidating within this 135 to 143 range after a sharp up move. So this consolidation is just a brief pause in the overall uptrend, and we expect the next leg of the up move to resume and take the stock towards 146 to 150 on the upside. So continue to hold, maintain a stop loss at 130 odd levels for this holding that he's having.
Okay, all right. The next one that we have is from Anil Bhalla, who's writing us from Jalandhar. He's a regular viewer. He's asking about CG Power. He's bought 1,000 odd shares at levels of H26 for trading. 15 days is what he's watching for on the charts. So Jatin, I'll stick with you again for this one. This counter has seen an exceptional momentum. Do you think it's still there to stay for the next 15 days?
Yeah, see, overall, we believe that in today's trading session, it has broken out of a bullish flag pattern. So that is a trend continuation pattern. On the upside, we are expecting levels of 890 to 900 odd levels. But I would suggest to partially book profits at current levels and hold a little for levels of 880 to 900 on the upside. So partial profit booking is advised and hold some for targets of 900 on the upside. Stop loss should be placed at 840.
Okay, all right. The next one is on Reliance Industries. 50 shares bought at an average price of 1400 about 2 months ago. Again, a short-term one, Jatin. 6 months view on this particular counter?
Yeah, see, Reliance has been one of the outperforming stocks within the heavyweight pack. So I'll be expecting the up move to continue towards 1520, 1540 on the upside. And the stop loss level is placed at around 1400. So good risk reward even to hold and buy fresh at current level. So hold and fresh buy is also suggested.
Okay, Roto Pumps is the other one. Gautam Shenoy from Bengaluru has bought this counter at the levels of 100. 250 shares is what he's holding. And he wants a long-term view on this one. Mr. Choklingham, any view on Roto Pump by any chance?
I find valuation quite stretched. Maybe in case it corrects at least 5-10%, then one can consider. Otherwise, it's trading at over 36p on trailing earning, which I consider as a stretched valuation.
Okay, all right. The next one that we have is from Richie Lalu, who's writing us from Kerala. He's bought 19,000 shares of Yes Bank at the levels of 15 rupees. Wants to know if he can continue to hold, book profits. What should be the next course of action for him? So he's sitting on profits of over 1.4 lakhs right now. Jatin, your view on the charts for Yes Bank?
Yeah, see, the stock has witnessed around 13 to 14 odd % up move within this 3 to 4 trading sessions of the week. So my suggestion is that you continue to ride the up move. However, keep a trailing stop loss at 21. For any dip below 21, the stock could reverse its recent up move. So maintain a trailing stop loss at 21. On the upside, the near-term resistance is placed at 26.
Okay, all right. So that's the view on Yes Bank. The next one that we have is on CSB Bank. Manju Dhamija from Amritsar is asking whether she should continue to hold the 1,000 shares that she's bought at 401 or should she exit. Mr. Oaklingham, your view on CSB Bank?
For medium to long term, one can hold. The performance has been good and the price to book value is also roughly around 1.5 times, which is quite decent to hold for minimum 1 year.
That's the view coming in on CSB Bank. But let's go across, take our next caller from Vijayawada. And Aruna has a stock query for us. Aruna, very good afternoon to you. What's your query?
Yes, sir. Good afternoon to all of you, sir. Actually, I'm having Vimta Labs, sir. It's 1,000 shares at the price of 600 average. So I bought long time back and recent results are good. So what is the short-term view and long-term view on this counter? And shall I hold or any average?
And you bought this for the long term, right, Aruna? I mean, when did you buy into the counter for the first time?
Yeah, this is what like almost 10 months back, sir. Like
10 months
almost
back.
6 to 8 months back, yeah.
Got it. Well, Mr. Chokalingam, let me come back to you actually. If you track this counter, Vimta Labs, what would you recommend Aruna to do? She's holding a big position of almost 1,000 shares, bought at 600.
Yeah, so I do not know about the quality of the management, but when you look at the numbers, it gives some confidence. Last 5 years, if you look at sales growth and profit growth, is very consistently growing. Profit is growing much faster than sales. Also, for such a growth company, trailing P of 30 also looks quite good to hold. So I would give a hold recommendation for medium to long-term investments.
Okay, all right. So that's the view coming in on Vimta Labs. The next one that we have is on Poonawalla FinCorp. Rajiv from New Delhi is holding 1,000 odd shares at the levels of 458. He says he's bought this after the Q4 numbers. What's the view from a short-term perspective? Jatin, your view on the charts for Poonawalla FinCorp?
Yeah, see, for Poonawalla, we have a positive view. On the upside, we are expecting levels of 500 to 510 from a short-term perspective. So that is around 10 odd % up move we are expecting. The trend is positive, and the stop loss one should maintain is at 438. So continue to hold for 500 rupee target.
Well, the next question is from Pillai from Kerala. He's holding on to 20,000 shares of Vodafone Idea, and we know it's a retail favorite stock by now. He's been holding it at 11.14. Now, he wants to know if it's a better time to sell it now, Mr. Chokalingam. We actually, the stock has been buzzing over the last 3 days that Mr. Kumar Mangalam Billa has been appointed as the chairman, but that doesn't change too much in the financials. How do you view the stock now? We've also seen that deferred AGR payments of the first 4 years will get some reprieve. Would you recommend Pillai to hold on or sell out?
See, I'm not trying to escape. It's a fact of our life, that it's very difficult to give concrete answer. It depends on the investor's profile. Why I am saying, particularly for this company, fundamentally, it's a clear sell. There is no way to justify, when you have so much of debt, which is more than the sales, and making continuously losses and losing market share. So you don't find, very valid fundamental reasons to hold or buy. But then there is a chance of going wrong, because today you have only 3 major players. So it is very difficult to imagine the third player exiting the industry. So by any chance, the government, the lenders or the promoters make a big sacrifice to bail out this company, then this stock can give phenomenal return. So as an analyst, for me, very difficult to predict whether such sacrifice will happen. If it happens, how soon, or what is the quantum? A lot of uncertainty. So risk-taking investors who like this kind of tactical ideas can hold. Otherwise, extremely conservative investors, it's quite risky to hold.
Well, just the way, Mr. Chokalingam, you highlighted that the debt of the company is higher than the sales. I think this got us chuckling here in the studios, but you make a very pertinent point at this point of time for Vodafone Idea nonetheless.
Yeah.
But let's go across, take another caller from Guntur, and Man Singh is actually giving us a call. Man Singh, very good afternoon to you. Welcome to the show. What's your query?
Good afternoon, sir. I'm holding Inox India, 120 shares, average price 1320.
Okay.
Should I continue to stay in this stock, or should I shift to Nesco or Bombay Burma Trading? I want to view from Chokalingam, sir.
Got it. Well, Mr. Chokalingam, he's the other 2 options he's given. I know you like both of them, Nesco as well as Bombay Burma. You've talked to us about the channel. But on Inox India, what would you recommend? He's sitting in decent gains, bought at 1320, stock trades at 1557.
It's a good stock. Valuation is stretched, but if you look at the growth, the business model, it gives a lot of confidence. It's a good stock to hold. There is no doubt about it.
Okay, all right. So that's the view coming in on Inox India. The next one that we have is on BSC. Our viewer, Gallantt from Hyderabad, wants to know if this is the right time to enter from a long-term perspective. Mr. Chokalingam, would you recommend that?
I would skip giving my view. I don't have heart to give buy call at this rate.
Okay. All right. I'll take a technical view also on this one. Jatin, your view on the charts for BSC?
Yeah, so rightly said by sir that currently the stock is a little overstretched, and if I look at current week's gain, it is around 8 to 9 odd %. Technically, the trend is positive. So if someone is holding, he can continue to hold with the trailing stop loss at 300 and 3,800. But for fresh entry, I would suggest to wait for a dip towards 3,800, 3,750, where we have the short-term support kicking in. So current levels avoid, but buy on dip, yes, overall trend is positive.
Got that view, but let's go across, take another question now. And this one, it's yet again, actually it's quite open-ended. So let me take another one from Jay Krishnan from Kerala. Now, he's asking his question on HCL Tech for a 9th-month view is what his question is. And what would you recommend here as well? He's bought it at 1,710 for 9 months is what the question is. So What would you recommend here, Jatin, at this point of time of this thing? Do you venture into this, or shall we average down on the charts?
Yeah, so technically the stock is weak post the announcement of the result. Even though we have a decent rally on the indices, and most of the other IT stocks have, somewhat, been trading off their highs, but this is currently trading near the lows. So definitely no strength at current levels, only if the stock manages to crawl above 1250, 1260 on the upside, then I would expect that some kind of a bottom is in place. But current levels, avoid. If he's holding, then exit.
Okay, all right. All right. The next one that we have is from Satyan. He's asking you, Mr. Oklingam. His question is to suggest a few stocks from a long-term perspective. So it's an open-ended question that he's asked. But any particular counter that you are looking right now, which is looking attractive in terms of valuations to make an entry from a long-term perspective?
Yeah, apart from my old stock, which I have repeated many times on this channel, few new stock ideas I have added recent times. One is a Bharati Hexacom.
Okay.
Its valuation slightly stretched, but I like it. It's a growth stock, telecom mobile. Then second, Techno Electric Engineering. This is another stock I like a lot, and all based on the fundamentals. And then third, Punjab National Bank. It is available at a 10% discount to adjusted book value. And net NPA is just 0.29%, which gives me tremendous confidence in the stock. So these are the three stocks I like most.
Well, very exciting list there as well. Some that are in front of you, you might have missed, but Techno Electric, one of the key stocks of 2024 rally is back on Mr. Chokalingam's radar. So is, of course, Bharti Hexacom. But to take across the next question and caller actually from Srinagar, and Samir has a stock query for us. Samir, very good afternoon. What's your query?
Afternoon, sir. I have got Thyrocare Technology, 1500 shares.
Okay.
At the rate of 450. I need to know target, and today is quarter results for this company. Kindly predict what will be positive or negative.
Well, if we could predict, Mr. Samir, we wouldn't be sitting here at this point of time. But are you holding this for a long term or a short term? Like, when did you buy into this counter?
Short to medium, sir.
Short to medium. Okay, then
I am a positional trader.
Positional trader.
That's
Okay.
I'm telling you. Yeah.
Got it. Well, we had Kushbora earlier, and he told us, and he's always been telling us that he doesn't trade on the result day. So that could be one lesson. But Jatin, do you have a view on Thyrocare? What would be your opinion? And are you a trader who goes into the result day as a trading opportunity?
Yeah, see, Thyrocare is one stock which is not in the FNO space, so I won't be able to hedge my position. And if the results are not out during the market hours, I have to depend upon the next trading session. So there is a possibility of a gap over or a gap down. Since he's holding in cash, if the stock slips towards 440, then I would be a buyer. On the upside, the immediate resistance is at 508. So going into the result, I would suggest if he's having some profits, then book partial profits and wait for 440 on the downside to enter again.
Okay, we've got Sriram calling us from Chennai. Sriram, a very good afternoon to you. Go ahead, ask your question.
Hi, good afternoon. I'm calling from Chennai. I hold Castrol India at 500 average price, 200 average price, and quantity 500. And obviously, I'm making a loss at this time. I would like to know if I should hold the cost average or exit.
What's the time period that you're looking at?
Maybe 6 to 12 months.
Okay, Jatin, your view on the charts for Castrol India?
See, Castrol has been an underperformer. It is not able to surpass its 200-day moving average for a very long time, say from September last year. So underperformance is there. Also, apart from that, there are no signs of any trend reversal showing up in the stock. So I would suggest to exit this counter at this point of time when there is a bounce back. So suggestion would be to exit the holding.
Well, time now for the rapid fire round in this edition of Fast Profit. Mr. Chokalingam as well as Jatin, you know the drill. Keep your answers as short as possible. First question that's coming in between Alembic Pharma and Petronet LNG. What's a better pick for the long term, Mr. Chokalingam?
Alembic Pharma is better than Petronet LNG.
Okay, Anantaraj bought at the levels of 511. Sachin wants to know what's the short-term outlook for this one. Jatin?
Wait for targets of 600 on the upside. Place a stop loss at 540.
Okay.
Trend is positive.
Got it. Well, the next one's from Gopinath from Nellore. He holding on to MTAR Tech at 1991. So got in very early. Mr. Chokalingam, is it a good time for her to book her profits and laugh to the bank?
I'm not able to understand this company's fundamentals and business model, so I would skip it. Sorry.
Okay, do you understand Bajaj Housing Finance then? Because Kiyat Raji from Delhi wants to know as to what should he do with this counter.
Yeah, it is very easy to understand for any analyst. It's a great company, great management. Price to book value basis, it is easy to understand. Slightly stretched. I would be comfortable if it corrects, Otherwise, if somebody has a 3-year, 5-year view, definitely one can accumulate slowly.
All right.
Got it. Well, the next one is HG Infra, bought at 632 and 250 shares. Dennis has this question. Jatin, do you understand HG Infra and what's your opinion?
Yeah, see, technically there is a consolidation pattern and it has broken out in the previous trading session. I am expecting a move towards 732. So continue to hold and the stop loss should be placed at 580.
Okay. Indian Oil Corporation 500 shares bought at the levels of 149. Hold or sell? Murugavel from Chennai is asking. Jatin, your view on the charts?
Yeah, see, oil marketing companies have witnessed an up move. I'll be expecting a move towards 156 to 160 on the upside. Place a stop loss at 141 for the holding.
Okay.
Continue to hold.
Kiran wants to know if Biocon is a good pick for the long term. Mr. Chokalingam, would you recommend that?
No, I won't. I'm quite nervous about the debt on the book.
Okay, the next one is on NCC. The target price on this one, Rajesh is holding 1,000 shares at the levels of 201. Jatin?
On the upside, the stock is trading very close to a resistance of 175, 177.
Right.
Where we have the 200-day moving average. So avoid fresh entry should be avoided. Book profits at current levels.
Okay. TCS Express is the other one. Our viewer wants a 3-year view on the stock. Mr. Chokalingam, is it a pick in the logistics space or would you like anything else?
No, it's one of the good companies in logistics space. One can hold for 3 years.
Well, that is the end of Rapid Fire as well as this edition of Fast Profit. Mr. Chokalingam, it's been a pleasure. It's been quite entertaining as well having you on the show, and thanks for your opinions. So do you, Jatin. But viewers, all the time on this edition of the show, India Market Close comes up next. Thanks so much for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Welcome. You're watching India Market Close, and today is a tale of two markets. The Nifty in a different mood and the broader markets in a different mood. Look at the Nifty 50 right now and the intraday chart, still in the positive, but letting go of most of its gains through the day. The Sensex as well actually dipped into the red at some point, if you pull up the intraday, and has now made a little bit of recovery, but completely flat. What's very obvious when you see the Nifty contributors, we'll pull up the Nifty contributors and then we'll also pull up the Nifty heat map, is you have the big wicks which are kind of weighing heavy. HUL, TCS, Titan amongst others. On the winning side, today has been about auto, and interestingly Bajaj Auto, because of that buyback move, Maruti having another good day, as is RIL, Alex.
Absolutely. But what we're seeing is that very wobbly line graph for the Nifty 50. The broader markets is where the strength is at. So pull up the Midcap index, which will likely at this juncture be at or very close to an all-time high, and the small cap index, which is also up over 1%. And this is basically showcasing that strength in the broader markets. To complete this picture, take a look at the advanced decline ratio, which is not too far, I think, from the widest point of the day, and that is in fact the case. So there is strength in the broader markets, and I think we've been saying this for the last 4 or 5 trading sessions, and that continues to be the case. So
which is why I start by saying the tale of two markets, very different picture. The Nifty heat map will very quickly tell you what's not working perhaps for the heavyweights, and the large caps, HUL, TCS weighing down, Tech Mahindra to some extent. Titan is seeing some pressure, as is Adani Ports, Coal India, Sun Pharma and Wipro. HDFC Life moving upwards and some of the auto sector also doing fairly well. The sectoral heat map, let's pull up the sectoral heat map very quickly and show you what's working there. Nifty Auto will be in focus, like we said. That's one strong one today. It is the anniversary of Operation Sindoor, 1 year since Operation Sindoor, and you have, of course, top government officials talking about it. Defense stock roaring in today. The Nifty Midcap doing very well, but it's consumer durables and FMCG which is dragging a bit, as is IT. Overall, Alex, the fact is that the signs geopolitically are more positive than negative at this point.
Certainly. But just on the point of FMCG and consumer durables, I think even in the earnings that you've seen, for example, take GCPL, you have a situation where it's a mixed bag.
Yeah.
On some elements for the fourth quarter, it's actually good, but the outlook is looking murkier, it's looking cloudier. And so if you say that the first half is going to be problematic with regard to input costs, palm oil prices going up, margins likely going to be scrimped, that is why that is visible.
Yeah. If you pull up the top gainers and losers on the broader markets, there's a whole host of mid-cap and small-cap companies that have reported today, which have been pretty decent in their results. And you're seeing that
Godrej Consumer.
flare. Yeah, Godrej Consumer, of course, was in negative, as was KPIT Tech, as was Brigade. All of these from yesterday post-market close, as is Blue Star, City downgrade on Vedanta. That's why in pain there. But on the winning side, look at a Godrej Industries. So there is a report that they have laid out a path for the next 5 years, which is very positive. That's why Godrej Industries in focus. Piramal Pharma doing okay, as is Rosari Biotech. But some companies like Car Trade, Wonderla, that has just reported, we'll pull up those individual charts for you. Some decent set of numbers. I mean, Car Trade has been zooming through the day. We can pull up the line graph if possible. And then a Wonderla after that has cooled off now. But when the results came out, that was looking good, still about 6% up. Wonderla also after that spike has cooled off. So you're seeing quick reactions to results also coming in.
Certainly.
And in the broader market, they're actually better than what was expected.
Absolutely. We should talk about the key factors, though.
Yeah, absolutely. It was a dull day for the benchmark index. The Nifty has managed to stay above 24,300. Value buying is continuing in SMIDs, and the rupee continues to strengthen. The crude has fallen for a second consecutive session, and crude really is the story. If crude remains below $100 a barrel, a domestic buy on dips sentiment is likely to persist. Technical analysts are now identifying 24,300 as the new immediate support. A sustained move could open the path towards 24,500. Key resistance levels 24,365, 24,450, 24,590. Support levels at 24,200, 24,100 and 24,000 as well. Both the Nifty and the Bank Nifty now have cleared critical hurdles. The Bank Nifty closed above its 20-day EMA for the first time and key in quite a while, and key resistance levels were 56,120, 56,470. Support levels 54,980, 54,630. I want to pull up Brent before we get to our first set of speakers today and just show you where Brent is right now, because that's important, right? That you've seen maybe Brent under 100. You're at 99.99, and that has been positive. 99.47. Brent under 100 is great news. It's great news for the market. We hope we stay there. Jay Bala, founder and chief market technician at Catch the Chaos, with us. Sudeep Bandyopadhyay, group chairman at IndiTrade Capital as well. Jay, is today the day to catch the chaos?
And hi, Tamanna. Not just today; it's been for a while. You know, you're rejoicing for crude dropping below 100. I've been pointing to crude crashing to $64. So you know the joys are just getting started. So and the recent secondary top WTI saw at about 110. That's confirming the important top is here. And you know we charters, we read news through the markets. And I've said this a couple of Tuesdays ago, that the real peace deal is around the corner. And yesterday we saw, tea leaves of that. So I'm sure there'll be a real peace deal between US and Iran that'll be struck. And crude will crash to what, mid-60s.
Wow, that's a big prediction. Jay, I don't know about that though, because the jury's out. Let me fix my collar. The jury's out on that. The jury's out on that. Let's talk about individual stocks that are looking attractive to you though.
Yeah, you pick any stock within the capital goods space, you're going to be doing pretty well. And I like Crompton Greaves Power industrial stock. And both the twin consumer also looking good. But I like CG Power more than Crompton Consumer. So I'm anticipating fresh, record highs closer to 1100 to 1200 odds level, and a stop loss of 760 would be ideal. And I also like Aditya Birla Capital with a stop loss of about 335. I'm bullish on it and expect that to be a short-term call, but CG Power is likely to be a medium to long-term call.
Yeah, CG Power is buzzing in trade today. Sudeep, I wonder if you're as optimistic of a deal being struck as early as tomorrow. Jay has just indicated what he thinks will take place, and I hope he is right. Are you as optimistic?
It's definitely a good space, and it's definitely a good company. So I'm not sure about the transaction and its exact contours and whether it will happen tomorrow or not, but it's a good space to be in, and it's a good company to invest.
No, Sudeep, I'm not talking about the company. I'm talking about the Iran-US trade deal, which is something that everybody wants to know about. Unless I heard wrong, Jay seems to think that that deal is going to be struck tomorrow, and crude is going to crash. It's a big statement. Do you agree?
Well, sorry, Alex, I was thinking of CG Power. There are some rumors of some transactions, and I misunderstood that. But as far as US-Iran deal is concerned, I'm a little bit skeptical still, unfortunately. The way the statements are coming both from US and Iran, sometimes contrary to each other, sometimes ridiculing each other, sometimes threatening each other, I'm a little skeptical. I think it will take a little more time. Yes, they are moving towards a deal, but whether it will happen tomorrow or not, I'm not sure. My bet will be it will take some more time before the deal gets done.
So in that context, let me ask you about this, right? From a fundamental standpoint, as you're looking at the market right now, you're seeing considerable strength in the broader markets. Are there any ideas that stand out to you, possibly companies that have reported their earnings and then settled after that initial spurt or otherwise, where you would like to deploy right now?
Well, I have been a bit contrarian there, Alex, and I have been liking Larsen & Toubro. They came out with the numbers which were definitely below expectation, or you can say if your expectations were subdued, they were as per the subdued expectation, because this quarter they had a lot of turbulence as far as West Asia is concerned. Even the first quarter is not going to be good, but the way the company is positioned, the way the businesses are moving, and assuming the deal gets struck somewhere, may not be tomorrow, but somewhere in the near future, I think Larsen & Toubro's West Asia business will be back on track. And overall, I think they are doing very well. So current level is a good opportunity for accumulating from a long-term perspective.
So we're going to wait and see what happens with the whole situation, but there's no doubt that there is some positivity right now. But let's talk about stock of the day. Craftsman Automation is in focus on the back of strong Q4 results and a robust growth outlook. What's working for Craftsman? Puni joining us for more.
Well, thank you for that. It's definitely been a very good quarter for the company yet again, delivering a 22%, 27% growth in terms of revenue, but the profits, that's where the real kicker is. Now, company, of course, one of the major auto ancillary companies, recent listing in the last 5 years, so we'll put all of that into perspective. EBITDA has grown by 33%, margins at 16.1% is one of the highest that they have reported. Profits are up 75%, and this does not include any one-off. It's pure operating leverage benefit translating to the bottom line. Now, when you look at the segmental, there are 3 key segments that the company operates in, and we just put some numbers into perspective also. The first one is, of course, the powertrain business. The names are mentioned, but this one is the powertrain business. The second one is aluminum products, and third one is industrial engineering. So all have seen a 20 to 30% growth. When you look at why do you need to track this counter, that's also important because they've invested over 4,000 crores in the business between FY18 and FY25, and this also includes the inorganic acquisition. So at that time, it was just a one-product company. They wanted to diversify away from commercial vehicles, which was the main domain, to establish domestic dominance. And machine cast iron components as well as aluminum casting is something that they do. So they compete with Bharat Forge in this segment. And we'll, of course, be speaking to the management of the latter very soon as well. Now, when you look at the street cred, that is also very important. Last 1 year returns, it's up 85%. 5-year return is 475%. And you saw the stock price before we started a segment at 8,500. The IPO price was 1490. So it's almost up 4 to 5x just in the last 5 years at this point of time. And finally, brokerages continue to remain positive despite the outperformance that we've seen in this quarter. Axis Cap and MK continue to have one of the highest target prices, while IIFL, ICICI and Avendus follow through. So that's the picture for Craftsman. It's trading at 30 times price to earnings, so not cheap, but definitely a very strong set of results for the company.
Okay, thank you for that, Puneet, and quite a few strong mid-cap results as well. But the big overhang, or I would say push for the markets today, is coming from crude, isn't it? Brent crude has pulled back as optimism over a US-Iran framework deal tempers supply shock fears, prompting the markets to reprice. And we have a great graphic actually on how this panned out through the day, from when the news came and then you saw that dip in crude prices. We should play that full frame graphic. There you have it. So the news hit at about 12:20ish, 12:30 about the US-Iran deal that may actually come in place. And then you had that market drop and that market price dropped to $98 a barrel. It adjusted after the initial shock. But you still have it at about 99.97 or 99.94 thereabouts. I'm speaking with Dr. Iman Naseri, Managing Director of Middle East Research at FGE Nexant. Dr. Naseri, thank you so much for joining us here on NDTV Profit. Just trying to understand how sharp the fall can be if there really is a resolution. We had earlier in the show someone who tracks charts saying that crude could go, or Brent could go at least as low as $64. Do you think that we'll suddenly see a sharp drop once this resolves?
Yes, the price will drop further if there is a resolution beyond words. So far, all the perception has come through tweets and words, nothing on paper, nothing firm, and nothing binding. Even the ceasefire managed to put basically a cap on price escalation and pulled it a bit down, but it has been proven not to be a real resolution or one that has a promise of the end of conflict and end of basically the closure of the Strait of Hormuz on vessels going through the straits in and out. So yes, if there is a resolution, it will definitely pull the prices down. But remember, today's prices, in the absence of supply disruption, fair value, we assess to be around $85. That's considering all the supply, available supply to the market, as well as demand balances and spare capacity of OPEC, which is always basically a factor in defining the path for the oil price, especially the long-dated price for oil is very much dependent on how much spare capacity OPEC has. Given zero spare capacity, meaning that OPEC currently on paper cannot produce any more barrel because it's constrained, even if the resolution it comes out, still it takes time for certain key producers within the Middle East to bring their production back to capacity, and hence the spare capacity is zero. At that current environment, the price should be around $85 to $90. What you see now basically is all premium, and basically if in fact the resolution, which has given an optimism to the market of over $10 already off the price that we had last week, if it falls apart, basically we're back into $110 to $120, $130, and could basically bring the average of the month above $120, which means we will basically, in a disrupted market without an optimism on a resolution, we should expect $30 to $40 premium on top, only because that kind of pricing is needed to solve the balance by killing some of the demand and demand destruction elsewhere in the market. So that's where we stand now. If the resolution comes, we will have another step down, but the prices will only go back to $75 to $85 range if the flows are fully restream and production is back fully, which is a month away from today.
It's a month away from today. Okay. So even the optimistic commentators that we've actually just spoken to have talked about a nearer term resolution based on the messaging that we've gotten over the course of the last few days. Dr. Iman, good afternoon. This is Alex here. I just want to understand from your perspective a couple of points, right? What you've described is the scenario as we see it right now. What is also going to take place at some point is the UAE's exit implication from the OPEC and the fact that they will raise production heading into 2027. And let's not forget that in any negotiations that take place with Iran, I'm guessing that Iran will also be wanting to have some of its oil being sold, because let's face it, from the perspective of their economy, this is going to be a key source of revenue. How does that fit into the calculation going forward?
Correct. We have so many parameters in the equation. The equation, you named at least two bold parameters, which is UAE potential of increasing production from their OPEC constraint or OPEC quota of 3 to 3.5 million barrels per day in recent past couple of years to potentially over 4 and perhaps closer to 4.5 million. That's another million or million and a half, depending on how you draw the lines of additional supply from UAE, which will only come to the market when, again, the strait is fully open and production is back, because it takes from weeks to months for the production to recover all to capacity. That's one equation. The second is, of course, the lifting of sanctions. And that takes time. Remember, there is one thing on signing that paper, and the second is sending to OFAC, OFAC putting it all in motion, and all the banks and all the companies, basically compliance, receive that. That's another few months of mechanism to bring that additional crude out of Iran to the market. But remember, we are in a market that today has over 10 million, closer perhaps to 12 to 14 million barrels of supply out of the market. So the disruption, the wave is so high that these other waves or the ripples that could originally each create a basically big wave and big price action, they are now part of the equation. So the good thing is that as we get out of this thing, we have enough time to basically solve. And I do not expect the OPEC, the UAE leaving OPEC to have much of an immediate price action. Yeah. What could happen is that basically it creates a new dynamic for OPEC to solve for basically a different set of mechanisms and cuts to take in those two parameters into account.
Sure. Thanks so much for taking the time, Dr. Iman. A pleasure speaking with you, and look forward to our next chat. All right, it's that time of the show when we go across to Somit Sarkar to find out what he's hearing on his checks on the dealing room in the city. Let's go across to Somit right now. Somit, it's been chop and churn for the benchmark Nifty 50, but the broader markets are showing strength. What are the individual counters that you're hearing about?
Well, the first stock on the list is Lenskart. That stock is down in trade, and what dealers are indicating here is that there's a buzz of a potential block deal that could happen tomorrow in trade. Kotak is one of the bankers for this deal, and it might happen at a discount of nearly 4% from the current level, is at least what the dealers have indicated. So keep an eye out for Lenskart. A big block deal is something that could happen tomorrow. For Crompton Consumers, there are buy flows on the large HNI desk. There's a buzz of a potential tie-up deal that could be announced when it comes to Crompton Consumer. So keep an eye out for that counter as well. For HDFC Life, the stock is up in trade today. Now, what dealers are indicating here is that there are strong buy flows or high buy flows on the DI desk. And earlier, an FII was a seller here, and this selling is largely over, and hence the reason we are seeing this bounce back on this in the share prices of HDFC Life. And lastly, a cash counter, NLC India, where there are buy flows on the large HNI and PMS desk, and dealers are recommending this stock to their clients for a upside of around 25 to 30 odd %. So keep an eye out for NLC India as well.
Quite a few stocks to watch out for. Thanks so much, Somit, for that. Jai Bala, Sudeep Bandopadhyay with us. Gentlemen, we had to have that conversation on crude because really, more than anything else, it's the most volatile asset that we're seeing across the board. But let me come to you, Sudeep, on a stock that we spoke about before we started that conversation on crude, which is Craftsman Auto. And the stock was buzzing in trade. We've identified it as one of the stocks of the day. Opinion on that? Is it overdone with a gain of 10.5%, or is there still upside potential left in the stock?
Well, it may not be immediately, but eventually I think the stock has potential. I think this is one of the companies which is doing exceedingly well in this auto AMP space. And I believe that this will continue to do well. They have expanded their product portfolio basket, or whatever way you want to put it. And they have started servicing more and more clients. Also, export market, which they are now going to explore seriously, should give them some advantage going forward. So fundamentally, it is a good stock. Valuation-wise, it is rich. It's not cheap, and it has moved up quite a bit. So maybe it is worthwhile to wait a bit before taking fresh position. But if you are holding, there is no need to exit or take any drastic action.
Quick 10-second answer. Does that hold true on the technicals as well?
Yeah, Craftsman Auto is looking quite bullish. I don't think the pullbacks will be too deep. I think it's already on a very sharp trending move. Anticipate fresh record highs in the region of 11,000 odds for Craftsman Auto.
All right, gentlemen, thanks so much for taking the time. Pleasure speaking with you as always. But we'll slip into a very quick break. We've got more conversations on the other side. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Economy, business, world, technology. Noise.
Welcome back to India Market Close on NDTV Profit. Now shifting focus to a Raymond lifestyle. That stock is on our radar on the back of a solid set of Q4 earnings that have been reported. Let's head across to Somit, who's in conversation with the management. Over to you, Somit.
Well, thank you, Hiral, for that. Let's start our conversation with the management CEO of Raymond Lifestyle, Mr. Satyaki Ghosh. Sir, firstly, to start off with, when it comes to the input cost, your peers have also indicated that has increased sharply because of the Middle East issue that we are seeing currently. Can you elaborate what could be the impact of the same on your books, and how has April so far played out for you?
So two things. We are a very B2C company. As Raymond Lifestyle, we are consumer facing, and hence raw material, we are not a commodity company. So raw material does not decide our exact pricing or margins as such, but raw material prices, gas prices, they are up, and it puts pressure always. The freight prices are also a little up, let's say, because of West Asia crisis. But our margins have not got depressed. The only reason the Q4 gross margin looks a little lower is because last year we had some government subsidies coming in Q4 in some of our factories, which is not there this year. That is the only reason. Our margins are quite intact, and we have been able to pass on whatever little price increase that has happened in raw material. And we are looking at quite a good order book in Q1 and beginning of Q2. And hence we are quite confident of the business right now.
Okay, when it comes to the inventory write-down, is that issue behind us? Because I believe 70 crore exceptional charge includes inventory write-downs and receivable provisions also in the apparel segment. So any risk of further cleanup that we could see going forward, or is that done?
No, it's totally behind us. It's also because, we have different categories in apparel, and the write-down is not in any of our major brands like Park Avenue, Color Plus, Raymond Ready to Wear or Parks. We had started some new businesses, which from next quarter we will start reporting separately, like Sleeps, which was sleepwear, which is the business that we are trying to close down. And this is why we are taking a write-off largely on that business. But in future, from next quarter, we'll report our 4 brands separately and these new business ventures separately, so that this kind of confusion does not remain.
Right. When it comes to the branded apparel segment, now losses have narrowed on a sequential basis in the fourth quarter. But when does this segment break even, sir?
So apparel business, if you look at the 4 brands, we are high single-digit profitable, EBITDA. We are between 7 and 8% profitable. I'm again coming back to the same confusion. The way it is reported is some of the new businesses come and sit here in apparel and gets reported, and new businesses, obviously you invest. And that investment looks like a loss. But if you look at Raymond Ready to Wear, Park Avenue, Color Plus and Parks, these are upwards of 7% EBITDA businesses, and we will start showing it from next quarter with the entire history corrected, so that you see how we plan to take it towards double digit over a period of 2 to 3 years.
Well, that was the management of Raymond Lifestyle, quite optimistic on the growth plans going forward. Back to you, Hiral.
Got it. Somit, so certainly a stock in focus. Let's pull that chart up and see what it's doing in trade. And in fact, while we're at it, just pull up the benchmark Nifty 50 as well. Just hovering around that 0.1% gain range. So given up quite a bit of the gains from early on. But individual stocks in focus, one of them is Lenskart, because sources are saying that there has been a block worth nearly 3,500 crore rupees. In fact, Somit has those details. Somit, what are you picking up?
Yes, Lenskart remains in focus. A block deal worth nearly 3,500 crore is expected to happen tomorrow in trade. The block deal will be around 4%, is expected to be around 4% of the total equity. SVF, Light Bulb and Platinum Jasmine are the sellers, is what I'm picking up from my sources when it comes to the Lenskart block deal. A couple of brokerages that have been hired by these sellers, most likely it's Kotak and Avendus Spark. They are the most likely the bankers for this deal. They have already approached mutual fund for this block deal, and the deal is expected to be at a discount of nearly 5% from the current market price. Now, do remember the stock has already fallen around 4% and the discount is expected to be an additional 5% from the current levels. So Lenskart would be the stock in focus tomorrow, because a big block deal is expected to happen. Most likely it will happen in the first half an hour of trade.
Got it. All right. Thanks so much, Somit, for getting us those details, and watch out for Lenskart in trade. Of course, ahead of that, it's actually lost about 4% at the low point of the day as we speak right now. Let's focus in on Bharat Forge. It has reported its numbers for the fourth quarter, and except for a one-time loss that has affected the bottom line, it's a more or less inline quarter. There's also the outlook to talk about, and we've got a conversation lined up with the management in just a bit. But before we go to them, let's go across first to Puneet to give us a sense of what stood out with the earnings. Puneet?
Well, thank you for that. Just 3 key things. Numbers largely in line with the estimate that we are working with. So there's been a revenue growth of almost 17%. EBITDA is up 14%, and profit subsequently has also been up by about 17.5% to come in at 233 crore. Now, that has slightly missed estimate because of a one-time 100 crore impact, 98 crore impact on the consolidated basis. And the other impact was on the standalone basis of 450 crores taken on the e-mobility business. So just some perspective of that from the management will be something to watch. The reason why the stock is up is based on commentary. The company has highlighted that a 25% growth, revenue growth is what's expected, which will flow through the EBITDA as well as the profitability for the Indian business. So that's the reason why the stock is reacting positively today.
Okay, thank you, Puneet, for that. The stock is seeing gains of nearly 6% as we speak. Amit Kalyani, Joint Managing Director at Bharat Forge, joins in. Amit, good afternoon and welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. Good set of numbers. I know it's that one time which has impacted the profitability in the fourth quarter, but overall, sentimentally, and if you have to look at it structurally, getting into FY27, how are you seeing the roadmap from here on? Because you are staring at global uncertainties as well on the macro front. So segments like defense, aerospace, or even for that matter, domestic auto, all of these are at the forefront of seeing supply chain issues. With the guidance that you've given for FY27, how are you seeing that resurgence in business come back in FY27?
So, hi, thanks. So basically, we see a very strong growth this year, driven by multiple factors and largely driven by a lot of the new product development and new sectors that we have targeted, plus a recovery in, the automotive sector, in the truck side in the US, also to some extent in Europe, which we are seeing so far, and strong growth in India. If you look at our new sectors and some of the acquisitions that we have done, whether it's K-Drive, whether it's JSA, and also the new acquisition or the acquisition of stake in Fortuna that we've done, is all very complementary and synergistic with our existing business and will help us, increase our share of the wallet of the customer very easily and very quickly. So these are some of the measures that we have taken. Plus, we have made significant capex over the last 2 years, continuing into this year, which will add a very large new capacity for products that go into the data center market, into the semiconductor market, and many of these kind of markets where there is a lot of growth. Plus, there is a shift in supply chain from other geographies to people like us, and that's where we see a lot of opportunity. And we have secured a large amount of long-term business that will translate into revenue starting from the end, from this year itself.
Amit, good afternoon, Alex here. So therefore, let me ask you this. In the event that this geopolitical uncertainty gets resolved quicker than some might be anticipating, there are some very aggressive and optimistic ideas that it might get resolved this week, and I hope those people are right. But even if we're talking about a resolution in the first quarter, do you anticipate that there could be an upside to the guidance that you've given of 25% growth?
Look, I don't believe in counting your eggs till, the chickens till the eggs hatch. So, I hope that if that happens, yes, there will be some upside and, there will be, let's say, reduction in costs and therefore inflation and therefore overall market growth and sentiment will be more positive. But notwithstanding that, I think we're still planning for aggressive growth. And, our plans as far as the products that we have entered, the markets that we have entered, the acquisitions that we have made are all, aimed at helping us accelerate our growth and continue this pace of growth into the next few years.
I'll ask about that one-time hit and the impairment that you've taken on the 450 crore hit that you've taken on the e-mobility business. What was the thinking and why in this quarter?
Honestly, you've seen how the whole world has been vacillating with electric mobility. In the US, there is a pullback. In Europe, there is ineffectiveness because of the technology supply chain not being in place, the value chain not being in place, and the overall infrastructure not being in place. I think that the e-mobility sector is picking up pace, but it's not growing at the same pace at which everybody expected it to take pace at. And plus, honestly, I think the Chinese value chain in this is very strong, and they are going to dominate parts of the value chain for a very long time. So we decided that, in the absence of having a profitable path to profitability at the current time in the overall business, we will only focus on those sectors and markets which are profitable, and especially like the repowering business where we see a lot of traction. And that's an area where we will focus, but we're not going to focus on anything and everything.
Okay,
And honestly, yeah, sorry, go ahead.
Yeah, Amit, on this, when you're talking about focusing on the businesses which are of value, then how are you looking at the EV portfolio? Because your electric mobility investments have led to some bit of impairments in FY26 as well as Alex and you've just been talking about. So if you have to talk about Kalyani Powertrain, how will that reshape your overall product mix so that you can actually focus on your high margin e-axles as well as the software integrated systems business?
Yeah, so as of now, we are already a big supplier of powertrain components to electric mobility, both on the passenger car side as well as a little bit on the CV side globally. I don't think we are in the, right now supplying an entire solution, but we are supplying components and subsystems that go into solutions. Another area where we have a lot of traction and business on e-mobility is on the aluminum die casting side. The area where we are defocusing right now is on the system level. Because on the system level, in India, the commercial vehicle market, which was our original, our goal, is going to be addressed partially through our acquisition of K-Drive, where we have the ability to make e-axles and, components and even the whole e-axle for LCVs when we are already doing that. And, it doesn't make sense to have two offerings within the same company to do that. So what we were trying to do in this, we are now winding that down and focusing on repowering within Bharat Forge, and then the e-mobility piece on the commercial vehicles will be largely focused on through K-Drive.
Okay. Another question I have for you over here is, in terms of the defense portfolio and aerospace execution, let's talk about defense. Order book, extremely strong, I think, if I'm not mistaken, at record high levels, and if you have to exit FY26 and look at FY27. So what's that timeline when it comes to where conversions are concerned, where orders will actually get converted into revenues in FY27? Because what? Almost 11,000 odd crores is what you're sitting on. So how much conversion are you looking at?
So this year will be the ramp up and let's say start of the ATAGS order. We will start delivering that from, I would say, probably from the end of second quarter or early third quarter. So we will have at least 2 quarters of delivery of ATAGS as per the current schedule which we are working with the forces and with the MOD. On the carbine also, we should start seeing deliveries by the end of the year. So those are 2 programs that will take off. And of course, we have multiple other programs which we have won under EP, and that will also deliver in this year. So between that, we should have a strong pipeline and strong revenues. In fact, in aerospace, we are seeing a phenomenally strong growth because we have won a lot of business, and our new landing gear manufacturing facility has been inaugurated. So that will also ramp up. And between that and the new orders that we have received, plus the the business that we do in making small microjet turbines, etc., is all going to ramp up this year. So that will give us a big growth. I would say a very strong double-digit growth in aerospace this year.
I was actually going to ask about that, Amit, and just to close out the conversation, this aerospace as well as the data center opportunity that you were talking about, this is, by my understanding and the way that you've described it, a ramp up year. And so therefore, if you were to describe closing FY27 and heading into FY28 perhaps, what is the kind of contribution that you anticipate these two to give to the whole pie?
So if you looked at our aerospace business, it was for the full year about 17% of our industrial exports, and for the quarter about 25%. I would expect that next year that the aerospace exports will grow from 25 and get to maybe 30-35% of overall industrial exports. Also, industrial exports per se are going to grow, so it's going to be a pretty big ramp up in aerospace next year. And on data center also, I think in the next 2 years, it's almost going to double the amount of revenue that will come from that sector.
Okay. Amit, I don't know if you're going to be in a position to answer this, but there was a lot of chatter ongoing with regards to Bharat Forge looking at acquiring a company into the explosive space. What is the status? I mean, there were conversations of Premier Explosives also. Again,
No,
it was a lot of word on
let
street.
me be very clear that A, we don't talk about rumors and things like that, and B, we don't have any plans of acquiring any explosives business.
Are you looking at your own?
Yeah, we're setting up our own explosives facility, and that facility groundbreaking should happen this month. And that plant is coming up in Madikserra in AP, which is on the outskirts of Bangalore. Well, not really outskirts of Bangalore. It's about 2 hours, 2.5 hours away from Bangalore. And that's where it's coming up. We've already acquired the land. We've applied for all the permissions, and construction will start after the groundbreaking takes place. Land is already in possession.
How big this business could be over time?
Very large. I mean, very, very large. See, also you have to understand it's not just for us an explosives business, but it is a solutions business because it allows us to move from making shells into making ammunition solutions. And that will be across the spectrum.
Got it. I think so. That's going to be another area we should be looking at as well. But thank you so much for joining in. Always a pleasure.
Thank you.
To speak to you. So that's Amit Kalyani talking to us about the quarter gone by, but more than that, it's about the newer businesses, what they're looking at. And what I like about Bharat Forge right now is that they're absolutely okay to impair and get away with everything which is not yielding results and focus on everything which they think is going to grow.
So Hiral, you probably have a better memory about these things than I do, right? But if you remember 3 or 4 quarters back or 3 quarters back or so, when they were going through a bit of a painful period, there was a fair degree of confidence to say that we will get past this.
Correct, absolutely.
And we've got quite a bit that is in the works, and that is coming now in favor.
It's coming through, and it's very rare to see managements who are nimble enough to shift focus right now, because it's difficult to change strategies very often, right? And that's the beauty when it comes to a company like Bharat Forge, the Kalyani Group. The stock near at the day's highs.
Absolutely. And we should ask both Rajesh Palvia, who's Senior Vice President, Technical and Derivatives Research, Axis Securities, as well as Dhananjay Sinha, who's a Chief Executive Officer and Co-Head of Equities and Head of Research at Systematic, about what they think of Bharat Forge. I don't know, gentlemen, if you heard that conversation, but Dhananjay, I want to come to you first. Bharat Forge, as things stand right now, a ramp up of aerospace division, defense business doing particularly well, the explosives business, they're going to break ground and that's going to contribute to revenue. They're confident of a 25% growth in FY27. What do you make of it? It's already up about 6% today.
So I think, the company has been doing fairly well as far as the aerospace business is concerned. The core business is in the commercial vehicle side. So the domestic business has seen a sort of a cyclical upturn following the GST reduction, etc. So I think they have been focusing a lot on the aerospace business, which is a high margin business. Their drag essentially has been in their businesses in Europe and US, where they had acquired businesses earlier. Over there, I think there is certain turnaround as far as the commercial vehicle business in US. I think that is turning around. We need to see what they are doing. They are talking about restructuring and all. But I think from the commentary that the management has actually spelled out, looks to be fairly robust in terms of the guidance. I guess in the defense space and the aviation space, I think they are sort of looking at a stronger growth, particularly the aviation business, which is a high margin business. So I think that is what they are talking about. The acquisition part is something that is being talked about. So we need to look at what it is. So as far as the management is concerned, it looks they're looking at a fairly explosive growth in the explosive segment.
Nice play of words. Dhananjay and Rajesh, allow me to come back to you because we've got exclusive information coming through. My colleague and Bureau Chief in New Delhi, Shree Chaudhary, joining in to tell us about what sources are telling her about a potential merger of Shipping Corporation of India with SCI Land and Asset. Already SCI Land and Asset, Shree, in case you haven't looked at the screen, is up as much as 12.5%. What's going on here?
Well, absolutely very, very crucial information and exclusive to us. What we are picking up, that government is exploring ways to strengthen the balance sheet and finances of shipping corporation ahead of its plan to expand to maritime project. What we've been given to understand that one of the proposal which is under consideration is to merge the shipping corporation with its erstwhile entities, that is shipping corporation, land and asset. Do remember that in 2021 it was carved out from the shipping corporation in order to facilitate the disinvestment and the privatization of shipping corporation, which was put on hold later by the government. Now, what they will do with this merger, what we are learning from the sources, that the shipping corporation will have access to the shipping land and asset entities cash reserve, which is around 1,000 crore, and that fund will be utilized to expand these two projects, one with respect to Bharat Maritime and the second with a joint venture with tanker with oil marketing companies. So this two crucial project is going to have support and being anchored by Shipping Corporation of India, and this discussion is very crucial and coming at a time when the entire West Asia crisis has put focus on the maritime industry and the kind of dependence India has on the foreign carriers, and government has been pushing, boosting this entire sector, and we have seen numerous announcements in past 6 months to boost maritime industry.
All right, Shree, thanks so much for getting us those details. Now, Rajesh, if at all you have a view on Shipping Corporation of India or SCI Land, then do weigh in. And it's also very close to the end of the market trading day. And so therefore, do you have any ideas that you can buy today and sell tomorrow?
So if I look at the Shipping Corporation land asset, the company, the stock was in downtrend. A series of lower top, lower bottom formation was taking place. But since last couple of weeks, we have seen that recovery from the lower level. In this recovery, stock has managed to cross its 20-day, 50-day moving average and managed to cross its multiple supply zone on the near-term chart was at around 49 rupees. So looking at the near-term, short-term structure, there is a strength, but on the long-term chart, there is still weakness. So in this pullback, I think one can hold on the position as volume action is quite interesting. Stock managed to give breakout on the multiple supply zone, which is at 49. So trail stop loss of 49. And if it continues to hold above 49, I think a possible up move towards 58 or 60 kind of level we may see in the near-term perspective.
Okay, so that's with regards to where SCI goes, that stock seeing gains of nearly 2% coming in there. But moving on, Godrej Industries, that's a stock to focus on. One of the top gainers today. Let's pull up that one on the screens. And the question over here is what's happening to that counter from here on. If you see the kind of announcement that has come in, that stock has been locked up in upper circuit full day, where they've said in terms of their 2031 vision that they are aiming for almost 5 lakh crores. We'll try getting Mahima to get us more details on it. But before that, Dhananjay, let me come to you. I know, Godrej Industries volumes are usually thin because it's a holding company, but the kind of gains that are coming in on the back of the ambitious growth roadmap, targeting a 5 lakh crore market cap by 2031, and they've proposed a new brand identity. What is your view?
No, I have not really looked at what the guidance has been. So if you can help me with the details.
Sure. So basically what they've come out and said is that they're looking at a market cap of 5 lakh crores by 2031. That's the first bit. Alongside a new purpose is what they're going to see, and a new brand identity. I'll get Mahima also to join in to tell us more. Mahima, if you're with us, help us with all the details that Godrej Industries has come out with so far, because that stock is locked in upper circuit.
Yes, so here basically what they've gone ahead and said is that their ambition is to reach that 5 lakh crore of market cap by 2031, and they've also gone ahead and announced and proposed a new brand identity. That's they've given a lot of details with regards to that, but I think the key important points were in terms of what they're aiming at from a long-term perspective. They're saying that the group has already delivered a compounded sales growth and profit growth of 20% CAGR over the last 5 years. and they've outlined the growth for the next phase, where they're expecting more than 15% annual sales growth, more than 20% EPS growth as a group. It also expects each business to deliver more than 18% return on equity at a steady state. What they've said is that the group intends to expand from 3 main of their businesses, that is consumer products, properties and agrovet, to 5 publicly listed companies. So that is an interesting one, because these 3 companies will be split into 5 companies is what it means, and these actions are expected to result in a combined market capitalization of 5 lakh crore over the next 5 years is what they're expecting. So overall, of course, the plan to kind of how they will be going ahead and separating these companies is still not given the detailed plan, but we'll be waiting and watching out for that. But overall, I think the ambitious growth of 5 lakh crore of market cap by 2031 is something that the street has liked, and that's why we're seeing that upper circuit on the counter.
Okay, all right, Mahima, thanks so much for getting us those details. 5 lakh crore looks pretty ambitious, all right. They've made a few strides today, Dhananjay, wouldn't you agree?
Yeah, I think it's a fairly ambitious and aspirational target the company has actually given us. I think as for this, I think they're talking about above 15% EBITDA growth and a fairly strong growth in top line as well. I think it is coming from multiple industries. It doesn't look like it will come from the consumer business, because it has got both domestic and global business. So unless they sort of do something dramatic, it's not necessarily coming from there, because the consumption space is fairly competitive. I think it must be coming significantly from the real estate business that they have. And they have been ramping up quite rapidly out there across multiple cities and areas. So I think that's where things might be coming from. Agrovet, of course, they are into the various agri input segment, but I think it is predominantly coming from the real estate business. So it appears that they have fairly aggressive plans out there. We'll see how it comes around. So let's look at the details, how it comes around. Of course, it looks to be fairly ambitious. It looks like they will be putting a lot of management bandwidth and strategic bandwidth out here.
Okay, so that's Godrej Industries. But 2 companies that we'll be talking about right now that will be reporting numbers tomorrow. First one is SBI, set to report Q4 earnings. Let's get in Shivam to understand what the street is expecting from the banking giant. The stock not really doing much in trade today. Shivam, what's the key expectation that you have from an SBI?
Well, yes, the largest PSU bank is going to report its Q4 earnings tomorrow. And starting with the key highlights that we should look into. So first one is the margins that are expected to come at nearly 3%. And also we need to see the impact of deposit repricing, how it will impact, as the 75 to 80% of the deposit repricing has already been done in Q3. So this remains a key monitorable too. The cost of funds are expected to stay stable, and the credit costs are expected to remain steady. Also, due to the elevated yields, there will be a decline in the treasury income that is expected. In terms of asset quality, it is going to be improved, and return on asset to stay stable near 1.1%. Also, in terms of advances growth, the SME and corporate segment are expected to lead the growth. Net interest income of the company is seen at 9.3% on YY basis, and the operating profit might see a downside of around 3% to 30,300 odd crores. The profit of the company is seen at 18,800 odd crores, and in terms of asset quality, the GNPA and NNPA improvement will be seen in both.
Okay, State Bank of India is something you should watch out for tomorrow, and quite a few talking points there. But let's close the loop and talk about Titan as well. Mahima with us to tell you what to expect. Mahima, a value growth potential, but the question is volume growth, right?
Yes, so Alex, surprisingly this time in the Q4 business update, they did say that they've seen volume growth as well in this quarter. So most certainly, the percentage of volume growth is something that we'll be watching out for. But I think in terms of numbers, revenue is expected to see growth of around 26% and EBITDA could rise around 34%. Profits could rise almost to 46%. and margins could remain in that 11% range of the number that they've already guided for of 11 to 12%. In terms of Q4 business update, overall consumer business has seen a growth of 46%, domestic growth at 42%. Jewelry business, a strong growth of 46%, like-for-like growth at 48%, and high single-digit buyer growth after 3 quarters of flat growth is what they've seen. Watches division overall has seen a growth of 7%, eye care a 16% growth. Emerging business is also doing fairly well. In terms of international business, North America has seen a growth of 50%, but Middle East business was impacted because of the West Asia conflict. In terms of the overall GCC business, that grew by 37%, and international business overall combined, including the mass business, has seen a growth of 156% as per their business update. But I think the key things to watch out for will be the percentage of volume growth, plus as to the outlook on margins, because they've remained in that range bound margin range of 11 to 12% for quite some time now. So whether there would be some uptick in the margins going forward or not, that's something that I'll be watching out for sure for Titan, and probably some growth guidance from here on as to, because they're sitting on a very high base, as to how growth will look forward from here. So this is the overall view of what you can expect from Titan.
Thanks, Mahima, for that. Rajesh, quick one. SBI and Titan, any strategy ahead of the earnings?
So I think Titan is looking promising. Stock is almost trading near to its important support area of 50-day moving average. We have seen some bit of corrective move ahead of this number, but I think if stocks continues to hold above 40 to 50 mark, I think we may see some pullback action from the current level. If stock at all crosses 4400, then short covering action we may see in this counter, and then upward momentum towards 45, 50, even 4600 we could see for Titan. So those who are already on the long side of trade or want to buy, keep stop loss of 42, 50. SBI is looking sideways at this juncture. Still ahead of number, there is no as such much action or positioning we are seeing on the stock prices. But on the near term chart, 1120, 1130 is the immediate supply zone. If it crosses those levels, then here we may see short covering action to play out. Stock is almost trading near to important support area. So at this juncture, 1070 needs to watch closely post number, whether it's a break or not. If it's hold, then there is a high possibility of pullback action towards 1120, 1130 zone.
Tata Steel. Okay. So that's with regards to where SBI and Titan go. A quick view, Dhananjay, in terms of where ABB is concerned. My question to you is, ABB, Swiggy, Tata Consumer, all of them will be reporting numbers as well tomorrow. Anything that comes to your radar that you like ahead of the numbers that you should be watching out for?
So I think basically the top line growth is something that we'll need to really look at. Also the margin situation, and I think mostly importantly the forward guidance is what we'll need to really look at. I think as far as the consumer space is concerned, on the retail side, I think we are seeing certain issues with respect to the same store sales growth. So that will need to be really looked at, and how companies are sort of supporting their profitability. It appears companies are expanding, especially in the retail space, by expanding stores and all. So I think that is what we'll need to really look at with respect to the retail stores. By and large, I would say that guidance will be the most important thing to really look at for in the consumer space.
All right, gentlemen, on that note, thank you so much for taking the time and for speaking to us on NDTV Profit. Just about a couple of minutes to go for the close, and we're likely ending just about at the flat line. No change for the Nifty 50 at the very least. And in fact, some bit of that is on account of the cool off in the Nifty Bank. So pull up the intraday chart in the Nifty Bank as well, and you will see that it has come off the high point of the day. That spike that you saw was not held for the Nifty Bank and not held for the Nifty 50 either. The strength in the broader markets, see, it's exactly replicable there. The strength of the broader markets, because we're ending the Midcap index at a new high, and the small cap index also with gains of over 1%. This is something of a trend that we've seen in the recent past. Remember that you had gains of about 17% for the benchmark small cap index in April and about 3 to 4% in May so far. 11 or 13% or thereabouts gains in April for the Midcap index as well. That is being built in May. But pull up the heat map for the Nifty 50 as we're drawing to a close. It's 328, and this is more or less the picture that you're going to see with HDFC Life, Bajaj Auto, and a couple of other names in the automotive pack doing particularly well. Mahindra and Mahindra up and about and doing well. Maruti Suzuki also gaining about 0.2%. Larsen and Toubro up about 0.4%. But it's even Stevens more or less between the advances and the declines on the screen. On the losing end, you have HUL and the rest of the consumption pack not doing particularly well. Auto may actually be an exception to the rule today. Tata Consultancy Services tighten ahead of results, losing ground as well. Just a few seconds to go for the close of trade, and this is the picture that you're closing at. In fact, ICICI Bank, Axis Bank closing very close to yesterday's close. So it's a lot of ground being lost perhaps through the day for some of these frontline banking counters, and so too for the Nifty Bank as well. Reliance Industries also ending in the red, just about 0.2% or so, and not lending support. So very quickly take a look at the snapshot of the contributions to the Nifty 50's move today. We're ending more or less at the flat line. Mahindra and Mahindra, Bajaj Auto, NTPC, HDFC Life on the losing end, HUL and TCS. And very quickly to close out, let's look at the sectoral picture, because you'll see defense is a pack right on top. It's gaining as much as 3.3%. You have auto that's done particularly well. And then you have energy and a couple of other smattering of sectors that have done okay. On the losing end, you have IT as well as consumer durables and FMCG. This pack under a tad bit of pressure. Now, it's been an interesting day of trade. At the very least, you can say that you've not lost ground after yesterday's piping hot rally. And the question is, how do we end this trading week? It's been a good one so far. Let's see how it ends up. But there's lots more that you will see over the course of the evening on NDTV Profit. So I'd encourage you to stay tuned. From the team that put the show together, thank you so much for watching.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. we dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype.
Good evening, you're watching Market Express with me, Shree Singh, and this is the show that gets you a snapshot of everything that has happened in today's trading session, as well as news and updates from within the country and across the globe. First things first, let's take a very quick look at the markets. Now, markets, of course, ended the day in red, with Nifty 50 struggling to end the day above 23,200, Sensex closing about 114 points lower, broader markets also outperforming benchmarks. But when you talk about the sectoral picture as well, it was IT and FMCG on the back foot, auto and energy that were actually gaining in trade. Moving on, then let's talk about Citi turning cautious and Vedanta downgrading the counter to a sell on concerns around earnings visibility and cash use. The brokerage flags heavy dependence when it comes to the zinc business and remains bearish on zinc prices. Citi also highlights a change when it comes to dividend policy, saying that the company is no longer tied to earlier payout commitments that it says could really raise uncertainty around how cash is deployed, with current market prices suggesting limited upside. And brokerages remain positive on Aptus Value Housing after its fourth quarter results, pointing to a steady growth and improving asset quality. Investec and Jefferies maintain a buy rating with target price around 315 and 365 rupees respectively, citing stable performance and controlled costs. Now, in terms of commentary coming in from Morgan Stanley, they're talking about how there's an overweight rating that they have with a higher target near 375 rupees as well. So that's something that you're looking at, supported by strong returns and attractive valuations versus peers. Moving on, then let's talk about Brigade Enterprises that posted a weak set of numbers in the fourth quarter, with pre-sales missing expectations and cash flows also under pressure. Now, the company is saying that collections remain soft while higher construction spends and overheads weigh on operating cash flows. Even as realizations improve and leasing stays strong, margins slip and profits decline sharply. Retail footfalls and hospitality continue to grow, but cash flow stress remains a key monitor going forward. Moving on, then let's talk about Kansai Nerolac that reported a strong set of numbers in the fourth quarter. Now, the stock, of course, was buzzing away in trade, 5.5% uptick coming in at close also. But in terms of the earnings fine print, it was largely led by continued recovery in decorative paints and steady demand when it comes to industrial coatings. Growth, in fact, remains healthy, and that's across new products, construction chemicals, and projects as well. While automotive demand, that's something that supported volumes really, and performance coatings stayed firm on a strong order pipeline, like I mentioned, and the company also took some selective price hikes to manage inflation pressures also going forward. Moving on then, let's talk about Bharat Forge that reported an inline set of numbers in the fourth quarter with revenue rising nearly 18% and operating performance staying strong. However, profit declines after one-time impairment charges that were linked to its electric vehicle business. Now, the company remains optimistic when it comes to FY27, guiding for somewhere close to 25% revenue growth backed by stronger exports and order execution. Moving on then, let's talk about Emami that announced an entry into the personalized beauty and personal care space also with the acquisition of a majority stake in Inknut Digital, and the company plans to buy the remaining stake over the next few years, 4.5 years to be precise, and the deal is funded entirely in cash, values the business at a moderate multiple. And in terms of this particular company, it owns digital-first brands, so you're talking about Vedix and Skincraft here. And the acquisition really strengthens the company's presence in premium data-led beauty products. Moving on then, let's talk about Meesho that delivered a strong set of numbers in the fourth quarter, 1% gain thereabout coming in on the stock as well. But when you talk about the earnings fine print, sharp revenue growth is something that you're looking at, improving contribution margins as well, and losses narrowed meaningfully as operating leverage improves, even as the company also continues to invest in tech and platform capabilities. New engines like Meesho Mall or content-led commerce continue to scale, while user activity and order momentum remain healthy. In terms of the management commentary as well, they're maintaining a strong growth focus in the near term. And moving on then, let's also talk about Hexaware that posted a strong first quarter also with sharp margin improvement and steady growth momentum, while constant currency revenue remains largely flat and profitability improves on better execution and tighter cost control. AI continues to drive deal wins with traction across large clients and headcount rising for the 11th straight quarter. Management reiterates its full-year growth and margin outlook despite ongoing macro pressure in some verticals. Moving on then, let's talk about the word coming in from brokerages that stayed positive on Paytm despite a softer fourth quarter marked by higher marketing spends as well as missing incentives. Citi, in fact, is maintaining a buy rating here with a target price close to 1,300 rupees, citing improving core payment margins and strength when it comes to the merchant and financial services. Jefferies also keeps a buy with a target price of close to 1,350 rupees here as well, saying that revenue momentum offsets the lack of UPI support. Both expect operating leverage as well as normalizing margins to support earnings. Moving on then, let's talk about Godrej Consumer that delivered an inline set of numbers, largely of course the stock was down about 5.5%. But when you talk about the earnings fine print, you're looking at a little bit of a miss coming in terms of profits, and that's something that was weighing on the stock. Growth is led by a strong India business though, especially home care, while personal care remains modest. And the company also flagged near-term margin pressure when it comes to higher raw material costs. That was partly offset by pricing and operating leverage. Brokerages, in fact, stay positive but turn a little bit cautious when it comes to margins, with Citi and Jefferies cutting targets while maintaining buy ratings. Moving on then, let's talk about Polycab shares that jumped sharply after its latest earnings. Of course, 6.5%, almost 7% uptick that you're looking at for this particular counter at the end of the trading session. But you did have positive management commentary coming in, signs of market share gains. That's something that you're looking at as well. And the company also, of course, reported strong momentum when it comes to the core cables and wires business, supported by healthy demand trends that you've seen of late when it comes to this particular company. And in terms of the commentary also coming in from the management, they're talking about how they're boosting investor confidence with the stock rallying strongly in trade as outlook remains upbeat. Moving on then, let's talk about Raymond Lifestyle that reported a strong set of numbers in the fourth quarter as revenue rises nearly 19%, driven by solid domestic demand and a stronger premium product mix. In fact, when you talk about the operating performance as well, that improved sharply while the company focuses on premiumization, wider distribution, as well as expanding its presence, and that's across European markets. Moving on then, let's talk about Craftsman Auto that reported a strong set of numbers in the fourth quarter here as well, with revenue rising 27%, profit jumping 75% on a year-on-year basis. Of course, the stock was also cheering this particular gain also coming in for this particular counter, with that 11% gain also coming in at the end of the trading session. But in terms of growth, when you talk about it, it's across the segments. So you're talking about powertrain, aluminium products, engineering segments as well. While margins continue to improve, the company also keeps its focus on global expansion after heavy investments over the past few years. Moving on then, let's get you some business news. Now, the proposed offer for sale in the National Stock Exchange could see a modest equity dilution as several public sector shareholders line up to pay stakes. And in fact, sources are telling your channel that the sale could be led by large PSU holders, including insurance and banking entities, with institutional investors also expected to participate. Now, this particular move, it's aimed at unlocking value and also broadening the shareholder base ahead of the exchange's listing plans. Moving on, then, the government is considering a merger between Shipping Corporation of India and SCI Land and Assets as part of a broader maritime expansion strategy. Now, sources are telling NDTV Profit that this particular move, in fact, could unlock over 1,000 crore rupees in cash, strengthen SCI's balance sheet, and also support fleet expansion as India pushes to reduce dependence on foreign shipping lanes. Moving on, then, let's talk about oil prices as well, because oil markets are reacting fast to diplomacy. Now, crude prices slipped sharply after reports that the US and Iran could be nearing a deal to end the war, easing fears of a prolonged supply disruption. Brent briefly fell below $100 a barrel as well before rebounding, and showing just how fragile sentiment really remains at this point in time. Equity markets, of course, cheered the possibility. But when it comes to oil, the real trigger is going to be concrete action, especially any move toward the reopening of the Strait of the Hormuz. Until then, volatility is going to be staying firmly in control. Moving on, then, let's talk about Shell as well. War-driven oil prices are delivering windfall profits for energy giants, and I'm talking about Shell that posted a better-than-expected set of first-quarter earnings, helped by surging crude and trading gains as the Iran war really choked Hormuz flows as well. And you're talking about rival BP that has already reported profits more than doubling, while Equinor also logged its strongest quarter in years. Now, with nearly 1/5 of global oil and LNG normally moving through Hormuz, the conflict has redrawn the profit map and really lifted big oil even as global energy risks still intensify. Moving on, then, let's talk about China-made electric vehicle sales that are showing resilience. Deliveries from the Shanghai plant, in fact, rose for a 6th straight month on a year-on-year basis, even as competition really heats up at home and abroad. Nearly 80,000 Model 3 and Model Y units, that's what you're talking about, that was shipped, including exports to Europe. When you're talking about volumes, though, you're looking at a dip on a month-on-month basis. But the year-on-year momentum, in fact, still is suggesting that demand is holding up, even in an increasingly crowded EV market. Moving on, then, let's talk about India's push to reduce dependence on China in electric mobility that is picking up pace. Tata Group and JSW Group are set to invest nearly $1 billion in EV and battery tech. And that's according to some reports that are suggesting this as well. And when you talk about these two big companies, they're building dedicated R&D centers to develop next-generation batteries as well as advanced EV systems, signaling a strategic shift toward homegrown capability as global supply chains turn more uncertain. Let's also talk about global shipping giant Maersk that has beaten first-quarter profit expectations as well, reinforcing its status as a bellwether for world trade. But the company struck a cautious note, though, so you should be looking at that as well, because they're warning that the US-Israel war on Iran has clouded the outlook when it comes to freight rates and costs. While the company has held on to its full-year guidance and expects global container volumes to really grow, it says that higher energy prices and disruptions when it comes to key Gulf trade lanes, that could be weighing on momentum going forward. Moving on, then, let's talk about General Motors that is recalling more than 40,000 vehicles in the United States after regulators flagged a brake safety issue. The U.S. National Highway Traffic Safety Administration says sediment found in the brake fluid could increase the risk of a crash. The recall, in fact, affects just over 40,000 vehicles, and GM has not reported any injuries linked to the issue so far. And European governments face a fresh fiscal risk as they consider measures to shield households and businesses from rising energy prices, and that's according to Fitch Ratings. In fact, a senior Fitch analyst warns that broad untargeted support could strain public finances if extended. That said, support announced so far after the Iran war remains far smaller than the massive packages rolled out during Russia's invasion of Ukraine back in 2022. And moving on to some national news now, TVK chief Vijay made a fresh visit to Raj Bhavan on Thursday, that is today, meeting Governor to also press his claim to form the next Tamil Nadu government. Now, the move follows an earlier setback, with the governor seeking concrete proof of majority support. While TVK remains the single largest party after a fractured verdict, it is still short of the 118 MLAs needed in the 234-member assembly. With swearing-in plans also stalled at this point in time, all eyes, of course, are going to be on smaller parties whose backing could really decide who finally takes charge. And amid intense post-poll churning in Tamil Nadu, the leaders of the VCK and left parties met DMK chief M.K. Stalin today to also discuss the support proposal extended by Vijay's TVK. Sources, in fact, or reports, in fact, are saying that Stalin told alliance partners that the decision was entirely theirs, leaving them free to weigh their political interests. The meeting underlines the fluid nature of alliances as parties really reassess the next move in the evolving government formation scenario at this point in time. And on to the national capital then, where Delhi police have busted a major counterfeit drug racket, arresting a 4-member syndicate accused of making fake life-saving medicines. The gang allegedly supplied spurious cancer as well as liver disease drugs across eastern and northeastern India. Investigators are saying that the mastermind Manoj Kumar Mishra turned to fake pharma after his pandemic-era business collapsed. The racket operated under the front company Unitel Pharma, putting critically ill patients at grave risk. And marking the anniversary of Operation Sindoor, Jammu and Kashmir Governor as well, Manoj Sinha, paid tribute to the courage and sacrifice of India's armed forces. In fact, he described the operation as a powerful reminder of the nation's unwavering resolve to defend its sovereignty, but also protect innocent lives. According to an official statement, Sinha said that Operation Sindoor showcased the extraordinary bravery and professionalism of the men and women in uniform who responded decisively after terrorists targeted civilians in Pahalgam, sending a clear message that threats to peace will be met with firm action. And on to some international news, then the United States and Iran appear to be inching toward a limited temporary agreement to halt the war. Reports, in fact, are saying that the talks are centered on a short-term one-page memorandum that is aimed at stopping the fighting, not resolving deep disputes, though. Iran is reviewing a US proposal with follow-up talks expected, but major sticking points, in fact, remain at this point in time. Crucially, the draft framework leaves out Washington's key demands on Iran's nuclear program, underlining that any deal at this stage would be only at an interim pause and not a lasting peace, in fact. Moving on then, let's talk about President Trump saying that the Iran war could end quickly as Tehran reviews a US peace proposal aimed at formally halting the conflict, but optimism in Washington is being met with skepticism in Tehran, where lawmakers dismiss the offer as an American wish list, and the proposal would leave critical issues unresolved, and that's something that's quite the concern, including Iran's nuclear program and reopening the Strait of Hormuz. While markets have reacted to some of those deal headlines, officials on both sides admit major gaps remain, and that's something that we'll see unfold in this week itself. Moving on then, France is stepping in as airlines buckle under a jet fuel shock triggered by the Middle East conflict. The government is preparing emergency support from tax deferrals and social security relief to operational flexibility after carriers really warned that fuel shortages could really hit within weeks, with Europe also sourcing nearly 3/4 of its jet fuel from the Middle East. Officials are racing to avert widespread flight disruptions this summer as energy volatility spills straight into the aviation sector. Moving on then, let's talk about Russia, that says that its air defenses shot down dozens of drones targeting Moscow just days ahead of the May 9th Victory Day commemorations as well. City officials are saying that Ukrainian drones have been intercepted repeatedly as security tightens in the capital as well. Moscow has warned that it will respond forcefully to any attacks during the celebrations, raising fears of further escalation as the symbolic parade approaches as well. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Ignition. Liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.